What's up, guys? Good morning. I'm here. Sorry, I'm just doing the last little bit of things here. Let me fix OBS. I've been up since 4:30 this morning. I got everything I needed to get done this morning at like 5:30, 6 o'clock, and here I am still running around. But it's all good, It's all good. Um, Once you think you've done everything, there's always something else to do, right? Where are we at here? Where are we at? Activate. Bada bing, bada boom. Good morning. How you guys doing today? All right. Um, Retail sales coming out here in about an hour. All right. Excuse my voice. Um, Good morning. Thank you guys for joining us. I'm going to get into a session real quick. Um, what I'm going to do is I'm going to get into a risk management session that I want you guys to attempt to use today. All right. I'm going to go through it in great detail. It takes 2 minutes. If you don't use it, you need to use it, because this is why you guys are, maybe not you in particular, but I guarantee you 98% of you do not implement it. You are consistently not growing your equity curve, right? What do I say every day? We have a number. Our job is to make that number bigger. That's it. Don't matter how you do it. You got a number. Your job is to make that number bigger. How do you do that? I get asked all the time. What's my position size? How much do I make? This, that. Okay. If you ask me what my position size is, let me take this off because you guys can probably hear me twice. Look at this. We got our answers for that yesterday. We'll get into this stuff. So I get asked all the time. All right. These questions that it's not even me. I see them asked online to other people, and it tells me that you guys have no idea what it is you're doing. Let's go right here to the notes. I'm going to give you guys where are my notes at here? I'm going to give you guys a quick write-up, and I want you guys to implement this. All right? I want you guys to implement this, but first, if you could, not if you could, what do you mean if you could? Hit that fucking like button. What are you doing? Hit the like button, subscribe if you haven't already subscribed. We're going to 1,000 subscribers with or without you. By the way, we're going to 1,000 subscribers with or without you. I want to hurry this up because I got a lot of stuff I want to do. I'm going to go over my trade ideas. I'm going to show you guys where I plan on making my money this week in the markets. All right. We're going to go through that game plan. We're going to talk the bank term funding program, which we got answers on yesterday from Fed Bar. And what does that mean going forward? All right. We got our answers yesterday. I was going to do a watch list last night, but I didn't. It got a little late, again, with trying to set up thumbnails and just, getting stuff ready. I'm like, I'll just talk about it in the morning, So let's do this really quickly. You want to go to, where are notes? I may already have this saved. Let's see here. Is there a notepad? Let's see here. Right here. There it is. Bada bing, bada boom. All right. So what I want you guys to do is to start implementing this. So, for instance, you could have used this for Snapchat, all right? If you guys do not know how to properly manage risk and properly run money, if you're consistently losing money and you gave up on the markets, it's because you don't know this. You don't know you haven't been taught, and it's okay. So when anybody asks you, or you yourself, all right, I don't care. Now listen. You can go to anywhere you want to go to, like any institutional fund manager. Okay, if you don't have $100,000 in your account, it's a small account. So when you hear people say small account challenge this, if you don't have $100,000 in your account, it's already a small account. Okay. It doesn't matter whether I have it, whether I don't have it, whether you have it or don't have it. It doesn't matter how much money you have or don't have, because if you have less than 100,000 in proprietaries in the institutional standards, a 100,000 account is a small account. So throw all that stuff out the window. If you have $1,000, I talk about this equity curve all the time. Okay, because you guys may have 5, 10, 20. I don't know. Maybe you got 50,000. Maybe you got $500,000. Maybe you do have $1 million account. It wouldn't surprise me. In accordance to what you have, you need to think about what it is you're doing. Because if you're a person that likes to trade Tesla and you only got $1,000, chances are you're just constantly trying to just reload money with your job and you're not getting nowhere. All right, you're not getting that equity curve up. I can't tell you what to do. I am not a fiduciary. I am not a money man. I am not, legally allowed to tell you what to do, nor do I want to. All right, but what I do want to do is to help you save money and stop losing. All right, first off, you guys need to learn how to read a chart. What did I say last week? I came in last week and I told you guys exactly what my thoughts were in the markets on Sunday. I said Monday, I want to look for a day where we get, we start working this market upwards. I said Tuesday, Wednesday, probably a flat day, not much going on. Look for Thursday and the Friday, with the data sets that we get, to move the markets. Monday, I expected a nice day. We got that. Tuesday, Wednesday, somewhat flat in the overall indexes. We got that. Thursday and Friday, we moved. Why is that? Because data points coming into the week, first month of the year, the probability set up for that to happen. Yes, it did happen. But that does not mean you continue to do it, because what's going to happen is, just because I came in here and I said Monday, what happened? Wham, bam, thank you, ma'am. Tuesday, Wednesday, inside out day, not bad of a day on Wednesday. Nice volatility Thursday, flat Friday. Close. But it doesn't matter, because if you expect yourself to think you're good enough to dictate what the markets are going to do throughout the week, you're only going to let yourself down on the days that it doesn't do it. Okay? Because that's like saying you know what the news is going to be. Now, I say this because if you don't know how to read a chart, okay, at least this is going to help you with managing your money. All right? This is going to help you to lose less and to make more when you're right. Okay? Because I do this a lot. If I were to chart your trades out, okay, I would expect to be able to plot these trades out just like this, okay? All right? I can get rid of this. I want to do this really quickly. I know I'm going over stuff, and I'm going to get into this math, and you guys need to do it if you don't do it. All right? If you don't do it, you got to start to do it, because this is the only way you're going to make money in the markets. All right, this is not for one particular person. This is for anyone who needs the help. This is why I do this. If you gave me your account and I went to go plot this on a chart with your wins and your losses, do you think I would see this? And the losses are on the bottom, wins are on the top. Okay? Wins. And you're only doing yourself a disservice if you can't read a chart and all that stuff. You're really in for a hurt, and understanding sentiment, but this will at least help save you money. I promise. Wins. Let's get rid of this. Come on. Losses. Yep. Come on. Bang. Bang. Again, I want to hurry up because I want to give you guys some of my trade ideas. Did the camera go? We've been doing really good with this. Funny how it acts up today. It's all good. So, if you were to plot your trades, would you? And you know what? Go do it. And listen, if you're too lazy to do this, you may want to think about doing something different. If you're not going to take the time to do these things, you need to do something different, because this is the work. All right, recording yourself, going back over your trades. Do you even go back over your trades? You got to see what were you thinking then towards what happened? Where did you go wrong? Watch yourself, mentally. Or see where you are mentally is what I mean. I'm sorry. So, your trades should plot out something like this, okay? You should be pretty damn close to this line here, okay? That's enough losing trades, okay? Right there. You know what? And then maybe, you hit a couple max losses here. All right? Bang. These are your wins. Right? They should be staggered just like this. Farther away from the line Okay. Sorry. This is what your chart should look like. What do we have here? All right. Looks like a mountain range, doesn't it? Okay. Listen, I did not trade yesterday. I did not see anything that I liked. Well, we all know that it's not that. There was a trade that they took from us yesterday. All right. That's your wins. Looks like a mountaintop. All right. Here's your losses. Nice, consolidated, in, and very close to that line. This is how you make more when you're right than when you're wrong. That's number one. You still need to know the math behind it. And then maybe you hit your stop loss. Right? Maybe you hit a couple stop losses, your max loss. Right? You got to have it. This is a winning formula right there. All right, let me make sure that I can see what you guys have going on. Again, I thank you guys for joining us. Please, if you could subscribe, if you haven't already subscribed, hit that like button if you haven't already done so. Let's get into the math. So if you say, "Oh, how much do you trade with this and that?" I'm going to give you guys two scenarios right here. If you don't know this, learn it, know it, take a picture of it. This is the only way that you are going to be able to make it and get that number bigger consistently over time. Okay? Two scenarios. All right? Two scenarios. And this is something you're going to have to do, which is understanding what you're comfortable with losing if you are wrong. Does not mean that you have to completely lose that stop, go to your stop loss. That doesn't mean you have to do that. All right? I got two scenarios right here. We'll just say this is UNH, and we'll say this is a, like Snapchat or something, which I traded already this morning. Green trade already for the day. I got a $500 stock with a stop loss at $495. So that is a $5 stop loss from the entry. I get long at $500. If the stock goes to $495, I stop out. Maybe I don't need it to go to $595. Maybe it goes to $498. And that is enough to let me know. Doesn't matter. The math will still work itself out if you stick to this. I have a $500 stock with a $5 stop loss at $495. How many shares? And my risk is $100. I'm risking $100. How many shares do I have to buy to risk $100 if that stock goes from 500 to 495? The answer is right here. I would buy 20 shares. What's the total amount on that trade? That is a $10,000 position with a risk stop loss, with a risk management of $100. I've spent $10,000. I bought UNH, United Healthcare, at $500. It goes to $495. I said, okay, I'm wrong. It goes to $498. Maybe I let it go to $495. I don't want to get this mixed up with my ADHD. It goes to $495. I stop out. I lose $100 on a $10,000 position. Now I got Snapchat. That stock is $10. The stop loss on that is $1. How many shares do I have to buy so that if I get stopped out, my daily stop loss is hit? I'm going to risk $100. How many shares do I have to buy? I got to buy 100 shares, and that's going to cost me $1,000, and I'm still risking $100. So here are two scenarios where one is a $10,000 position, the other is a $1,000 position, both risking the same amount. Okay, so this is what I wanted to bring up, just a quick lesson for the morning. Implement this today or this week. Okay, it's not hard. Figure out whatever your stop loss is. This is why I used $100. Okay, this is why I used $100. If your stop loss is 50, now listen, if you have a $1,000 account and you're going to lose, and you're going to say that your stop loss is $100, you may want to rethink your whole game plan there. Okay, if you got a $5,000 account and you want to risk $100, that's probably more like a little bit more lenient. All right, doesn't mean you have to lose the 100. You know, it all depends on you, right? First, you need to learn charts. You need to learn how, you need to learn how the market functions first, and then implement this. Okay, because sticking to your stop loss, because sticking to the stop loss, it's important because it's going to allow this chart right here. Okay, it's going to allow for those winners. It's going to allow you to get ahead. You could have 2-3 losses and takes one trade to keep you green. So if you're consistently losing $300, $500, and then one day you make 200, and then you lose 50, 75, and then you make 100, and then you're losing 250. Okay, you're going backwards. All right, you don't know how to run money. Stop. Don't waste. Listen, just take your money. Just go do something else. Because if you don't understand that and cannot have any type of psychological factor over managing money and running money in the markets, you will lose, and you will always consistently lose. Okay, you need to give yourself a fighting chance. I'll post it again one more time. Okay, we have a $500 stock. The stop loss is at $495. That's a $5 stop loss. How many shares do I need to buy? You want to do this in options? Fine. How many contracts do you have to buy before that contract gets to your stop loss? You don't know how to read delta, gamma, theta, and all that fun stuff? Well, you got to learn it. You got to do the work. Okay? If you don't know how to do it and you would like me to teach you, because I implement it every day, I know exactly how much I'm going to lose if that contract goes against me by a half hour, an hour, 6 hours, whatever. All right. So take this year to take that rookie shit that you're doing and throw it in the trash can and change your traits. You got to change. You got to change, or you're never going to make it doing this stuff. All right. It may be fun to some people, but it can be stressful. You got to take it serious. So those are the two things that I wanted to go over before we go into the watch list and before we go into the trades of, where I plan on making my money today. All right. Implementing the correct stop loss is important, or you have to. Okay. It's not that it's not. I'm sorry. I'm a little sidetracked right here, but this is what your chart should look like. Nice and tight losses, nice and small, and your winners. Because as the stock extends, what are we doing? As the stock is extending, we're taking profits on those extensions. We know that it's going to pull back. Stocks don't move straight up and straight down. Okay, you need them to breathe a little bit. So we have major levels and minor levels. Okay, if you don't know how to find them, reach out to me, guys. I can help you with this stuff. All right, because I have a trade that I'm getting ready to put on. I hope that, I remember. No, I do remember it. That I'll probably be in this thing for, I don't know, maybe a week. Or I'm sorry, maybe 2 weeks. Maybe I try to get in it today and maybe I get stopped out. I don't know. But I do know that I do see something that I plan on taking here in the next few days coming up. I can't believe that. Oh my gosh. Just give me 1 second, guys. I do apologize. I tried to do this, and I hope it was helpful for someone. I hope someone found some good use out of this. All right, because I know for a fact, you guys aren't doing this. I would be safe to say that 90% of the people that trade do not do these things. All right, and you have to. You have to. All right, because you're wondering why you think the market's a scam. You're wondering why everyone's making money but you. All right, do it the correct way. And again, I have to say this because this is more important. If you have a $1,000 account and you're going to risk $100 per trade, you may want to rethink what it is you're doing, because it's only going to take you close to 8 before you start sweating and you're out of money. All right. Yes, it should take you 1 trade to get green. That is the objective. You should be able to take 2 to 3 losses and be green on 1 trade. You have to. There's no other way around it. And using that formula, you will be able to do just that. So if you're trading Tesla with a $1,000 account, or you're trying to trade Nvidia, All right, please just stay away from it. Focus on getting the funds up. That's the first and foremost thing. Go. There are plenty of names that are at a smaller price point that will allow you to get nice percentage gains. Snapchat. All right, Ford, nice, not so volatile stock, and we called this out. Look at that. Look at that base. Pulls down, breaks, retests that base, gets short, bang. Look at that. Putting in a double bottom now. All right. That was a really nice trade there, and I forgot about that. That's frustrating. That was one of the. I know I looked at that last week. I know I did, and it already made the move. So if you guys have any questions, we'll get right into it. I wanted to cover that first because I think it's important. All right, I think it's really important. All right, if you want to risk $50 per trade, all right, understand how much you're going to lose if you're wrong so that you can help yourself when you're right. All right, so that you can make more when you're right. I'll post it one more time, and then I'm going to take it off. All right, 2 scenarios, risking the same amount. Okay, one's a $10,000 position, the other's a $1,000 position, still risking $100. All right. Got to, guys. Got to. If you guys could, hit the like button, subscribe. We are going to 1,000 subscribers. Hop on the bus. Come on, come join us. I was watching a thing with Danielle DiMartino yesterday, and I'm asking you guys to help get me to 1,000 subscribers so that I can reach out to her, or at least feel comfortable when I reach out to people like that. I tell you what, she was spitting dimes last night, right? Spitting dimes last night. So we talked about coming into 2024, like my year end, or my yearly like review, whatever you want to call it. What are my thoughts for 2024? I was unsure because I didn't know whether the Fed was going to continue with this bank term lending program or not. All right. Now, why do I say that? Because we are still at 5.5% on the interest rate side, on the Fed, on interest rates. Okay, on Fed fund side, rates are still at Fed funds rate still 5.5%. I feel like the market is pricing in 6 cuts because they know that there are still issues in the banking system. All right. And if the Fed plans on not continuing the bank term lending program, which has helped these banks tremendously, which is another, point to understanding sentiment and how to do these things. Because if you did not know that the banks were getting liquidity or being provided liquidity if needed, right? That's like trying to go short during COVID. Okay? So understanding that the banks are fine and they're okay. Dude, my phone's writing down everything that I'm freaking saying, man. What the flip? Sorry, guys and gals. I don't know. My phone's just like copying everything. It's just writing everything that I'm saying. It's doing it by itself. So, JP Morgan, okay, for instance, which is actually one of my trade ideas this week. We've been looking at this for 3 weeks now. All right, we've been looking at this for 3 weeks now. I was like, that better not be JP Morgan. I know it's not. All right, so kind of setting up like Ford. But look at this. Look at that. Look at this run last year, guys. Look at this. Right? It started. Bang. Like, what a run. What a run, right? Now I say that because understanding like when some of the things that are going on, like the bank term lending program, and it's only a little bit, right? It's only X amount. I think it's like 80 billion, I think. Something like that. Oh my gosh. it's still liquidity at the end of the day, and it's still a safety net for these banks. Um, there was a long opportunity, right? There was a long opportunity there. And knowing that, right? How many people I seen on Twitter yesterday talking about shorting banks and that the banks are going down? The banks ain't going nowhere, bud. The banks ain't going nowhere, at least right now. All right, they have the Fed at their back right now. So if there are any issues, the Fed will step in and resolve them. So let's go back to what I was saying. Let's go back to what I was saying, which was we are still at 5.5% on in interest rates on the Fed funds side, on the 2-year side. 2 years a little bit lower, but Fed funds rates are still at 5.5%. If these banks start to run low on deposits, they're still going to be down on their bonds. So if the Fed does not decide, hey, let's cut rates in case we run into another banking issue, which we got the answers yesterday, all right, maybe they're going to let some of them fail. I don't know. But I tell you right now, JP Morgan and what's his name from Bank of America are going to get pretty tired of buying up all this debt. And they have laws working against them here in the near future that they're not going to want to take on this debt. You start getting more banks to, you start having more trouble in the banking system. We seen yesterday with PNC, they were down 2 to 3%, right? Because of they were net down 2 to 3% in net income. So I gotta fix my phone, guys. Give me 1 second.
Absolutely. And that's why, for example, charging infrastructure, making charging infrastructure available to that urban dweller.
I have no idea why my phone is doing this. Like, it's trying to connect to my AirPods. My phone is going nuts right now, guys. Give me 1 minute. Let me make sure. AirPods, okay. Just give me 2 seconds. And we're going to go right into the game plan. So, we got yesterday that FedBar had pretty much said they're not going to continue with the program.
Time is low demand time.
Right.
We'll find you an open charger. The data needs to be good. The charger needs to be not broken.
Right.
And we'll find you what the price is, et cetera. So there's a whole system that you have to build in order to enable all this to come together. But again, there's an infrastructure that we're depending on, and governments need to keep leaning into that infrastructure.
Let me ask you about a separate topic that came up in the news while we've been at Davos. Drizzly, an acquisition that you made, an alcohol delivery company, effectively. You shut it down. You spent.
All right, and just like that, we're good to go. And now. All right, so I wanted to bring that up because yesterday FedBar had brought up that they were not going to gave us insight on that they were not going to extend this. So right here, Fed Vice Chair Michael Barr says that the bank term funding program worked as intended. I'm logging back in to my broker. I had I was. Snapchat was moving this morning, and all right. So my phone's already dying, guys. I apologize. I want to get this done quick because I want to go through some of these trades. If you guys are just joining us, thank you for joining us. If you could hit that like, subscribe. We're going to 1,000 subscribers this year. Get to 1,000 subscribers, you will not hear me ask for any more. Again, I'm trying to get to 1,000 subscribers so I can reach out or feel comfortable when I reach out to bring some institutional traders on here. So I was bringing up Danielle DiMartino, who is one of the women that I would like to bring on here. All right, I'd like to ask her some questions, and I'd like to pick her brain a little bit about some of the things that are coming up. She was a Fed chair member also, if you guys don't know. She was a Fed member for Dallas. She was a Dallas Fed member. So, anyway, Fed Barr, Michael Barr says that the Bank Term Funding Program worked as intended. This story has been updated to remove incorrect details about type of loan rate Barr was discussing when banks could refinance under the Bank Term Funding Program. The Federal Reserve has no plans. The Federal Reserve has no plans to extend an emergency loan program it launched last year to bolster the capacity of banking system in the wake of collapse of Silicon Valley, First Republic, SVB, well, which would be SVB Silicon Valley, but what was the silver one? The Silvergate, something like that. Silver something. They collapsed too. They were a crypto thing. They were publicly traded. They all had to raise money. Got sold off. Why is a bank raising money? Yeah, the bank shouldn't have to raise money. So, Bank Term Funding Program will expire March 11th as it reaches its original 1-year time limit. Fed Vice Chair Supervision Michael Barr said at the panel appearance on Tuesday, which was yesterday. I know you guys heard him, heard some of the stuff that he was talking about. The program worked as intended. It dramatically reduced stress in the system very quickly. That stress is not gone. Okay? You're talking about 1 month away from them getting rid of that. Now, it may take 6 months. Right? It may take 6 months. It may take 3 months. Right? It may take a year. All right? It may not happen at all. I'm not saying that these things are going to happen, but I'm going to tell you right now, if rates are still at 5.5, if rates are still at 5, and they don't get these rates down to a balanced area where when banks have to find money for depositors, they have to start selling off assets. And do they start to sell those assets off at a loss? Do they start to sell those assets at a loss? That was this whole issue, was they were low on deposits. They needed to raise money because what happens? What happens is deposits leave. Money leaves because it goes to money market accounts. The market may be paying more. I mean, the market's up 30% and you got your 5%, 5.5% because you wanted to be in bonds because you thought it was a good idea to be risk-free in interest bonds. No, it is a good idea, but that's neither here nor there. So this is expiring per Barr. What does that mean for rates? Or if rates are still not down and there starts to be issues again, okay, do they dramatically cut rates? Like, is that the reason why they cut rates? Like, this is what I'm saying, is that this is the issue at hand. All right, even going into all the real estate issues that are out there. All right, so this is why the market's pricing in 6 cuts, is because they're telling the Fed this is around the level where the market sees that you need to get to so that there is stability in the banking system. If you keep rates up at 5, 5.5, okay, keep them there. Slowly work them down, and then you're going to have the FDIC taking over banks again, Citizen Republic, or First Republic, Citizens Bank, Silicon Valley, right? You're going to go through that whole thing you just went through 11 months ago, 12 months ago. So, 10 months ago, really. So, that's that. Let's get right into it, guys. If you guys could do us a solid, hit that like button, subscribe if you haven't already done so. Let's go right into it. And I'll give you guys some of my ideas, and we'll go through some of the news this morning and some of the movers. So, early this morning, Lululemon, Snapchat were some of the ones that I was watching pre-market. Excuse me. You have Amazon news, so there is a lot. So, let's go to futures real quick. All right, we'll go to the ES. All right, let's go to ES. You know what? I'll go right there. All right, so I was saying the other day that we could start to see if the market pulls back and just consolidates up here, that you're going to start to see this 50-day moving average, and it's in a good area right now, going to start peeking its head up a little bit faster and faster as the days close. All right, so I would personally like to see a pullback. All right, what I'm looking at here is a pullback in the S&Ps, possibly in the near term, not this week, maybe next week, 2 weeks from now. It's just going to be a... So that we get this 50-day moving average right up here around this pivot high at 470. All right, this is like what I'm looking for in the next few weeks, is if we can get that 50-day up here at this support level, which is it's pretty much there now. And I want to start seeing the market pull back to it and solidify this resistance that we have not made support. All right, that's at 465 on futures for the ES. All right, I want to see this market pull back, you know, find support off that 50-day, off that prior resistance here, and, you know, hold itself, get some more buyers in here, and try to extend this market higher. All right, Europe, Germany, they have all made new highs, but they are pulling back. The United States is lagging. All right, the U.S. markets are lagging. So what I'm going to look for today is, which we've already recovered at yesterday's low. So we had a down day yesterday, and we're coming in, as of right now, with the gap down. All right, we're coming in with a gap down on the S&Ps. So I want to look for yesterday's close, yesterday's low, which it's already recovered, it looks like. It looks like it's struggling here. Yeah, it tried to recover it. All right, so I'm going to stick with that. I'm going to stick with this level here at 480? Roughly 478. All right, 478. And I want to see if we can start to pull back down to 476. All right. I want to start working back to last Friday's close. All right, right around this area, 473. Let me give you an hourly chart. All right. The Qs look a lot better. All right, right here. Test these lows right here. All right, right there is your support. 475. That's what I'm looking for. All right, I would like to be able to get a bounce a little bit higher and then take the short. Okay, what do I mean by that? I would like to be able to short this market if I'm going to play futures. Again, I said it Sunday. I do not expect the indexes like the SPY and the Qs to like really be volatile and move all over the place. All right, I don't expect it. Okay, doesn't mean that they won't. But unless we get some type of news, you know, I think the market's breathing right here, right? You got to think about that. We've been moving. Look at this. This is a nice move here, nice move up. The markets have moved a lot. And it's like the market's going to take a breather, okay? Because we have major earnings next week. We're going to start getting into the big boys. You have some economic data next week. You know, we get our first look into semiconductors tomorrow. So I feel like we're just going to float in this area, right? We get a bounce back today to like 480. I'm going to look for that to be resistance if we can get there. All right, if we get there, or yesterday's low. Okay, 480 to 478. All right, and I'm going to look for that pullback. My trade would have to be the long off of 474 unless we are up at 480. Okay, that's the only way I'm trading this market, is if we get a bounce to yesterday's close and we reject yesterday's close at 480, get short at 480, take that down to 460. That's a 200-point move in the futures. All right, let's just go right to the SPY, and it'll probably look a little bit easier on the mind there. All right. So right now it looks like we're holding yesterday's low. Looks like we're trying to hold it. So that'll be 473. I want to see if we can bounce on the SPY to 474. If it gives me 475, that would be awesome. But if we don't get 474, I won't really care. Again, I told you guys earlier in the week that I didn't plan on trading the indexes. I didn't plan on trading it because I didn't think that there was enough to get these markets moving. All right, I feel like there's a lot ahead of us that I felt like the markets were going to just breathe a little, and get prepared for the moves on those earnings. Hold on. I'll let my cat in. Yeah, she don't want to come in. She's just playing with me. Well, she's going to have to wait because I got to work. So, all right, that's my plan here. Let's see if the markets hold up. All right, you do have this previous base here. All right, this previous little, like, this is your middle. This is like the line in the sand, right? This is your middle line. This is going to be 473. 473 holds, and you cannot break it. All right? Or if the market starts to go up from here, it's 830. And on the open, you find yourself around, you know, the close, roughly a little bit maybe below yesterday's close. Look for that pullback into 473. Look for the long. I'm not going to. I may not, but I don't think I'm not going to trade these indexes. Look for the long off of 473. Take that, you know, it's a 3-point move to 476. That could be a nice move. All right. So what I'm saying is right here is what I would be looking for. All right, this dotted line. I'll show this to you guys right here. So look, if we start to, again, this is an hourly chart. It's 8:30. I got to hurry up. Doesn't look like it's wanting to hold. I know futures already broke this level. So, all right, two things. If you find ourselves that we break this level before the close, all right, it pulls back. Look for the bounce into yesterday's close or yesterday's low and see if you get that rejection here at 473 and then look to take that down to like 470, 472, which really it would be like right here. All right, 471.50. Okay, this is the range. This is what I'm going to look for. It's exactly what I'm going to look for, guys, right there. That's the range. I don't think the markets go too crazy unless, listen, unless retail sales just come out and retail sales shit the bed, then that's a reason for the markets to move. So that's what I'm looking for. Either this pullback, you get that bounce into yesterday's low, this 473, take the short at 473, take your profits as you get down to 471 because you will have support down here at 471. All right, this is a major level here that I do not think you're going to break. All right, so the 470 50 days movement. Well, I don't. She just. All right, I just shut the door. She's just going to have to whine. She has everything she needs. All right, so that's the plan for the SPY. The Qs look a little bit cleaner. All right, the Qs look a little bit cleaner if you want to try to trade it. Guys, listen, days like this, unless like retail sales, unless you have a reason to trade these indexes, know when they're tradable and when they're not. Okay? I didn't trade yesterday. I didn't put anything on. I like JP Morgan. I never got the opportunity because they took the trade from us early pre-market. The Qs, all right, just about same thing. If you don't do this already, start trying to find. Okay, so look, the Qs are already past yesterday's low, and they're working up to yesterday's close, trying to. So let's see if the SPY holds where it is. This was the other move that I was looking for out of the SPY. All right, this was the other move here. And I'll show you right here, right? We start to hold this. Let me get rid of this. This was the other move that I was talking about right here, right? You see us start to bounce, right? And let's say we open up like right here. All right, we open up at like 473.85. Look for that pullback off of 473 right off the bell. Get that pullback into 472.95 area. See, it's going to break, right? Because the ES has already broken it. and then look for the long to get up to like 475 off of 473. That's a 2-point move. All right, I don't think you're going to get anything crazy out of the markets today unless we get a surprise. All right, so 6 minutes until retail sales. So JP Morgan's been on the list for 3 weeks now. JP Morgan tried to break out and hold its highs. Okay, if you guys see here on a daily chart, you're going to start to see a few things. One, it was starting to put in some bearish sentiment. Okay, you can see here each time the JP Morgan had made a high. Here's your high. All right, you guys probably can't see it. I don't know, maybe you can now. All right, you can see here. Here's your high. There's a new high, and what we have here is some divergence. All right, the stock making a new high, RSI getting weak. Right, it's making new highs, but it's weaker. So yesterday we said let's look for the bounce higher, the bounce into the trade line, the daily trade line, 9 EMA, this yellow line right here. All right, it's getting ready to cross over the down through the 20-day moving average. So what I'm going to look for is if we start to bump into resistance and get short at 169. 169 to 170, 169.50. I'm going to, as soon as I can find OBS, I'm going to tell you exactly where I'm looking to get short on JP Morgan. All right? Because I know that the camera had messed up. So, all right, so looking for 169 as the entry point, and that's going to be Friday's close. That's going to be that earnings day of last week. All right, and it's gapping down a bit, which is all right. It may take a little bit. Listen, if I do not get 169 or see even yesterday's close, like I want this little gap filled, and I think we get it today. I want 169. If we don't get 169, I am not short. Okay? I am not short JP Morgan. All right? I'm going to let it get up there. It may try to test like 169.40, 169.50. All right? Friday's low. This whole area right here. This is going to be my stop loss. Just so you guys know. I'm going to give it. Really, you need to give it there. That's what you need to give it right there. That whole box. That whole box is your stop loss. And where's your win going to be? All right. What is this? This is 0.83%, just under 1%. And what is this to the downside? That's 3.5%. That's a 3 to 1. But in profit terms, it's a little bit better than that. That was percentage wise. All right, I'm looking for a 3% move. I'm going to give it about 0.75%. All right, because this is still resistance. Like the real resistance is here at 170.50. All right, 170.50 is that resistance level. So, that's what I'm watching for. All right, I'm watching for JP Morgan. I'm still waiting for the bounce. All right, still waiting for the bounce. All right. We have a few other ideas on deck. Let's see here. So yeah, 169. Write that down. 169. Stop loss 171. 170.50. Now, question is, where do we take profits? Okay, where are we going to take profits? Now I'm going to try to hold this trade. All right, I'm going to try to hold this trade, but all right. And we're going to look at Tesla. We're going to look at a few other names. We have retail sales coming out. So, let's see. Is this going to be it? These are what we call minor levels, okay? So let's say you buy 10 contracts. All right, 10 contracts. If we're able to get 169. All right, what I'm going to do is when this thing opens up, I'm going to look on the daily chart. All right, which will be over here. All right, in this screen. And I want to see where this trade line opens up at. Okay, because this trade line may meet us like right here. It may curl itself down to like this area depending on where we open up at. Again, we have retail sales. The market is going to move a little bit. All right. I'm looking to get into that, get that short. So, we get that 169 entry, 169.50 area. All right. I'm going to take pieces off at 168. All right. We're going to extend it, right? It's going to pull back. It'll bounce off of 168, put in a lower high, and then you'll look for that second break of 168. Okay, something like this, right? Something like this if we get it. Okay, I would like to be able to get this, right? Okay, we get it up here. We're up at 169. All right, so here off the open, you're looking for a bounce. Let me get rid of this. Because you know the stock has to get there. So I don't need to put all this stuff. Alright. I'm going to look for the short up here. It pulls back into 168. We're going to take profits on that extension. It's going to bounce, put in a lower high, like 168.70-ish. And then we look for the break. It breaks it. Hits this previous resistance level, pre-market. It's going to bounce. It'll probably hang around VWAP, and then you'll get, you'll get your drop, right? And then bang, right? Something like that. It's going to take a few days. This thing just doesn't move like that. It's not that volatile, and it's not like Tesla. So, all right, that's what I'm going to look for. I'm just going to take profits at each target. Final take profit will be down there. Come on. This takes me too long. I'm trying to give you guys an understanding of what it is that I'm looking for. All right, my final take profit, man, it's got to be the 50-day moving average down here to 162. All right, that low 160 area. Matter of fact, we're going to call it right now at like, that's a pretty clear area. All right, retail sales just came out and my stuff is frozen. Let's see here. Let's go to the SPY. It's up 0.6. It's not really going to move, guys. I didn't think it would. All right, so we can get busy with this stuff. All right, retail sales 0.06 versus a 0.3. It came in better than expected. I mean, it was Christmas. This is for December. What did I say, guys? That export prices down 0.9%. Import prices flat. Retail sales ex autos month over month 0.4. Staking 0.2. Export prices year over year minus 3.2. That's pretty good. Import prices year over year 1.6. Expecting, or previously 1.8. It's pretty good data for the year over year. All right, month over month. I mean, it's up. It's December. It's Christmas time. I mean, you're coming into the New Year's. You're talking Thanksgiving, coming out of Thanksgiving, going right into the holidays. Like you can expect it to be up. All right. Industrial production is coming out today, which is going to be, which is a big one. Industrial production, retail sales, non-farm payroll is the second equation to GDP, guys. If you don't know the first one's obviously the obvious 2 negative quarters of GDP. All right. Let's get into it. So Tesla made a nice move yesterday. We called out the upside move in Tesla yesterday, and it was just a relief bounce, right? Getting up to that 225 area where we said 225, we'd like to get in short. So looks like Tesla's going to break. Okay, so here's my plan for Tesla, it's going to be Tesla 216. If we can get a bounce back into 216 and reject it, I'm going to take the short on Tesla. Let's go to this right here. All right, and we are going to look for, let's go here. All right, we're going to look for this previous support level of 200. I want to get Tesla down to 200. All right, this might be a good time to get into Tesla because of the short week that we have. All right, so I will be looking for 200. Yes, right there, guys. 199.59 is where I have my support level. We have a gap down here, just so you're aware. There is a gap fill here on Tesla. All right there at that gray box. It starts at 276, 275, goes into 204. All right, so that gray box is where I'm going to look to get Tesla down to. All right, so Tesla, it may not give it to us. Let's see if Tesla holds here. All right, see if Tesla holds here. These dotted lines are going to be my shorts because I can give it a little bit. All right, if we break this, I want to look for that test, that pullback. You know, honestly, I would like to have this 217, 218 because I feel like that's where the 100 or the 50-day moving average is. Let's look at this. No, that's not the 50-day moving average. It's way up there. I thought so. That's why I looked at it. All right. So it's taken back yesterday's lows. What I would look for on Tesla, man, I would have liked to have seen it hold there, but I would look for a bounce off of 215. Okay, 215.15, or I'm sorry, 214. What is this? I'm sorry, guys. Give me 1 second. So it is trying to hold up a little bit here. You guys can see that. Let's see if we can get this thing to bounce going into the open. All right, I want to get this to bounce to Friday's lows, right here where I have this box. All right. I'm not sure if it'll give us yesterday's close. I would like yesterday's close. Not sure if it gives it to us. We are, though, getting some nice volume down here for the upside. But for now, until something changes, now we've broken 215. So I would look for the break. Let me show you guys what I'm looking for out of Tesla now. See, it's got to bounce. Tesla's got to bounce. It's just way oversold. Let's go to... This is why the analysis is important to understand what's going on. So there's a 4 hour. Here's the hour. Man, still just way oversold. Way oversold. Wow. Everything. All right, I'm gonna look for the bounce. I'm gonna set it. I'm gonna stick to this, guys. I am sticking to this. All right, give me a shot at, like, again, 219, possibly 220. All right, if we could get that, I'm gonna take a short on Tesla. The resistance level is up here at 221, but I don't know. Not sure. All right. It's just, you know, yesterday's support level came in off of Friday's, like, pivot high. Not pivot high, but just this little, you know, the end of the day. And it held. So let's see if we can... just yesterday. Look at that buying power off of 212. This is a tough one, guys. You know, honestly, I don't know if this thing is setting up and giving you anything good. I just don't know if Tesla's, like, worth... You know, I'm going to look at it, and if it gives me an opportunity, I will look at it and trade it. But I feel like there's other things out there that are a little bit better. Hopefully my phone doesn't mess up.
put deals and opportunities together, and I think people have settled in on the reality of the world, and we're starting in our shop to see more activity in that community. So I do think you're going to see more activity. That's one of the things that's been very favorable for our business as I look forward.
All right, good to go. All right, so we cracked the 200 day. That's what we could look for. No, that's the weekly chart. That's the weekly chart. Let's do this. I have so much going on here, as you guys can see. I need to get this one. Bang. Do this. All right. Let's go over some of the movers, too. Let's see some of those. I just wanted to cover Tesla. Yeah, 219, 220. Yeah, guys, so I want to look for that level. I'm going to be confident that 220 is where we're getting short, where I'm getting short. Let's see if you get some support here. This is a minor level. So if we get short at 220, I want to take profits off at this 215 area, but I want to look for that area to crack. I want to see 215 break. All right? Get time on this. Go 2 weeks out. Go 3 weeks out. Go a month out. Go 6 months out. I don't care. Give yourself time to stay in this trade. It's already breaking this level. It's already breaking the level now. So, all right. Target, again, for Tesla is going to be 205. Looks like came in. Man, that's such a huge gap up. Or gap down there. We'll just have to see what happens, guys. We'll just have to see what happens because I feel like yeah, I'm gonna go take, right, if it feels to me like we get the volume, 215 is going to be the area where $220, 215, 220. Right now, 215. I wrote down 220 in case we do recover a bit. That's going to be the gap fill. I don't know if it's going to give it to us. It might. We'll just have to see. We'll see what type of volume comes in here at 9 o'clock. All right. Target has got to be 205. Short. And that's $10 away. Two. All right, so that's Tesla. That's my game plan for Tesla, guys. Sorry, I guess my camera froze up again as I was writing it down. It doesn't surprise me that things are a bit messed up because yesterday I moved and I shook everything. If you guys are new here, do us a solid. Hit the like button, subscribe if you haven't already subscribed. We're marching to 1,000 subscribers, all right? I've been wanting to reach out to some institutional traders, some people in the business to bring them on, and you know, it would really help to have 1,000 subscribers before I reached out, right? I doubt they will pay me anything less than 1,000 subscribers. So with that, I appreciate you, and it would also help us or help someone else, right, that would like to be here and learn how to do these things. So if you guys could share this, like it, hit the thumb up, subscribe, all that fun stuff. It goes a long way, right? Not just for me, but for others, right? I don't have anything to gain here, all right? I'm not selling you guys anything. I'm not selling you guys a hope and a dream. I'm not selling you a product just yet, all right? I do have a book that I've been working on, which is, it's not necessarily a book, but it is, right? It is a guide. All right, it's a guide, and I use it every single day, and I stick to it. All right, so that's Tesla. All right, look for the bounce back to pre-market highs, 215. All right, 215, 217, 50, and look at it. It's just falling out of bed now, guys. So this trade, I'm going to look to get to 204, 205, 204. They're going to take this trade. All right, they're going to take this sucker, mother sucker. I want this, guys, and I think we can still get it. Don't lose faith. I think we can get 216. I didn't see 216 on here. I'm sorry. I did not see that. But I had it from yesterday. All right, so pre-market highs from yesterday. Pre-market support from today. That's where I want to get short. We need to start seeing this thing bounce. They're just gonna take this trade, guys. So yeah, but depending on where this thing's at, look for 215, 216. See what happens. It's gonna be tough, but it is what it is. This is what's been happening this week, literally. All right, let's go look and see some of the names that are moving. So I gave you guys JP Morgan, Tesla. You guys know I'm still watching Apple and Google. All right, Microsoft, AMD, Nvidia, they're all running. They all ran yesterday. You want to find a stock that's strong? AMD, Nvidia, Microsoft, right? Understanding how to take the strong names, get long, get short the weak names. That's the other part that I wanted to get into was rates are we're getting a bounce in rates on the 10-year. So what does that mean? How do I want to position myself for the day to make money? Okay, let's bring up the 10-year Treasury. All right, US 10. All right, so here's the 10-year. We're sitting at 4.1, and I have been saying for about 2 to 3 weeks now that we would be looking for a bounce down here at 3.8. We're not really bouncing. We're just sitting in an area, but if we could get a bounce up to like 4.4 and we start seeing a real bounce here, like look how overdone this is. Like look at this RSI down here. You guys probably can't see it. Let me put it on the left side of the screen. Oh yeah, you guys can see it. You guys are good. So, yes, that. You can see here we bounced up a little bit. Look at the RSI. It's already like it's already up to 55. So, that's telling me that you'll probably start running into some resistance at 4.3. So, if rates start to rise though, where do you want to go? All right, you want to go to technology and you want to be short technology. And I'm not talking technology like Apple and Microsoft, not big tech. All right? Not big tech. This is what I mean, right? Let's look at like Sunrun, right? The solar names. Look, they've started to fall. You see that? This is how you trade markets. You got to know where to be when things are happening. Look at this. Look at that 4 or 5 day downside. Come on, man. Why is this thing giving me issues? It just feels like that's the day today that I'm having. Just got to shake it off. All right? Look at that downside. And it gapped down today, guys. So I was a little late on that. Maybe it's just getting started. Maybe we could see this thing fall out of bed. Right? It looks like it's like, whoop, and getting ready to fall. Let's see where we're going. All right, so solar names. If rates are rising, that's going to put a hinder on names like Sunrun, Enphase, First Solar. All right? That's just, and again, that's just an example. There are many others. So we have support down here at 12.33. Really the support, guys, is down at $9. But this is a major level here at 12.38. So we could probably look to enter some Sunrun if we get the bounce. All right, we look to get a bounce on Sunrun. So 1352 is going to be an area. So what I like to do is I have my targets. I have my target, right, in the direction. I get my bounce back, but there's areas that I know that as the stock gets into it, I want to be taking profit because it's going to bounce off of there. So this is one of those areas. It's one of those areas. Let's look at the daily chart so I can see where. This looks like a really nice cup and handle. Low volume pullback, right? Low volume pullback. This is so weird. Why? feel like something is wrong. I feel like there are. Okay, so we have had a couple. All right, I just wanted to make sure. I didn't know if we weren't connected or something was going on and it was my fault.
Where they said, forget it, we're not going to put any Pepsi products on our shelves anymore because
All right,
we don't.
so we're gonna cover that. All right, guys. So Sunrun support down here. You have the 100-day moving average. You're actually coming into the 50-day. So what we could look to do is look for a bounce back into the 50-day moving average and look to take Sunrun back down to 1250. All right, that's what I would like. That's what I would like to do. All right, that sounds like a good plan, right? Let's see here. Look at that base, right? You pulled right back to it. Gets short, pulls it back. All right, let me do this real quick. All right, let's look and see what we got here.
And as a result, you have not dealt with any of these same sort of.
We said 1250. I feel like the level is like right here though. And we cracked that. Wow. We did. We cracked that. We cracked 1485. No shit. Alright, so it looks like we know where.
I love how you are using artificial intelligence even with your innovation too. Can you explain to people how you are using it even when it comes to new tastes and flavors?
Yeah, I think it all falls in the bucket of seeing what sort of cool stuff you can do in 2023. Come on to 2024, we've used artificial intelligence to design a Coke drink, a Coke variant.
Alright, right there. Sorry about that. Or was. Yeah, right there. Alright, right there. That's not it. I don't like that area. The area would be right here at 1727. Yeah, I don't like this area. It's not. I don't like that. I mean, it is an area. You can consider it an area, but. So it's right now. It's trading down to 1360. Right here. $10. $10. That's the area, right? Look, support. Why do I say $10? Rallies. Comes into resistance at the psychological $10, pulls back, and what happens? It goes through it, puts in a bull flag right above it. What happens? It pulls right back. $10. $10 does its thing for a little bit, sells off $10. All right. So you guys can see here, even on a weekly chart, that support level. All right, through time. All right, that $10 support level through time. So that's where I'm going to look to take Sunrun to if these yields continue to bounce. All right, I'm not blind to the fact that we do have a cup and possible cup and handle here, and could look to start to reverse this. But we're going to need yields to help it. So if it can't have wind at its back, I don't think Sunrun is going to be worth much of anything. Okay, so that's a new trade idea. I've been also watching Roku and Oxy. All right, Oxy I think is another, like some of these trades, really the most of them, the majority of them, are trades that I think I'm going to have to put on and leave them on for a little while for them to play out. So, man, I would like that. I would like $15. 15. Let's see. That's all it's going to give me. Let me see here. Give me an hourly chart. I hate spending too much time on a chart. I hate it. That's one of my pet peeves. Yeah, $12.50. $10. Those are the key levels. $12.50, $10. $12.50, $10. I gotta write that down. So what am I gonna look for in the short term? It's already selling off. You gotta be fucking shitting me. You know, I would like to be able to get a bounce to yesterday's close, 1450. Let me make sure there's no moving averages there. And there is 1450. There is. Awesome. You have the 100-day down here. All right. So, all right. I got my plan here. Let's do this. Auto zoom. Bang. I just hate that I have to click. I need to set this main channel. This main screen here. I need to put it on like where it's zoomed in. And when the chart comes up, it comes up right to where I have it. I have it on the other flexible grid. I already have it done. All right, so Sunrun. All right, we have here. Let's look for this box, or not look for the box, but 100-day moving average right there. Edit properties, rectangle, blue. You guys don't need to hear me talk. Right there, bang. Let's do the 50-day. So what I'm going to look for is a bounce into this 50-day moving average, which is this red box and this red line right here. I'm going to look for a bounce into that. And as the stock moves up into it, I'm going to look for it to turn it into resistance. All right. The resistance level is really up here at 1550. I just don't think it's going to give it to us. It's really an area. All right. It could. I doubt it does. Because we're already trading at 1370. So we're starting to work our way back up a little bit. All right. You can see here, 1350. You're going to run into minor support. You have the 100-day moving average there. So you look for this 50-day. Everything has to move. So what you look for is this 50-day moving average, right? You look for the stock to open up down here. Okay, we'll just say 1380, right? You look for it to bounce. All right, it goes up and it goes right into the 50-day, and you get short, and you look for that 50-day to become resistance, and you ride it down to the 100, and you maybe find a little support there where it pulls back to the open, and then it starts rejecting the opening price, and then it breaks, right? And then you test it a little bit right there, and then bang, you look for that 1250, so on and so forth. Before you know it, you're falling down. You're at $10 in another 5 days. All right. Hopefully, I explained that as clear as I could. It's not exactly what's going to happen, but that's the objective here, right? That's the objective. Is we're going to open up below the 50-day, so we're going to look for the bounce into it because it was prior support, and that prior resistance level is right with matching up with the 50-day moving average. So we're going to look to turn that into resistance. Now, the other thing we could do, there's a lot we could do, and I'm not going to do it right now because I don't feel like it. It's not that I don't feel like it. I want to move on. All right, Google. So Google is another stock that I've been watching here. All right, it's up at its range high. It's broken out of its range, kind of like JP Morgan. Okay, the RSI is still low. I want to see if JP Morgan's going to hang on. It's at 142.72 right now. It's already broke 143. So the trade line is at 142.39. It'll be up a little bit. So it could be like 72. Yeah, 142.72. That's where it's at right now. That's where Google's at. So look for the trade line and see if the trade line can be a bit of a support level on the daily chart. If not, we just have to see if we can get a pullback into the 50 and 100-day moving average. All right. Google's been a little pain in the ass lately. It's all right, got it.
James, something you guys can't control, obviously, Forex moves, but they matter greatly to the company because of all the operations you have outside the United States.
All right, and what else do you guys see here on Google? Man, there's so much going on that I gotta. If you guys haven't hit the like button or subscribe, think about doing so. There's a lot that goes into these that a lot of people don't see. So I give it up to a lot of the other things that I watch. Even though there's only a handful that I watch. But it takes a lot of work to put these on. So, Google, you have an ascending wedge forming here. Alright? You have an ascending wedge forming there on Google. Okay? You got to watch for a breakdown out of this range. Or at the top of this range, look for this breakdown to pull itself back to the 50-day. In the bottom end of the range, funny, where does it line up at? It lines right up with what? The 50-day moving average. So let's see if we can get our pullback. That 138 level is where we're looking for. We already made it support. So really, I would like to see 139.50, like 140. 140 is the level I'm looking for. If we do not break 143, which you guys can see here, this could also be a support level. So, if we pull, we've already broken it though, pre-market. We're at 142.90-ish right now. So, it's an area. This pivot high, if we continue to hold this pivot high, then I'm going to look for the long and take that up to 147, 146, top of the range. And I'm going to look for a possible failed breakout or a breakout, because we had some nice volume yesterday on Google. Not really, but it was better than nothing. It was more than what is showing up on the sell side, is what I'm trying to say. All right. So here's Google. So the levels, okay, for the long, it's going to be 143 and 141. No, hold on. 143 and 140. That's the levels, okay? I didn't even write down Sunrun because everything that was happening. I'll go back to it. Like right now, like you. Come on. All right. Hopefully you guys heard that. If you guys have any questions, please reach out, throw out some tickers, communicate, chat with us. All right. 143. We're going to watch 143. And then 140. All right. So if we already broke, see, we can't really say that it's broken that because it could just be hanging on to the 90 MA. It's an area. We could easily hold 142. So yeah, 142 is a solid level. All right, that's a solid level. Why is that? It's because it's been a resistance level prior, and we've already started to try to make it support. All right, this is a pretty major level. So I have all the levels here. I just need to trade it. All right. I feel like it's got to hold this level. All right. 141. Why do I say 141? So look here. Look at this pivot high, right? You see how it's trying to hold it? See how you tried to hold it there? And it was a failed. Yesterday it looked better. I don't know what's going on there. Right here. 143. You guys can see how yesterday, Friday and Thursday, we tried to hold 143. All right. Well, we're breaking it now. It's an area. It's an area, yes. And it's right there, 142.63. So here's what I'm going to put down. Just like this. All right? Just like this. Where is... Oh, come on. All right, so here is the level. Right there. There we go. Morgan Stanley had a bad quarter. All right, so for right now, this is gonna be a buy zone until it breaks. Let's go look at the volume. Let's dig deep on this. This may not be worth trading right now. You got to let it set up and give you that hold and, show you with volume that it's going to break out. All right? Or it's going to, pull itself back. All right? There's more to this than just saying that here's a level, I think it's going to hold. No, you got to do the work and see, all right, where's my RSI? What's my volume like, right? So short term looks like we could bounce. Okay, could bounce. Let's look at the hourly. Could bounce. It's working its way down, but it could bounce. 4 hour possibly has a little bit of downside, longer term. So it's important to really understand how is this industrial production. All right, guys, so that's Google. Google is still strong and holding up. It may not be a trade for me today. Don't ignore AMD and NVIDIA yesterday. All right, they broke out on price target upgrades. They have been strong. These stocks have been strong. All right, you tested highs yesterday. Let's go look at CNBC and see some of the other ones that are running. Real quick first. I know I got to hurry up. Apple, Microsoft as well has been very strong. All right. Very strong. Come on. I was like, what is going on here? All right. So I would look for Microsoft. You could look for Microsoft to try to pull itself. See if it breaks this level here at 388. All right. You could look for a 388 to 385. All right. 388 to 385, 384 short. That's a 3 to 4 point move. Not something I would do, but again, really, you do have a really nice break and test right here. All right, as long as that holds, you got to think about the long off of 388. All right, you're sitting here hanging on. You pull back to it. And then you just it flies, just like it did these days. It's probably not going to do that because it's overextended and you're going to have people taking profit. The higher it goes, you're going to have some sellers. Buy low, sell high. It seems easy. A lot of people can't do it. All right? It seems a lot easier said than done. It's at highs right now. Go ahead and sell it. No, people want to try to buy it. So this was a nice consolidation. Just gap and go, gap and go, gap and go. All right, let's look at Apple and Meta real quick. Let's go to Meta. All right, here's the daily chart of Meta. All right, so Meta is starting to pull back. So this 50-day is lining right up with 340, 339 on Meta. It's not giving you directly the trade line, but this could be nice for some longs and shorts, right? If we could get a pullback on Meta to like 359, 360. Let me look at the weekly chart.
Look, I think it's true. That gentleman's been outspoken, in part, I think, because they just are such a huge client. They have that ability to say it. David, when you see some sort of a stock bounce like this, that's just people I think who are just saying, oh, maybe the short is.
This is crazy. So you're just about at all-time highs on Meta. I don't know why. If it's because it says Eastern State Penitentiary, why we haven't really had any viewers on here. If there's anybody out there that is watching, if you could comment, let me know that you are here, that it's showing the video. So, all right, Schwab. I think Schwab had earnings today. All right, let's go look at Apple, Oxy, and Schwab, and we'll go through your guys' stuff. Oh, nice. We do got a few likes. Awesome. All right. I don't know. It's weird. It's weird. All right, so Oxy is falling out of bed. All right, I think you're going to see, we're going to find out if Warren Buffett's going to continue to buy this, but I personally think that I missed my opportunity for a second chance at a long, like a longer term downside move, if that makes sense. All right, I think Oxy's pulling back. Look at this flag. It's either going to hold and then break out higher, or it's getting ready to fall out of bed. All right, and I think that this area right here starts to break. All right, which we're working down into that level now. And you guys all know that Warren Buffett has been holding this thing up. We were long on this day right here. We were long that day right there. All right, literally. All right, sorry guys. We got long on that candle right there. We literally hit that reversal. We hit that reversal a few weeks ago. So I'm going to watch it and see if we can get a bounce of sorts, which I'm not sure if we do. The pre-market, it's really weak. Pre-market, it's really weak. So let's pull up an hourly chart real quick. If I could get, see, yesterday, it feels like yesterday is when it bounced into 57 and rejected. I don't think we'll get that. So you can see it putting in a tail here. You had a nice increase in volume yesterday. You had a nice increase in volume on the break through that level. So usually when you get an increase in volume through a level like that, which this isn't a major level, it will become resistance or support. Like if it does it, if you break through a level to the upside on an increase in volume, that means, or I take that, and others do, that the probability of that resistance level holding is now greater, and that it's going to hold. The probability has just went from a 30% chance to an 80% chance, right? Like this level, like right here at 61. If you've seen a huge breakout in volume through that level, when the stock pulls back to that 61, chances are it's going to hold because there's buyers there. And anybody that did not get that chance because they've seen it break out, it's going to attract new buyers. It's a psychological level that it's just the way things happen in the markets. All right, just like right now, if this level starts to break, right now you have buyers. Right now we have buyers at this level. Because why? Because every time this stock gets to $56, they see it go from 56 to 64, 56 to 60, 56 to 74. If it breaks, this thing breaks, they're down on their position. And they're going to say, and they do, they're going to say, I am not selling this until it comes back to break even. So therefore, these buyers that are buying from 53 to 56, like Warren Buffett, they keep buying at that range. They are now going to turn into sellers. Let's see if this happens. It's like one of the two is coming. And you know what else we have? You have an inverse cup and handle here. Look at this inverse cup and handle right here. Right there. I got to do it like this, guys. Okay. Right there. There's that. All right, and then what do we have? Bang. And then it's all over with. So let's see what happens. All right, let's see what happens. Doesn't mean it's going to break this time, but I have a feeling that we just reversed. We traded this, guys. We traded this move. And that move is from 60 or 55 to 64 or 61, I should say. I'm sorry. 55 to 60. And we said, let's look. We said literally that day, I said, guarantee you get news that Warren Buffett bought more. And what happened? Literally the very next day, Warren Buffett buys more Oxy. So, all right, I'm watching Oxy here because I want to see if we can start to give ourselves a nice move to the downside. You know, I really wish I would have been in it at 62 because I would already have the majority or, you know, some of that position off. But I'm going to look for some leaps. I'll look to get some time on this trade and see if we can get us a nice home run. All right, get us a nice home run. All right, weekly, you know, this thing is just undersold as well. From a monthly chart to a weekly chart, it's oversold. This is technically a bull flag. All right, let's not get it twisted. This is technically a bull flag. And it's pretty much telling you, until it doesn't, that this thing's going to break out and you're going to see all-time highs up at 113. Does that mean Buffett's going to do a buyout and Oxy is no longer going to be traded? I'm saying this right now. Is there going to be a buyout and the selling price for that's going to be about $100, 113? I don't know. I just trade here. All right. So that's something I would keep an eye out on for 110, and that's previous highs. I'm not blind to the fact that that is one big bull flag. All right, we just had industrial production. I want to see. You had an issue yesterday with the New York Manufacturing Index. All right, it was horrible. Let's see here. Retail sales, industrial production, month over month, 0.1. A little bit better than expected. Again, it's December. It's Christmas time, and it's New Year's. Like, it's Thanksgiving. Like, that whole time of the season. So you can expect these type of numbers. All right, we have a few minutes. So let's start getting zoned in. Getting ready to, you know, to get ready to perform here. So, there's that. Resistance, support. You know, again, I would like to get a bounce and maybe get short at 57. I would like that. So I'm going to see how Oxy trades this week. And we're starting to get a bounce here, right? As I say, we're a bit oversold. Let's see if we might be able to take a long here and take this thing back up to 58, 57. We'll see. We're going to see. All right, here's the hourly chart. Let's see what we have. It's just, you know, I don't like trading some of these names. I like it that the trade that we hit 3 weeks ago on that reversal right here, guys. This was a beautiful setup. That was a beautiful setup. Like, we sniffed a reversal out on that trade. Yeah, 58. 58's the level. Looks like they made a transaction here. When was this? It was yesterday? Yesterday morning? Yeah, it looks like Buffett might have bought more yesterday. Right as soon as it opened up, they had an order. And that order got filled at 59.22. Or 59.92, 56. Or 60, 59, what? Yeah, 59.91. I don't know. I'm been looking at charts since 6 o'clock this morning. Apple, I'm going to look for a bounce into the 100-day moving average, see if we can get that pullback. All right, Apple's struggling here a bit. We were long 2 days ago or last week. Today's Tuesday. I didn't trade yesterday. Last week, we took a long on Apple last week. That trade was 100%. All right, you went over 100%. We took half off on this first day. Took half off, got the extension. Was a really nice trade. All right, that was Apple. So we have a gap. We have a gap up above us. I want to see if yesterday it made 184 resistance. It's back through the 100-day moving average. I'm trying to just spit it out. All right, it's back through the 100-day moving average. So we're opening up. All right, we're opening up down here. Okay. We're opening up down here. So what does that mean? That means I'm going to look for yesterday's close or the 100-day to act as resistance. Or we're going to break. Okay, we're going to break through the 100-day, pull it back, solidify it as support, and we're going for the gap fill. Okay, we're going for the gap fill. Let's go look. Let's go see. I have not read the news this morning yet either, guys. I've read some of it. I've seen some of it. But the majority of it, not yet. We have the 200-day, 100-day, and the 50-day. We have not tested the 50-day just yet. Let's go here. All right, so looks like it made this pivot low resistance. This 182.26, it made it resistance. It's trying to hold the 200-day moving average. All right, that's 181.06. So 181 support. Let me pull up a 15-minute chart here. I still think you got to look for the 183 to be resistance if you're looking for downside. Me personally, I want to see a pullback into 180.50 if we get it down into that 200-day, and I want to see if I can try to take a long. There's two things I see with Apple, all right? There was a very clear, and I missed it. Well, I didn't miss it because I took the long, and that's why I didn't really pay attention to it. But we have a really nice break and retest to the short side here, right? Look at that break of this level here. This level, it's up at like 187. I don't know why this thing is just taking forever, these charts. So 188, 187 area, right? We broke it. We rallied right back to it, to this 187.55. And from there, you have just started what looks to be either we're going to like curl ourselves right here. We're going to find stability at the 181 200-day moving average and start to grind back up to 186, 185 and fill that gap. Or we're going to break it and we got some further downside, which I think the upside is the more likely thing ahead of us. Okay. Now, how do you put that in part with what you think the markets are going to do? All right, because if I think the markets are going to pull back, then how can I say Apple and all these other names, how are they going to pull back? Well, you've had, there's a bit of divergence going on in the markets. You had semiconductors that were really strong yesterday. Microsoft was really strong yesterday. Microsoft surpassed Apple as one of the most valuable firms. It just surpassed Apple yesterday. So, see if we can get a bounce in the SPY here off of these, off this 471 level. It doesn't look like it's going to. What is this SPY? What time is it? 9:23. All right, so that's what I have there. Let me look at. I haven't even looked at CNBC. I gotta start working on these streams and getting better. We already know that JetBlue and Spirit Airlines deal got blocked by the DOJ because they said that airline tickets could go up. Interactive Brokers reported. Okay, Solar Edge. All right, the solar stock fell 5% on a downgrade. Why are they getting downgraded? Because yields are rising right now. We just talked about that. All right, we just talked about the solar names and how you could see a pullback in these solar names. All right, Teladoc, that's another one. Nutanix shares traded 4% higher. Coverage of the cloud stock outperform rating. Instacart shares increased by nearly 4%. Rivian shares of the electric automaker fell by 3.6%. Deutsche Bank downgrades Rivian because, in fact, yields are bouncing. Therefore, new companies, tech companies, are going to pull back a bit. Okay? That's the name of the game, folks. This is what I mean by understanding how to position yourself and understanding these things along with your risk management. Okay? If you have a $1,000 account, please, think about how much you risk, and don't think that it's okay to risk $200 to $300 on a $1,000 account and think you're going to get somewhere with it. You can make damn good money risking $75 to, $90 on a $1,000 account and still get, your 2, 3, 4, 5, 100%ers, which adds up. All right. So look, like I said, these solar names, Tesla, we have a lot here. Morgan Stanley, Polaris. All right. Let's see here. So I looked at Sunrun. I feel like Sunrun is the one that I feel like will give us the most. You do the most. Pull it up and goes. Guys, good luck today. All right, so EMPH, here is your 50-day moving average. What are we looking to get to? Gotta look for this prior support at 95. All right, so what I'm looking for is a bounce back into yesterday's close, into that 50-day moving average, see if it rejects, and I'm taking profits. All right, 90.30 would be the target on EMPH. That's a short at the 50-day moving average, and taking profits at each time we get down to 90.30, if we get there, because it looks like EMPH is just oversold. EMPH is a bit oversold. It's got a little more downside to go, if it's going to go, but I don't feel comfortable. Let's see here. It's not that I don't feel comfortable. It's just like, when is enough? Because I just feel like it's already sold off, right? This is a nice move. It got back into this base here, and now it fell below it. It's back down underneath of it. So where are we at? 105.23. Let me see. I'm not sure. I just don't think that there's much meat on the bone. All right. So if I pull up a 5-minute chart, it's like maybe we get that bounce. We'll see if we get the bounce, and we'll look for the short. I just don't think this thing's going to give you, I don't think EMPH is going to do what it did last Friday, right? Something like this. Boom. Right? Like, it's just my opinion. I don't think it has, that big move in store. All right, guys, we have 2 minutes before we open up here. Good luck. All right, JP Morgan, Apple, Google, solar names, Tesla are on the list. Don't have too many names on your list because you're going to get overwhelmed, and you're not going to be able to concentrate on the ones that you should be looking at. Watch futures, okay? See what futures are doing, all right? Which will help you, give you somewhat of a mindset on the on the direction. Okay. All right, so here's Meta, right? This is... Again, good luck today. If you guys need anything, just holler. Give me a shout. Give me something. Give me a like. Give me a sub. All right. If you haven't done so already, please hit that like button. Subscribe. Comment below. Share this with someone. It would greatly help the stream. God bless you. If you do not see a setup, don't trade it. Okay? Don't trade it. If you don't see anything, don't trade it. All right, so there's Tesla. Let's see if we can get a lower high and get a bounce off of 213, 214 bounce. Man, I might have to be short the Tesla right off the bell, guys. All right, we might have to be short right off the bell. We said Tesla 220, 215. Let's see if it gives it to us. Good luck today, guys. I'll call it out. And look, right off the bell. What did I tell you? Right off the bell. See if you get some support here at 214. I want to get a bounce to 215. Right off the bell. I knew it, man. Fuck. It's all good. It's all good. I don't care. I want it at 220, 215 area. All right, let's go through. I got to go through and look at these 100-day moving averages. Or these moving averages, I'm sorry. Come on, get higher. Just get up there to 217. I'm going to set an alert if you guys can help me with it, or, you know, if I don't hear it for whatever reason. I'm going to set an... Man, it just rejected again. Alright, I may have to just take this short on Tesla, guys. Alright, it's... Fuck. This sucks. Yeah, it's doing the thing now, unfortunately. Alright, so what I'm going to do is, I want to see... Okay, 38.2 is up at 216. All right, 216. And where is that? Do you see how that lines up? That was prior support, pre-market, huh? Funny how that works, right? It may not give it to us. It might, it may not. I'm going to stay patient. All right, I'm going to stay patient, but 216 looks like the spot, guys and gals. Charts. Give me a 15-minute chart. Come on. What is that? 216. Come on. Let me get that 216. Let me get that 216. You can do it. 216. If you guys see anything moving with some serious strength, let me know. Let's look at run. Alright, Sun Run is bouncing off the 100-day moving average. So Sun Run, I want to wait until it gets up to like 14 or so. Apple. Alright, so Apple is... Why, guys? So what's going on right now is that my screen and my like Thinkorswim, it is. I'm going from the hand to the pointer finger, and it's not changing. I'm literally clicking on it, and it's not changing. So, look, it just made that resistance. Apple is pulling back. All right, Apple's pulling back, guys. Apple's pulling back. Let's see here. Again, guys, I think the level for Apple's got to be 174. Okay, 174. That's the range. So there's two ways to play this. Yeah, this thing is just, I'm going way too fast for it. I gotta turn my computer off and back on. I'm not going to, but that's looking like that's what's going on here. It looks like Apple is going to break this level and looks to be wanting to test at 174. Okay, 174. Alright, 174. Let's look at the daily chart, which it doesn't matter because it's all the same. Come on. Let's see if this is let's see how this resistance or this support level, let's see how this does. If it just breaks, then hello 174. Let's hope I didn't miss Tesla. I did, motherfucker. Alright. Let's see if we can get it on.
Reported everybody on, and then 6 guys raised their numbers PNC today. I think PNC is a very good bet here. 4%.
We continue to see weakness in the EV market overall. Tesla, obviously, by far the leader, and it is the stock of which is down another 3.3% right now. It moves.
Dude, this is crazy. I'm not getting hardly any views today. That's so weird. That's so weird. Is it because of the penitentiary jaunt?
Year to date, there it is, down 14.3%.
It's been the weakest of our
Reports that they slashed prices of their Model Y in Germany after reducing the Model 3 and Model Y prices in China recently. Model Y,
All right, so let's look at like this week for Tesla, okay? So if I'm going to put something on, I understand that I'm going to be risking about, $30 to $25 per dollar. And that's, again, without discounting the time frame, if you guys know what I'm talking about. I'm talking about the risk management we talked about this morning and doing that along with options. So I can just tell by looking right now, the risk is going to be about 30 to 35, 28-ish dollars per 28 cents, 30 cents, 35 cents a contract. I can't believe this. I think I just got to put it on. If we get a bounce up here to 213.50, I'm getting short Tesla. There it goes. All right, let's do it, guys. Let's do it. I might have just missed it there. I may have just missed it. Fudge. Okay, so it's popping up pretty aggressive there. This is why it pays to be patient. It pays to be patient. That is a light volume. What am I looking at? What am I looking at here? It was 20 cents.
I would have thrown in Amazon just to really get it going.
Close the first, well, 42.95 was the first intro. No, Dave.
The dude mentions this competitive risks are rising as Dash, Uber, and Amazon are rapidly closing the product. I mean, but when you do this stuff, it just says that somebody's going to merge with somebody else. David, there's no problem. You just say it. It doesn't happen. Nothing happens. And if you get it right, then suddenly you've got Zach Morris, you being a brilliant man. I didn't know Zach until he put his
predicted the merger of Uber and Cart, which, of course, we're kidding here. We don't have any. I've never. That's not something I've
Now,
heard.
the Drizzly was interesting because I went to them on Drizzly. Drizzly was a very good acquisition, I thought. Those of us, my wife's in this liquor business. And
Damn it, guys.
people would order,
I think I messed up and didn't take it there. I should have taken it.
but so much.
Hold on.
And I thought
God damn it, man. I'm trying to get these charts right.
apparently they never integrated it that well anyway.
Like, look, it just went from the arrow to whatchamacallit. And now this is messed up. Like, this has been my morning. Alright? God damn it, come on, baby.
He used the actual maple bear name.
Come on. Sorry to yell into the mic. I'm just trying to fucking get OBS. Oh, Disney was the other one that I was looking at. Disney was the other one I was looking at. I need to be prepared for this. Alright, so 215. I wish I could get 216. 245. Oh my god. I don't get this. Alright, so Tesla should, let's see, it's holding now. How is that up? How is that up? That thing needs to go down. That's weird. Okay, so we're coming into a bit of a double top up here, guys. All right, let's see what happens here. It's not technically a double top, but it's a gap down, and you're coming right back to the opening price, and it's both at the 38.2 fib. Okay, let's watch and see what happens here on Tesla. That's a low volume bounce. That's a low volume bounce. You can see my computer is acting really slow.
I wonder whether Nelson Peltz is happy with that salary package of Bob Iger.
You got a raise. It's mostly stock.
Yeah,
Mostly stock.
right, that's true. He gets it.
And what did we say? 216?
You have to account for it now, but it's on the come.
Let's watch the volume.
Roma shares hitting $5.11 at the highs, then pulling back.
This thing's really messing up on me, guys.
But remember, remember apropos of the
I need to get rid of it. I got way too much.
DoorDash, big version of Uber and DoorDash and too. This NFL story. Keep it alive, David, that Disney may be doing some deal with the NFL, or is that just fatuous?
No, there are those who sort of try to understand it from the perspective of why the NFL as a league would want to own one.
Are we going to get 217.50?
That in some way impact its ability to
I'm not sure if we will.
for its product. That said, if you can contribute the NFL network instead of cash, get some sort of value for it into ESPN and then own something there, maybe it makes
Here we go. If we can pop right up into this pre-market levels, we got a huge gap ahead of us. It's going to be interesting to see here. Well, it's going to be interesting, guys. I'm watching Tesla right now. The SPY's pulling back.
Peltz is not going to be really happy, Carl, by saying, on a speakerphone to the board saying, I don't like it. I mean, if you're in the room, you can make change. I think if you're just talking, well, that's
NFLX, Netflix, now notes from Bank of America.
There's a lot of issues around that. Box office and studio resurgence is one. AMC, Jim, new all-time low for
That is the number 5
13.
currently met X-ray.
As we had the other day, Goldman trimmed their domestic box office forecast for the year.
I think that,
My papers are all messed up.
remember, Adam Aaron, who went to Abington High School, Galloping Ghost, now maybe just Ghost, with Schwartzman and Jeff Seinfeld.
Come on, just hang on there. Go higher.
SBGI, Netflix A, Sinclair Fox reach agreement to renew all Fox
You know how you say it
affiliates
when it's
nationwide. That's Sandy Cross Golf, ATS, Fox,
save the company. I mean, without that, the meme stock, the ability to sell stock at market, just continue to sell stock. Not to mention, I mean, obviously they took on a lot of debt.
We're getting near the anniversary of that farce, remember?
Let's see. Here it goes. Let's see what happens here. I'm thinking about a long right there on that. Let's see, 15-minute chart.
It's kind of ramping up.
Ryan Cohen.
Ryan Cohen has not done as well. He was able to do that really clever.
It's breaking down. Could not hold.
Move that was really good for him.
Not that it's all part of the same,
And she's given up.
but Diamond did talk about Bitcoin today.
Look at that already. God damn. All right. Give us the bounce, please. I know it's too late. I should have taken it there. That's a failed hold. Let's see if we can bounce back up here.
Number one, I don't care. So just please stop talking about it. And I don't know what he would say about blockchain versus
I gotta get short.
versus Bitcoin that does nothing.
Hold on. That's a low volume, guys. Just hang on. Don't get shaken out of your shit yet. Hang on. All right. Hang on. Notice the volume. Pay attention to the volume.
Said, though, that if these nefarious use cases are not addressed or fixed, he thinks the government potentially one day would have to shut it down.
That's not going to happen. What's interesting is I remember when I tried to get my Bitcoin moved to JP Morgan, they were certainly unwilling to take it, but now it's in some form. They don't have to worry. I guess it's okay. But I did think the way he was adamant about not talking about it, he better be a man of his word. Every time he's asked, he should say, I addressed that.
See what I mean? Idiami?
January 7th,
Whatever that is.
one squawk box, I'm not talking.
All right, because... Okay, that's why.
He loves to talk. And he's fun to listen to.
He really is fun.
Maybe he will stick to that. No more discussion of Bitcoin. I mean, we do know where he stands at this point. I don't think the question needs to be asked any longer, right?
Yeah, I agree with that. I like the fact that he's willing to speak his mind. He's not seem to be. He doesn't.
All right, so what we have here is the 9 EMA coming down into... Fuck. I might end up just having to pay up for this. They're gonna be tricky with this Tesla trade. I know. Every time I shake or do something, the freaking... it's feeling like a long, guys. It's feeling like a long. You gotta watch this level here. All right, 214. You have a huge gap fill up above you. 3-minute gap, so resistance pulling back. Lower volume here. So you know your buyers are down here at 212.50. Time and sales. It's 1,000 to the sell. Let's see what happens if we try to make another attempt higher. Let's see what happens when we make if we try to make another attempt up here. The volume is pulling back. I think I might take a short here.
We've been saying there's going to be a downturn for.
Wait, hold on. I'm not in it yet. Let's. Fuck. I'm in a short. I am short Tesla. I didn't want that. I didn't want to take it there. Now you can see how it got really volatile there. All right. Let's go. Let's take a piece off on that extension. Let's go, guys. There we go, baby. Let's go. Very nice. Very nice. Let's lock in that profit. I'm going to actually take this position off because the volume is decreasing here. I'm out of that trade. That was nice. That was a big hit. That was a big hit right there, guys. Big hit. Big hit. Let's go. Big hit. Seen how it got real volatile there, right? As soon as I took that trade, that you could see the switch and the sense. You guys may have not noticed that. Let's go. So look for a double bottom here if we can crack these lows. The low of the day. I had to take that off because So what happened was my computer, and you could see once it started to get really volatile there when I took that trade, all right, you could see it just it was just like limit down. All right, so look, turn this into resistance right here. All right, 214 into resistance. Look at the volume there on that upside, guys. So I'm not fully short on this just yet. I'm actually still thinking long. That was just a really nice follow through on that short. All right, look at the volume. Keep an eye on the volume. If we start turning, I want to see what we do on a 3-minute trade line. We still got to get up there. All right, so to me, it looks like we're going to, look, it's rejecting here. Like I said, 214. Come back up, reclaim it. Whatever you got to do. There you go. Go back up. Go back up. Go back up. Nope, here she goes. She's going to break down. People might be entering short right here. And it's going to go up on them. Yep, see, it's going to go up. Boom, 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 boom. There it goes. See, I as you know, been doing this for so long, I can start to sense. I know when things are going to happen, right? You've seen that pop there. I could see how we were flat, not moving, and you could see the shift in the change. All right. I want to see us. Let's see here. What do we have? That was a beautiful trade, guys. You know, I try not to think and just do. Don't think, just do. Beautiful. That paid, guys. That trade paid off of 214 to 212 or 213. It paid. It paid very nicely. All right, so here's your the 1 minute 9 EMA starting to curl flat. 3 minute 9 EMA getting ready to drop in here. I still would have liked to have gotten, and I'm still looking for it. If I can get up there at like 218, like Friday's double bottom, and try to turn that into resistance. That's what I'd like to look for. Or yesterday's close. That's what I would look for. That's what I am looking for. God, that was beautiful, man. I just got that extension on that. That really paid. I took it off just beautifully. I did not limit order out of that either. I did not limit order out of that. That was all market fills. All right, so now you can see, use the daily chart, okay? You see we're working into yesterday's open. You know, where's this at on the daily chart? We're right here. That's previous support up. Okay, so look. See, that level is still, it's 220 is the resistance level. We're just sitting in the middle of the range. So if we could start to get a bounce here on Tesla and start to get up to that like 219, it would help bring that trade line down. Let's see here. Very nice. Very nice. She's just consolidating right now. I still think, you know, it's got a higher move. I just don't think that it's going to fall out of bed right now. I think it's got to go higher to go lower. That's just my opinion. All right. Got to get those victories under your belt, guys, and you know, you got to get a win. Get a win under your belt. Don't matter if it's small or, you know, whatever. Just get some wins under your belt. Now, again, remember, Tesla's a bit oversold. It looks like, look, the volume just died out there. So I need to go somewhere else where there's some volume. I'll check back in on Tesla. I tried to throw on CNBC for you guys, but it was a commercial. All right. Tesla just seems like it's going to be boring today. Come on. So, all right, we got short Tesla. If anybody's new here, welcome. It's a little more of an advanced trade. All right, so look for Tesla to hold here and look for it to get a bounce. It's struggling though. It can't get nothing going. So, we're gonna find out like very soon if you're able to get above this trade line right here. If you're able to get above 215, we're about to find out. All right, we're about to find out. All right. Let's go look around here real quick. Let's look around real quick. Today, again, it's probably going to be a low volume day. I want to see what we do tomorrow. All right, so here's Oxy. And we said what? 60 or 58? Possible long the 58. The Buffett boy buying again? Huh? Is Buffett boy buying again? Look at that. The volume isn't that great. Volume isn't that great. So, yeah, 57's where the target would be on Oxy. That's a trade. All right, let's look at Apple. Really nice to get some nice wins under our belt. Look at Apple recovering. Apple is recovering. Sorry, I know you guys can probably hear that. That is some nonsense on my phone. So, where is the SPY? What did we say on the SPY this morning? I need to go back and replay it. Did we say we would look for a bounce and a sell-off right off the bell? Right? What did we say? 471? Pretty sure that's what we said, right? Because we labeled it. Let's go look. All right, look at that. Went up to yesterday. Let's see here. Let me look at like a 15-minute. What did we say? We said we were looking at 471. Look for a bounce back to 472-ish, like pre-market lows. Man, let's see if we can get a bounce off of this level, guys. I'm going to look for a bounce on the SPY. I want to see if we can start looking for a bounce here, guys. This is a double top on the SPY. That is a double top. 52, 4 hour. 4 hour. Everything is just oversold. Alright. So what I'm looking for, guys, on the S&Ps is if we can catch a bounce right here on the SPY. I want to see if we can catch a bounce. I haven't traded the SPY in a while. This is not a day I would like to trade the SPY. It's really not. I don't think it has enough volume. All right, to play. In my personal opinion. Again, that's just my personal opinion. Maybe it does. Maybe the volume is nice. Let me see here. No, the volume is fucking poop. The volume's poop. Excuse my French. The volume is crud. What do we have? We have some semiconductors. about industrial productions?
Minus
And I
0.1%
went on to be
in
the first
line.
Latina anchor in
Probably
South
already came
America.
out.
Was minus 0.9% versus minus 0.8%.
All right, guys. So my game plan right now would be to look for a bounce on the SPY to get to 472.52. 472.50. All right, right here to there. It may take a little while to get there, but
Rising yields, 2-year now 4.34, about a 1-month high on some better than expected retail sales results. Has stocks down, Dow's down 100 plus.
All right, let's get to some
Google
economic
just
data.
tweaked
Just brought some
search
take. And for that, we'll get to Rick
results to comply
Santelli.
with
Rick.
EU tech rules.
Hi, David. Yeah, business inventories. Now, these are a November read. We're expecting down 0.1%, and that's exactly what we ended up with, down 0.1%. I guess what's notable here is, of course, these are fourth quarter numbers, and this is a back-to-back drop in business inventory. So we're not building, so that has GDP ramifications. We saw that December retail sales was pretty strong. We know supply chains were an issue, and all of a sudden, tensions in the Middle East are making it an issue once again. So we want to monitor business inventories quite closely moving ahead.
all right. So see if we can start getting a little bit of dip buying here. See if you can get a little bit of dip buying here. That's what I would do, guys. I would look for a 473. You know, run this thing back up to like 472. I would look for a bounce. Maybe look at the Qs, see where they are. You know, I just don't know how much you're going to get. That's the question. Let it come down again one more time if it will. Let me look and see. Let's look and see what here. Let's look and see right here.
Expectations in the next 6 months jumped 12 points to 57, and the buyer traffic rose 5 points to 29. Regionally, on a 3-month moving average, builder confidence increased the most in the Northeast into positive territory. It was flat in the Midwest. Now, tomorrow we'll get a read on how all this new confidence is playing into housing starts and building permits. Leslie?
I hate weeklies and dailies, but I want to see what they're going for here. So there's your bounce. That's a free trade right there, guys. All right, right there. Did you guys think about that long? Anyone? Give it a little bit of room. Make sure you're watching the volume. Make sure you're watching it. Yeah, my computer is just messing up. All right, I want to try and catch this thing on the low. I know it's kind of greedy-like, but I want to try. I want to get this thing down here. It's probably not going to give it to me, but what is... Matter of fact, let's look at... Oh, that's crazy. Look at that bounce, guys. Come on. Just take them. Just take them. All right, we out here giving it to you. You could be taking profits, guys. This was at 40 cents. It's up 15 cents on 40. 15. How many times is 15 going to 40? So that's probably like a 26, 22% gain right there just on these candles. Oh, shit. You're at 50. You're at 50% right now. You're at 50% on that long. Take it. Especially if you took it. All right. Again, the target's 473-ish. Target's going to be right here. 472. 42. All right. That's the target. I would say that's a 50% scalp right there, guys. Very easy. Very easy.
S&P futures getting a pop here now.
Oh, of course they are. I would hope so. I don't think I'll get that price again. Let's go look at Tesla.
with rates expected to, well, having
Man, I can only take it if it's shit.
expected to decline as this year goes on. What is that?
I'm gonna keep my eye.
That's the key question because they will be such beneficiaries in a lower interest rate environment as clients sought new ways to generate alpha.
All right, I'm gonna keep my eyes on it. That was a beautiful trade there. That's a 50% trade, guys. That's 50%. It's $1,000 trade into $500. You made your money for the week or day. I mean, I'm sorry, not the week, but the day. Stress-free trade. Let's see. Where you at, Tesla? So Tesla, again, I'm feeling like it's got to move higher before it can move lower. It's early in the morning, so these options if you've been watching Tesla, you need to be watching the options that go along that coincide with it, so you understand where they're at, how they're performing. I don't know. There's a lot I could say about that, but I'm sure some majority of people don't really do it. All right, like where did they close at yesterday? What's the high and low of those options? So I'm looking at. See, I'm thinking about taking some calls here. Trying to take it up to 219. I mean, I've made some good money already this morning. Just feels like it's going to consolidate throughout the day, and it is struggling here. Feel like you guys can see the volume's drying up because it's not making that move higher. Excuse me. I still got a lot of work to do. Thank you guys for the likes. If you guys could, hit that like button, subscribe. Not if you could. What do you mean if you could? You guys can. Hit the like button, subscribe. Ship this video off to someone else that you think could get some use out of it. We've done a lot today, guys. You are not getting that anywhere else. You are not going to get risk management, 2 free trades, all that fun stuff for a like, a sub, and all that such. All right. I mean, you could have already had a 50% gain. I'd have to look to see what the Tesla trade was. It paid. I'm going to tell you right now, that Tesla trade paid. I don't know what the percentage was on that. But I can tell you that SPY long there, that was a 50%er right off the jump in just a few minutes, right off that support level. So let's get to it, man. Let's get to it, guys. Very thankful for this morning. Get those wins. Guys, if you guys feel like you've been falling behind or can't seem to get a trade to go your way or something's going on, focus on trying to get green and find something that's not, whether it's not volatile. Don't pick to, like, go to Ford, go to Rivian, go to Sunrun, something. Just get a win under your belt. Get a win under your belt. Okay? It's important to do that. Brings back your confidence. And you need it. That's, you know, it built, you got to build up the confidence and, you know, start to just get those wins. You need them. Get those wins. Come on, Spy. You can do it. Let's go. Let's get this thing up here and see if you can test yesterday's, this pivot, that pre-market high, 473. Let's go. You know you can do it. Let's do it. 473. You know what? I'm going to look bigger, guys. I'm going to look for 475. I want to see if we can get a 475 SPY today. That's what I want to look for. I'm not, man, I should have taken that 40-cent long off the bottom. This is a nice pullback test of that base. It's pulling back in again, kind of giving us another shot. We've earned the right to take the risk this morning. So let's see if we can get this. Let's see if we can pull off this long here, right off trade line. Damn, it's already so much. We just called it out at 40 cents, and now it's. I think it's got to pull back. I feel like this has got to pull back just a hair. Get some people to feel really good about taking the long here before they, if anybody's been watching this, they know we've already taken the long. They're taking the trade-off here, right? That's what we just did. We took the long here, all right? And you're going to start taking some profits. So see if you can get that pullback. Look for the entry around 471.60, 471.61. But it may just go. It may just go. Let's see what happens. You got a little bit. You got a little bit of divert. I would like it to pull back, but I don't think it's going to. All right. It doesn't seem like it's going to. We'll be lucky if it does. Because if we can pull this thing back, we'll get this RSI pulled back and grab it down at the lows again. Coming into the 15-minute trade line as well. That's where that resistance is coming in at. See there, guys? See that 15-minute trade line coming in as resistance? Yeah, trying to break through it. I'm talking and the mic is not on. I was talking about this entry here, 470, 140. If we get there, you know, I may take this myself again because I do feel really good about this long. You know, short-term bounce. Okay, that's now till lunchtime or whatever, or later on this afternoon. But I do feel good about a short-term bounce. I was saying a few different things and I just got off track. The mic was off, so I apologize. All right, Tesla's pulling back in. All right, so like we said, that 3-minute trade line, bang, now it's starting to pull back in. The next bounce, I'm going to look for a short. The volume is not there. We need an increase in volume, guys. Keep an eye out where your 15-minute trade line is. Got to keep that on your watch as well. Got to know where it's at. She's just dropping. Let's go. Let's look for this bounce higher. And I want to see if we can start bringing this down to those targets. I did not get that pullback. I'm trying, guys. I want to take this again. I'm begging. I hope to God Tesla gives me another shot, guys. I don't know. I think I might have missed it. If you guys are new here, welcome. Do us a big favor. Like, subscribe, share. This will help someone find us that would like to be here, okay? Doesn't just help me, all right? We've given out some beautiful trades out this morning. Some educational stuff that you're not going to get anywhere else. Like, subscribe. We're on our way to 1,000 subscribers. I'm looking to reach out to a few institutional traders and investors. And in order for me to do that, in order for me to, you know, feel comfortable and them feel comfortable, I need at least 1,000 subscribers. So with your help, you would allow us to get there, and you would help allow someone else to find this channel if you share this. Like, subscribe, thank you. Profitable morning this morning. If you guys are wanting to know how to pull money out of the markets consistently, to pull more out than you put in, you trade the market doesn't trade you. And if the market is trading you, then you need to join us. Ask questions. You need to let us know, what are you struggling with? That's 2 trades this morning. Green. 2 really nice trades this morning. Boeing's pulling back into that pivot low from yesterday. There was just something that came across the wire. I did not really get that, what he said, but all right. So you can watch Boeing, but the move was made yesterday. I'm not really too worried about Boeing. So here we go. This is the bounce back I'm looking for on Tesla. Guys, I think this might be a failed breakdown. All right, I think this might be a failed breakdown. I think this is where anybody that is looking for the long, this may be where you want to think about taking it. All right, this might be where you want to take it. Again, I'm not here to tell you what to do. You know, your risk to reward, you're going to know pretty quickly if that's the wrong trade. But I think the long here is doable. I think the long is doable. Give me 1 second. And the long, that would be the 218 area, 218, 220, you know, getting up to yesterday's price action. Let's see, guys. Let's see here. Let's see if we get some volume in here. I want to see a failed breakdown. I want to see it get through this level of 213.50 and these shorts start to get a bit nervous. I like Tesla to the short side, but I feel like that short is better off up at 220, 219, 218. All right? That's just my opinion. So, man, that's too much. Let's see, 80. So this has got a 17-cent delta on a 80-cent 222.50, and we're at 212. If we could get to 216, look at it. Look at it go. The volume, though, guys. You guys need the volume. Here we go. Let's see what happens. Just so you know, this level here I'm watching, and I'm going to watch for this retest. All right, I'm watching for this retest. And look at that. There's your 3-minute trade line coming right in, acting as resistance. Right here. Let's see if it holds here. Let's see, 213 is going to be the line in the sand. That's a low volume pullback. See if you get some buyers in there and we start bringing this Tesla up to the upside. Again, don't fight the trend. The trend is to the downside, but I'm just wanting to see if it's going to hold here. I want to see, because I will be ready to take a long if this thing holds. Once again, look at that low volume. It's going to start getting froggy here. They're going to have to decide. The shorts are going to start getting nervous if it does not break here. The shorts are looking for this to start breaking. I felt like I should have took it there. I felt like I should have taken this trade there. Let's see. It's like struggling, guys. It's struggling. I got the order up. I got the order up. And there's the 9 EMA. Where's the SPY? If you guys could throw us a few likes. Out here like a crackhead looking for likes. Hey, mister, you got any likes? Sorry. I know that wasn't funny. Sorry. Alright, come on now. Come on now, baby. What are you going to do? What are you going to do? Can you spare some change? Or can you spare some likes? It's on South Park. Yeah. Alright. What are you going to do? We need this thing. In order for me to feel good about this, like I feel like it's going to break now. It's going to break down because you did not get that quick reversal action and start to get that sense of short starting to cover, longs adding on to it. Like, it's going to be coming here. Let's see. I want to see a quick move off of that level to start going to the upside and back up towards VWAP. All right, that's what I want to start seeing. I feel like the longs have given up. What are you going to do? What's going on? Just let us know. This sucks because I wish I had both orders up. Like right now, we can start to roll it over. Here it goes. What's she going to do? She's going to roll over. Roll it over. Oh, I got to go back. It's just hanging on, guys. She's hanging on by a thread there. All right. I know my stuff just keeps freezing this morning for some reason. I may have to restart my computer. It's not freezing, it's just
CNBC News update. A deal to transfer medicine to Israeli hostages is reportedly underway in Gaza, according to the Washington.
And those longs just got stopped out. That's why I took that off. And I'm like, it's going to break. Because it needed to move. It needed to start moving and show, show the longs. Now it's just, let's just ride this thing to the downside. But look at that volume on that break. Let's look at this break here. So this is the low of the day. Low of the day is at 212.47-ish.
Carol is expected to take the stand today for 2 hours before she faces cross-examination from Trump's lawyers, who said in opening statements that she's trying to.
Just showed you a 2-year
pressure over the last year. Of course, concerns over revenue growth and margins certainly have given a number of investors pause.
I'm looking for a long, guys. I want to see if we can
Joining
get
me
this
now
long
in
because
his
it's not
first
breaking
interview since
down.
stepping into the role as
It-
the president and
This
CEO
thing
of
could
PayPal.
just trade sideways
Out.
today, okay? So this doesn't mean that it's a long or a short, but I do want to see if we can't get a little bit of a bounce here on Tesla because it's not giving you the follow through just yet. All right, just yet. I do think it's going down to 210, 206 more than likely. All right, look at this 3-minute trade line right there. That needs to be your entry and your exit. If you get in at this level, you do not get out until it breaks that level. And you can start to see it curling here. See how it's flattening itself out and trying to get some buyers up under its belt to try to spin itself back around to go higher. It's just my opinion.
Over the last few years. The company's been growing, but hasn't been putting out real customer-backed innovation, and that's why I'm here. That's why I'm so excited about it going forward. So look, I love being an underdog. I will take all of that feedback, and we'll shock the world.
Yeah, you think you're going to shock the world. How are you going to do that?
We've got an Innovation Day coming out on the 25th, where from the first week that I got there, this was not about trying to figure out what to go do. It is very clear what we need to do. 24 will be a transition year for us, but it'll be all about execution, and it starts with innovation. So on the 25th, we're going to come out. We have very clear customer-backed innovation that we will be rolling out for consumers, for our merchants, for Venmo, and I think it'll be a good start to this year.
Well, I hope so.
Anything you can tell
PayPal
us at this
needs
point? Obviously, I don't want-
PayPal needs to fix their shit because what they got going on. I want to hear this, but I'm going to talk about it afterwards.
innovation can provide?
Well, look, PayPal hasn't delivered the value proposition to its consumers or its merchants.
They
over
have
the last
not.
few
You're
years
right.
that I
They
think
have
we're
not.
capable of. We have more data. We see exactly what people are purchasing around the world. So we need to make a better value proposition for consumers, put more money in their pockets. For our merchants, we have the ability to leverage AI to deliver an incredible improvement in their conversion rates. And then we have to let our small businesses and our consumers connect, leveraging AI-driven personalization.
And you believe that, for example, using the data more effectively.
All right,
for
see if
particularly
Tesla
the
starts
merchant
falling
side
here.
Can bring what, higher profit margins? I mean, how does this translate?
Well, look, we have over 35 million merchants that are using PayPal. When we improve their conversion rate, it improves their business, it improves our bottom line. We're kicking things off on the 25th.
I mean, you do have an awful lot of data. You ever consider just selling it or working with others as well to sort of pool that data in some effective way?
You know, the data is our customers' data. It's our consumers' data and our small businesses' data. What we need to do is leverage AI to make it better for them to be able to grow their businesses. Small businesses are under a ton of pressure right now. It is hard to be a small business in good times. It's not good times right now. We can give them an advantage. Advertising costs have gone up 2x over the last few years. We need to be able to give them the opportunity to leverage the data that they have and improve their business.
Right. All right. When you speak to investors now, and it also is encapsulated to a certain extent in some of these analyst reports as well, competition comes to mind. Your lack of significant profit margin expansion and/or actually lack of profit margin. You know, Apple Pay, buy now, pay later. Do you have an answer to these? You talk about what is a still relatively dominant position, but at the same time, it seems as though you've taken
Markets
on
are
a lot
just
of business
stuck,
that
guys.
doesn't really have
So
a margin
it's
associated
fortunate that
with
we
it.
got
Yeah, I think we
a bit of a trade-off when we
acquisitions
did.
over the last few years, and we've been defocused. It was one of the things I noticed when I came in 100 days ago. We've got a lot of priorities. We've narrowed those down. 5 key priorities, all focused on profitable growth. And so I think you'll see us start to move away from some businesses that we may have been in and really focus our energy and our efforts on building profitable growth going forward. It's going to be a lot of fun.
But you did use the word transition year to describe 2024. What does that mean? What are you transitioning from and what are you transitioning to?
Yeah, the company's been focused on gross revenue and growing our business. That's been a good start. We now need to transition to profitable growth. We've brought in new leaders. I've remade the entire leadership team in the first 100 days. We've organized around our customers, so we are now focused on consumers, small businesses, and enterprise. We're having conversations with our partners and customers around ensuring that we are working towards profitable growth. That's going to take time. It's not going to happen overnight. This is a year where we are focused on execution, though. And I think by the time we get towards the end of the year, you're going to see a totally different.
Look at that upside, guys. There she goes. She's
Those are
screaming.
big words.
They are big words.
What does that mean in
Look
your
at the
mind,
size. The reason I'm here is you look at the size of the network effect that we have. Over 400 million consumers, over 35 million merchants around the world, a quarter of the world's e-commerce. We have not taken advantage of the network effect that's there. This is about innovation. It's about delighting customers. It's about creating a value proposition. And it's all about execution this year. We are not trying to figure out what to do. We are executing on what we know we need to do.
Right. I mean, listen, you have brand loyalty, and now obviously everybody knows PayPal. Venmo seemed to be ascendant for some period of time, but that's a perfect example, I think, of someone who would say, what happened?
Yeah.
What did happen there? You know, you have the Zelle competitor that's got a growth rate that's above that of Venmo. It feels as though it's fallen behind.
Yeah, I would say Venmo is still the leader of the pack. It is the verb. You talk to any Gen Z or Gen X out there, they are using Venmo. We have not focused, again, on profitable growth there. And that's the opportunity for us going forward. How do we innovate, give our merchants, our small businesses, and our consumers the opportunity to continue to interact? Venmo is the leader. There is opportunity proven in the market of how to monetize.
I was talking to one investor who, and he cited a statistic. I don't know if it's true, but he said over the pandemic, your head count CAGR'd at about 18%, compounded growth rate. That's a lot of
CAGR,
you
compound
added. Did
annual
PayPal
growth
add
rate, just in
Community
case you guys
up
didn't
about
catch that
29,000
and you don't know
employees
what it
right now?
means.
You know, we did a lot of acquisitions over the pandemic. I said on the last earnings call that our size was slowing us down, something that we're looking at right now. But really, it's about automation. Our ability to take a lot of
three,
manual
guys.
process.
That's
When you
three.
grow very
Right
fast like
here.
we did over the pandemic.
If we can
You
get
just
this
throw
long,
bodies
I'm
at
going
things.
long, guys.
We need to be
I'm
able
going
to
long. If
really
I can
take a
get
look at the
this
data that we
entry
have,
right down
automate,
in
create a
this
single
area
platform,
at like
for
213.50.
PayPal. And I think
Let's
we'll
see what she
right-size
does
the
at
business.
VWAP
So
here.
does that involve AI in a more significant way than you're using it right now?
We have been using AI for over a decade to ensure that our
I
risk
feel like I
and
need to just
privacy
get in.
works well
I
for
feel like
our
it's going to
customers.
blast
We've
right
not
through
been
it.
leveraging
But I
it
need a
to
low volume
enable our
pullback.
customers to grow their business. That is a huge opportunity.
We'll let you
for
guys
us.
know
Something
as
you'll
soon as
start
I
to see
get
on
in
the
this
25th
Tesla
when we
trade.
roll out our first
That's
look
2
innovation.
It's gonna be a
or
big
3
day, the
right off the
25th,
bat.
isn't it?
It's the
We
start.
said right
It's
here,
just
man.
the
We're not
start.
break
And,
like we need to
it
look
is
for
gonna
that
be a big
long.
day because it's the energy that's coming from the team. What I am so proud of is
Now we
from the
we
first week that I
identified that
came
it's
in,
not
it was only
breaking
100 days
down.
ago,
We need to
the
find
team
out
has been
where are we
focused on
getting
the
in.
innovations.
I want to
They are
take my
excited to get
long
this out into the world,
right here
and,
in this area.
it's the start of
All right,
something
right in
fun.
this
Are there new
box
tools available
somewhere
to you, though, to increase
here.
efficiency?
I want it
You
to
know, AI
stabilize.
is a huge lever for us. It's a huge
Right
lever.
in,
the
like,
data
here.
at the scale that we have allows us to leverage AI in a unique way. We just have to think customer back and think about adding value propositions for them.
And finally, as a payments company, you do, especially you mentioned all those merchants have a decent beat on sort of retail and what's going on. So how is Christmas?
We had a very good holiday season. It's continuing, frankly, into January, and I feel quite good about there's two sides. One, consumer
Markets are
sentiment is
kind
down,
of
but
stuck,
they're still
so
spending. And so
don't
Any
worry
winners?
if you haven't
We'll see.
done
Looks like as the
anything.
Temus
All right,
of the
maybe it's
world
probably
sort of
best to keep
taking
it that
off,
way.
or-
we actually saw it pretty consistent across. And again, consumers seem to be healthy, even though they're skeptical about the future.
All right. Well, speaking of the future, we hope to continue to sort of monitor how you're doing here on those promises, Alex. But we appreciate you taking time. Thank you.
Thank you.
Alex Chriss, CEO of PayPal. Still ahead, shares of Citizens Financial went into positive territory. You can see it right there, despite what was a drop in profit. CEO Bruce Van Saun is going to join us. He'll break down those numbers. That's next.
All right, here we go. See if this is to the downside. I just kind of noticed something now. Here, see that VWAP? Let's see if this is going to be the downside. See if they step in and bring the volume up. The volume's got to increase, though, if they want to bring this thing down further. Feels like Tesla was on target to go lower, but it just fell out of bed right here. You had an increase in volume on the breakdown, a light volume pullback, right, on the 3-minute 9 EMA, light volume pullback, increase to break the low, increase in volume, then it just like stopped. And even at that point, we were still like, man, we still think there's a long here. We just feel that it needs to go to 220, 219, 218 before it goes to 210. All right, it needs to go higher to bring in more shorts to more sellers, right? That's my opinion. It needs to go there before it goes to 200. Don't fall for it. Don't fall for it. Don't fall for it. If you guys are believing in this, I'll let you know when, or at least in my opinion, when I think it's believable that it's going to give you that continuation to the downside. SPY's looking like it's wanting to break out above that pre-market low and start trying to make a run for 474, 473.50. Yesterday's low, pre-market highs.
For that, let's get to Steve Leisman. Hey, Steve.
Hey, good morning, Carl. Yeah, the release this morning by the census of the December retail sales report allows the National Retail Federation to calculate what kind of Christmas it was. And it was a good Christmas, not a great Christmas, but most of all, as you'll see in a second, it was a normal Christmas. I will say the dollar value was up to $964 billion. That's a new record, but it was up 3.8%.
I would think about, all right, what I would do is I would think about this, now look here, this VWAP. It could consolidate sideways all day, but see if you get some shorts here. See if this volume bar starts to increase here. All right, it's got to increase on this reset because what you have here is a break above VWAP. It plays with it, held it as VWAP, could not break above off of it. You break down off of it. That's the short we took. It goes right back into VWAP. Okay, now it's rejecting VWAP. Now you need an increase in volume off of VWAP to give you further downside. Do we start to get that right here? You just rejected VWAP. All right, you just rejected VWAP. See if you can reject this 90 MA. Pack on the volume right there. See if this is what happens here. Let's see. But if it holds, you got to think about that long, and it could just trade sideways all day. All right, that's also the other option. But if this breaks, guys, and we get that increase in volume, bang, look for that short.
The latter name reporting a fourth quarter profit decline with net income dropping 71% from a year earlier to $189 million for the quarter, although a lot of that was due to some special items in the quarter. Here to break down those numbers in a CNBC exclusive, Citizens Financial Group Chairman and CEO Bruce Van Saun. Bruce, thanks for being here. So as I mentioned, there's a lot of noise this quarter.
Here it is, guys, right there. I was just getting ready to say, I'm thinking about taking this short, guys.
NII, net interest income, that's the profitability metric from loan making. You gave some guidance there. You're expecting declines up to 9% for the full year 2024.
All right, it's breaking above that 90 MA. This is it, guys. What's it going to do? You're going to find out right here. All right, we're going to find out here who is in control.
One thing
that's what the market's about. Who is in control, buyers or sellers?
It was a tailwind for net interest income. It was.
But our net interest income was down 4% sequentially in Q3. It's only down 2% in the fourth quarter, and then.
This is all that the sellers are holding on to. Shorts are holding on to this. If we give if they are not able to get continue this trend to the downside, then look for this stock to go higher. This is going to be it. Look, there's the 90 MA. Let's see if it starts to go. Is that a fake out? Shit. Let's see here. Let's see here. It almost had me. Almost had me there for a minute. Almost had me.
When I look ahead to next year, at least if you kind of go with what the swaps market is indicating, by the middle of the year, that would indicate we start to kind of reverse that and see some lower interest rates. So how does that provide a tailwind to NII in terms of its ability to trough, at least in the middle of the year?
It's a little complicated, so I'll try to keep it simple. But when rates are going up, in the beginning, banks are what's called asset sensitive because their loans are repricing.
Oh shit, guys, that's right. I forgot about DWAC. DWAC. I forgot about DWAC.
Once the Fed stopped in July, your loans aren't repricing anymore, but there's still increasing pressure on your deposit costs. So that will continue to impact the first half of the year. Kind of once rates go down, we have certain swap positions.
All right, this could be a really good trade here. You got double the volume from yesterday, guys. Fuck, I didn't know about this. All right, this is going to be the trade. This is going to be a very nice trade. If anybody's in it, let me know. Let me know if you guys are already in this.
Going down, but then the volume kicks in the second half of the year.
Right, that makes sense. Speaking of, the asset side of your business, credit quality, you set aside more in provisions during the quarter. You said on the call this morning that
This sucks. I'm late on this trade, guys, and it's going down. Brutal. Let's go look at the daily chart. Let's see what we have here. All right, let's see what we have here. All right, so we're through that. So yeah, $28. All right, you have a little bit of resistance here at like $28. You know what? We're going to call it 30. Call it 31, 32, that whole area. Let me put it on my chart. But it feels like this level here is your previous highs. Be careful. If it does hold that level, you may have something going for you, but it's... Hold on one second. Let's get this. You can see it going up into that area, and it's pulling back. It's no surprise. That is no surprise. It's got a lot more volume than it did yesterday, though. That's for sure. Oh my, you can't even see the volume. All right. So that's that. And then we have the previous top up here. All right, which is going to be 32. All right, and we'll put a little box because it's also a range. All right, it's like 32 to 33. And then you have a final. If you're able to hold that and get up all the way through that, then you could see DWAC back to, you have a gap fill here at 40. Oh my God. Come on. I don't think you're going to get there, though. Just my opinion. I don't think you're getting there. But you have this gap fill. It's up here at $40. I would look at that, though. I'd worry about 33 first. You got to get up through those levels before you start worrying about the other ones. All right. Yeah, 46. All right, let's go look at this on a 1 minute. It's got a pullback out 25 long, 25 entry if you were to get it, but it's got to consolidate. Let's see. I think that's it. I'm going to be honest, guys. I think they took the money and ran. I believe they did. Oh, look at this. You're getting your VWAP 90MA pulling up right into 38.2 fib. I would much rather be here, though. So I was right about that. Did you guys notice how when I pulled out this chart, I said, you know, this is the area? And look what's there, 38.2. All right, because that's the real support level. So yeah, DWAC, guys, I'm not doing anything with that rate yet. I will continue to keep it on watch, but it's got to pull back and really show me that it's going to do something. Like Tesla, it doesn't want to do anything either. All right, it's just one of those days. We got 2 good trades on. Let's look, man. They're already at 83. Shit, I was thinking about a long here. That could have been a really nice setup for a long. It just showed you that it's going to hold. All right, this just showed you that it's going to hold. Right there, it just showed you. But the volume's not there, unfortunately. So it just can't get no volume. So I'm not even going to look at Tesla now. Because right there, or here, look, on a 1 minute, there's the 9 EMA. 3 minute 9 EMA. Okay. Now this looks a little bit better. I want to see if this is going to go long or even short. I want to start seeing this thing break out with a nice increase in volume or a pullback and break this level on an increase in selling volume. I want the volume to back this thing up, or this thing's going to trade sideways. We opened up at 214.87 and we are now at 213.50. We've moved $2. Okay, so don't go throwing shit at the wall and hoping that it sticks. All right, recognize what's going on. All right, if we go over to the SPY, same thing. All right, SPY is sitting sideways. Sitting sideways. All right, y'all know the song. All right, this might actually be the turnaround. Volume's dried up though. We'll see what happens tomorrow. See if the boys come out and play tomorrow. Again, we have already said that we expected today to be a little, you know, sluggish because of, you know, the whole week, right? Next week's going to be a big week. I am going to scan and see what we got, though.
In New York to report.
And look, pay attention. What's moving? I mean, yes, DWAC's moving with Trump just winning, but guys, look for small caps. There's always something to trade. The traders are going to go somewhere. You just got to find out where people are going. If the overall markets and, big cap tech isn't going to move, where are they going? Try the small caps. All right? What I'm saying is if the markets are going to be slow and you're sensing the markets are slow, okay, go look at small caps. See if there's anything moving there.
Known as the Corporate Transparency Act, it requires every LLC, limited partnership, and other private entities in the U.S. to disclose their true ownership to the Treasury Department. More than 30 million businesses and partnerships will now have to file, including family offices. Now, the fine for not complying could be up to $10,000 or 2 years of jail time. So, guys, a lot of work here for lawyers and accountants. We'll see whether either of these laws on the state or federal level.
I may be getting off here in a little bit. If you guys could give us a like, subscribe, share this. I'm gonna look for a few more. I'm just gonna wait a few more minutes and see if we can't find something.
I don't. I think they're just going to be able to sort of connect dots when someone is convicted or they have a lead on someone from a secret file that's disclosed as part of the Panama Papers or something like that, where law enforcement can trace it. But big disappointment to the New York legislators who said the whole point of this was to shine a light so that publicly we could know these things. So I don't know that much will come of it unless there's already a legal case against a certain owner.
So when I'm reading that big ticket column in the Times or whatever it may be, or your stuff,
yeah,
I'm still going to be left wondering who actually
has
owns
the LLC. It's some lawyer's address that's sometimes affiliated with so-and-so, but we don't know. That's probably how it will remain.
All right, that's too bad. I wanted to know.
We
I
all
wanted to
did.
know. Yeah, Robert, thank you.
Thank you.
Robert Frank. Well, we've got the S&P down about 0.64%. The Nasdaq is the worst performer thus far this morning at an over 1% loss. You can see it right there. Kind of a lot of red across the board. Not too many outliers.
Damn, guys, look at Google. Look at Google, guys.
Shares up almost 9% for this year. We got a lot more market coverage for you straight ahead. Don't go anywhere.
I'm going to use the restroom. I'll be right back.
NBC.
Good Wednesday morning. Welcome to Money Movers. I'm Carl Quintanilla with Leslie Picker at Post 9 of the New York Stock Exchange. Today, are the markets pricing in too many rate cuts? We're going to talk to one JP Morgan portfolio manager who says yes, but says to stay bullish either way.
Plus, 10 months after panic struck the regional banking sector, what do the quarterly numbers tell us about the strength of their balance sheets? The CEO of Pinnacle Financial joins us after posting results.
Mortgage demand jumping more than 10% this week. 30-year fixed falls to a 3-week low. Home builder sentiment a 4-month high. We'll break down what that's all telling us about the housing market.
Right now, the markets are in the red. The Nasdaq, the key laggard here, down more than 1% right now. S&P down about 0.6% in the Dow. Basically little change, down about 7 basis points. Topping the tape for us this morning, the market testing the idea that good economic news is bad for the market. Yields jumping and markets falling as retail sales come in better than expected. Let's bring in CNBC senior markets commentator Mike Santoli for more on this. Hey, Mike.
Yeah, hey Leslie. So really hot retail sales report gets yields moving to the upside and does give a little bit of a gut check to this notion that what's good for the economy can be good for the markets, even if it means fewer or later Fed rate cuts. Now, that's a position I've kind of been in. I thought that since we got confidence at disinflation had downside momentum to it, that we also had the Fed pivot in this idea that even if we don't know when or how many cuts are coming, that at least it means that the Fed doesn't believe it needs to really undercut the economy to get the job done on inflation. So I think, again, we're encountering this idea that maybe the economy is holding up better than anticipated, and therefore yields might find a higher equilibrium, and trying to figure out what that means for stocks. I'm slightly encouraged that the market has firmed up since the lows, though I do think that this has been an ongoing payback process. We're 3 weeks into it. Internally, this market's been correcting for 3 weeks, even though at the open or at the close last night, we were down like less than 2% on the S&P. So that probably, or could have more to go. We also have this very staticky period right now. This options expiration week in January is typically a little bit tough for the market, and today's the VIX futures expiration. Without getting in the weeds, it's sometimes a little bit of a cause for some mechanical pressure. So far, we're weathering it okay.
Mike, what's really stunning this week, or at least the last 24 hours, is the polarity between Empire yesterday, retail sales today, Atlanta Fed inflation expectations just now 2.2.
Yeah.
I mean, both sides have something in their pocket.
Yeah, and the industrial production number was actually better than expected too today. So I do think that it's why we're a little bit hesitant to declare what kind of economy we have right now. And I could argue that one reason to be concerned if, say, retail sales continue to hold up and the consumer looks okay and the job market looks fine, if you think that's a head fake, if you actually think that's kind of a final burst of spending power, or we're just going to roll over from here, we're not picking up some of the underlying weakness, then you start to get concerned that a Fed policy mistake is becoming more likely if they stay on pause. I don't know if you have to go there, but I think that when you have the conflicting data, you can sort of choose what to be afraid of, and sometimes, you know, it captures the market's imagination.
Choose your own adventure, as we've been saying for a while, Mike. Talking a bit, Mike Santoli. Plenty more commentary from Davos catching our attention today. We heard earlier from
I kind of want to see if we can get a long on Amazon up to 154, guys.
A few too many rate cuts. Take a listen.
There's no question we've made a lot of progress on inflation. Depending on how the progress moves from here, that'll spell the direction of policy. I think it's hard for me to see the market's view of 7 cuts, this year. I do think there's a reasonable possibility of some interest rate cuts and some easing, but it's really going to be dependent on what the data says and how the economy.
That's what's his name from Goldman Sachs.
I see some signs of softness, which would lead.
I know his name. I just can't think of it right now.
That we're going to see some cuts, but there's a lot going on in the world.
That's in line with our next guest's outlook. He's expecting 3 or 4 cuts this year, starting the new year with his largest overweight allocation to equities since before the Fed began to tighten. Joining us at Post 9, Phil Camparelli, portfolio manager for JP Morgan Asset Management. Phil, it's great to have you back.
Good to see you.
Certainly, March odds have been cut almost in half here.
Yeah.
Is that a reasonable response to the data?
Yeah, first of all, good news is good news. I just want to be on record as saying that. Good retail sales, good job numbers, all that stuff is good. I think what happened though, Carl, is that in order to get all of that easing to happen, you need one of 2 things. You need either a recession.
What's up,
or
Basic?
20% chance of recession.
Sorry, I know this is probably too loud. I'm getting ready to take this Amazon long.
Inflation to be falling like a stone.
I want to hang on to this. I think I can get a few bucks out of this trade. It's got some momentum on it right now. I'm sure it's going to pull back as soon as I enter it.
So we think March is off the table.
Shit, man, I should have taken it when I had the chance.
We think March is off the table. We see them starting in the second quarter.
Let's see.
Why? Because a 5.5% risk-free rate is probably just too.
I think I'm going to get long this because I think I can hold on to this. If we get a pullback, I think there's some meat on this bone that I could take it to 130. All right. I'm sorry, 130. No, not 130. Not Google. Support, resistance, blah, 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 blah. All right, so the trade line's acting as resistance. I want to see if we can get this gap fill. 153 to like 154. See if we can get back up there. How you doing today, buddy? So SLV, small profit, now it's dropping. Sweet. Good shit. And you were long that, I think, right?
inflation recession story is what we should be worried about anymore, which leads us to believe that we should be overweight equity in our highest overweight since before the Fed started in March.
So then given
Yeah, that's what I thought. That's because like nobody's buying gold or silver, man. Like China, they're in a disaster right now, and they're not buying gold or silver. That's why we haven't been able to get that extension through the highs on the metals, because you need participation, right, from the other countries, and that seems like a reason why you're not really getting much help there with gold and silver to break through those highs. You need buyers, big buyers. All right, so Google's up here, getting ready to go as resistance. So JP Morgan, I'm gonna scan. Let me look at a few charts real quick, and let me see what we have here. So look, JP Morgan is up at our short level. We could have already, what did we say this morning? 169, 170, but 169, this level right here, short, and take a piece of profit off. Dollar is rising, brings down silver. Yeah, yep, and same for well, with energy going down too. But like, if you start to see, like, if you go back to like 07, 09, 08, you had China buying as well, which really helps. And it was funny because I didn't really think about it like that. I'm like, we had the dollar it's been pulling back, and like, it just feels like the dollar, oil, and gold, like, they're all just stuck right where they are, and rates. And I got this answer was, China's not buying gold. The last time China bought gold is when you got that huge rally from 2011, 2012, 13, and you had that nice rip. And I'm like, that makes sense. That makes total sense. It would help, if you had a whole big ass country like that also behind the commodity, in which they're not, because they have other things going on right now. They're just not buying. So, and I actually was thinking about getting short GLD, which I haven't fooled with or looked at in a little while. We've been just hanging out up here. I mean, it's good. Like, this is a good sign. Holding this level here. The longer we stay up here at 19.7, then you got to think we're going to break out. It's definitely looking like it wants to break out. Kinda. Verizon, yeah, Verizon's been a beast lately. Verizon's been a beast. Or at least it was a few weeks ago. Damn, there was the retest there too. Fuck. What, let me see something here. I know. Where's that coming from? Oh, this was the Head and Shoulders. Left shoulder, head, right shoulder, and that's when it tested it, and then it pulled all the way back. And it's been riding it. It's been riding it somewhat ever since.
Well, they have the results, and now the FAA will analyze them. I wouldn't be surprised if we hear something from them maybe next week, but they're in no hurry to announce what the results are and what the next steps will be. This comes on a day
all right, yields are popping this morning.
Is briefing the Senate Commerce Committee behind
yeah, I mean, the longs we already went long. We took a long, it was a little over 50% on the S&Ps, and our targets are hit. 473 was the target. So this morning, I'm not sure if you were here or not, but literally we were right here on that double bottom. We were like, all right, long, got to take it. Like, now's the time. You're gonna know pretty quick. And this move right there was about 65%, if not close to 70. 40-cent entry, and it went to like 64, 65, 67 cents. So that was nice. Yeah, this was a nice move. Now, I took a short on Tesla, so I wasn't prepared for it, but I was on this mic like, yo, guys, long, SPY, if I'm not telling you what to do, but, look for that bounce back to 273. All you're looking for is that bounce back, and, you know, it gave it to you in 4 minutes. They were over 50%. I'm trying to get OBS. This is why I miss trades and shit, because even though we're not moving today, it's because I got like so much stupid shit going on, so much stuff going on. Like I gotta turn my laptops off. I gotta turn that back on. So yeah, that was a nice trade. And then I took Tesla. I got paid really nicely on this trade. I was really happy with it. I don't know what the percentage gain was on it. I'll have to look. But the fill and the exit on this thing was just, the execution was beautiful. Literally, we caught this whole move right here. That whole move was us. I literally bottom ticked that because look at the volume, right? I was like, whoa, we got this drop. And then the volume didn't increase, right? I was like, I wanted to see like some nice volume come in that looked like that, and we never got it. So I just said, yo, I'm taking the whole position off because the volume isn't matching up with what I think's going on, and we said 220, 216 anyway. So yeah, but this paid huge. This was a nice trade. So I was like, this is awesome, right? Get some of those wins under your belt. Tesla doesn't feel like it's moving right now. It's just consolidating. I still think Tesla's got to go higher before it goes lower. I feel like it's got to go higher before it goes lower. And that's the day. That's pretty much the day. You know, other than JP Morgan, like even like right now, I wouldn't trust this. So many people are trying to get short. I wouldn't even fool with it. Now, it could, you know what, because of that, it could shake everybody out, right? And now the institution starts taking it short and they get the follow through, which you don't know that right now, but just by looking at these 1 minute candles, right? Like look how they're close together and they're about the same size. That's like going to give, that looks like it's going to give you that continuation to the downside. But I wouldn't trust it at all because there's no volume. I'm not bothering with it. I'm not giving anything back. So that's that. That's Tesla. I was looking at Amazon because I felt like if the SPY could get up to an area, then maybe Amazon could give us a bounce as well. It just there's a huge gap there, but I still think in order like Amazon, in order for it to go short, like, so the 50-day actually would be a nice long at 148. I would write that down, which I'm going to do. I'm going to write that down. Amazon 148. If we get 148, look for a long on the daily chart. Right? The 50 days lining right up with it. Look at that resistance. Flat top resistance. 50-day is right there as well. That would be a nice setup. How was your weekend, Basic? How was your 3-day weekend, 4-day weekend? There's support, pivot, bang, fill this gap, get up here to 154. I think that can happen. I think we could do that. The RSI is a bit high. 54.
CEOs themselves have urged bank regulators to overhaul these proposed rules or scrap them entirely. Fed Governor Michelle Bowman this morning saying in a speech that tougher capital requirements as proposed could result in, quote, significant harm, end quote, to the U.S. economy, while noting she thinks policymakers can strike a reasonable compromise for the final version. Senator Tim Scott saying in a release today that the proposal is, quote, flawed and must be withdrawn. And most of the bank CEOs addressed this on their respective earnings calls over the last few days. For example, Citi CEO Jane Fraser said she hopes it was either completely revised or very materially. And on Friday, lobbyists from several pro-banking groups said that the rules as they're proposed are illegal. JP Morgan's CFO, when asked about it on a media call, said that suing your regulators is never the preferred option, but it can't be taken off the table. So what happens next? Well, the regulators, which encompass the Fed, the FDIC, and the...
I guess my mic was off. I was just wondering how you guys' weekend was,
disregard the criticism
and what you guys are looking at, if anything. I know it's going to be a slow day,
or they
We
can
could look
tweak
at some
the
real
rules,
estate.
or they can start from scratch. So
could,
a lot of question marks at this
do
juncture.
something.
A note from TD Cowen's this morning said that
Looking at
regulators could
25.
avoid the legal fight if they just amended the capital requirements to have a smaller hike. Carl, because the key issue here
Watch
is
out.
just
This
kind of
might
this
hold,
gap
guys.
between what
Oddly
the
enough, you might get a
regulators say
failed
the
breakout
hike
through the highs here.
implications will be, and what the banks themselves, after having run their own
I'm not going to
models with
put
the
this
rules,
on, but I'm
say
telling
that
you
the
right
capital
now,
requirements will be.
don't
And
be
the banks
surprised
themselves
if this
say,
thing
this is
starts
actually
right
a
now
lot
going
higher, more
higher
like a
to break
30%
through that high
hike to
and
capital,
test like
whereas the regulators have said it's kind
$28.
of on average for the biggest banks, like
Let's see if that
19%,
happens.
which, as you know, it affects lending, it affects buybacks, it affects all sorts of aspects of the banking business.
How significant do you think Bowman's comments were? Not just that changes are needed, but substantive changes about what she called known deficiencies.
Yeah. I think it's very, very notable because she, of course, is a Fed governor, and the Fed, this is led by Michael Barr, but the Fed is obviously tasked with regulating banking system, and they're they're one of the three prongs of regulators that have been
I keep
pushing
talking
these
with the
rules
mic
that have
off.
been worked on for the last 10 years or so. So it's kind of this interesting juncture where there's been so much criticism of these rules. There haven't been as many defenders.
I was going to
We
say,
saw that on Capitol
who's
Hill
defending them, right?
a couple weeks ago when the bank CEOs were taken in front of Congress. There's only one lawmaker who said these are necessary, whereas there are several Republican lawmakers who said that, you know, these are an overreach and we either need to pare these back or scrap them entirely. So interesting, but important for bank investors. Sticking with the banks, now that we've gotten Q4 results from some of the biggest names on Wall Street, it's time to hear from the regionals. Take a look at Pinnacle.
Well, real quick, I can't say I didn't see that coming. Right? That was a beautiful setup here for institutional short. Like, they all knew what they were doing. Low volume break. So when you start seeing candles like that are the same size, if you guys are new, or anybody that's new, you guys will start to see certain things that you'll recognize through time. And I said, this could be some institutional shorting right here where it's low volume and they get that extension they're looking for. And it looks like that's exactly what's happening right now. And what told me that was the size of these candles looking exactly the same. And I'm like, that's a sign we could get some follow through here.
100% of the salary
Small
bank
volume,
associates
small
are
follow
included
through.
in that incentive
Small.
plan. And
Nothing
and
crazy.
So when we give guidance, we include that incentive payout. The way that incentive gets paid is based on us hitting revenue targets and EPS targets. Otherwise, the incentive expense is reduced to bring earnings in line. And so, honestly, it seems like every year as we come out of the gates, we give the expense guidance. People will take and include 100% of a targeted incentive payout. They may account for less revenue growth. And
Do we see a
so
cup and handle here?
It's sometimes confusing to people, but generally
Low volume pullback, get a bounce right off this level. If we get an increase in volume,
how that plan works.
Let's see.
Is it possible to generate positive operating leverage given kind of that dynamic?
Yes. Again, there's the plan would be to have positive operating leverage to grow EPS in an industry where I think peers are projected not to grow EPS. It's our belief we will grow EPS. I think, again, one of the dynamics there, Leslie, is just to illustrate how it works. 2023 is a difficult year for banks. We reduced our incentives by 38%. This year, and so that ends up being harvested into the earnings stream of the company. And so assuming we hit our targets next year and you pay it 100%, you have to get that lift from 62% up to 100%. But all that said, the only way that incentive gets paid is if we've generated positive operating leverage, if we've hit our revenue targets, and if we've hit our EPS targets.
Terry, you know, when the analyst community starts parsing financials these days, a lot of it is about concentration of commercial real estate on the book. They argue that you do have a little bit higher than some peers. Is that a fair argument?
We have really, I think for regional banks, we're pretty well in line. Obviously, regulators use a guideline of 100% of risk-based capital to construction credit, 300% of risk-based capital to total commercial real estate. We're well underneath all those guidelines. I think the more important thing is exactly what gets financed, where it's financed, and how it performs. And all I mean by that is I watch commercial real estate reports all over the country. The markets that we operate here in the Southeast are significantly different than what I see in San Francisco or New England or some of these other markets. And so I jokingly tell our investors, hey, you need to turn the television off and come to Nashville, Tennessee, come to Raleigh, North Carolina, come to Charleston, come to Charlotte, come to Jacksonville, come to some of these other markets that we operate in. We've enjoyed really strong rent
Pretty
growth,
much, we need y'all to buy them up.
2020, which is a
Can you
very
buy these
different
up for me?
dynamic
Can you
and,
take this
plays
off
out
my
the health
hands?
of the commercial real estate portfolio.
Yeah, it's interesting that you mentioned that because
Just
analysts
kidding.
at Piper
I'm just kidding,
say that
though.
your
They
updated
probably
guidance
are
implies
popping.
basically no
You
worsening
know, the
of
weather's
credit
nice,
conditions. So
taxes
is that
are
a
nice,
function of
people
just
are
the
nice.
locations
You
by
know,
which you're exposed
it is
to,
a
or
market
do
that
you
needs
think
to be
that we
tapped
have,
into.
writ large, avoided a severe economic scenario?
Yeah, I think our internal main scenario would be that we're headed for a soft landing, perhaps a modest recession, but we're not looking for a serious recession, so that certainly plays through. But it is critical to understand these southeastern markets. I think a lot of people are familiar with the population migration trends. If you divide the country into 4 quadrants, 3 of the 4 have negative net growth.
What are you gonna do?
Migration.
What are you gonna do,
One
JP?
quadrant,
You gonna
has
break or
positive
what?
growth, and that's the southeast.
Let's see here. Let's see
And
if we can
so,
get
again,
this
these
break.
large urban markets
The volume's
that we
all
operate
dried
in
up,
are
though.
extraordinarily healthy, both in terms of size and growth dynamics and general health measures like unemployment rates and so forth.
Fascinating. When we now have 2 bank CEOs on our air telling viewers to get out of their bubbles and go travel the country, with Jamie Dimon saying that earlier today, and now Terry Turner. Really appreciate it, Terry. Thanks for being here.
Yeah, that's what I said.
Okay,
I said,
thanks
man, it looked like it was going to. It's not moving today. Like I said, I feel like 200 is where it is going, like you say. But I think we need to bring it back up here to like 217.50, 218, and hell, maybe even 220. Right? We need to go back up here before we go down there. And you know, this is just my opinion, but I think we need to get up here. I think Tesla needs to get up there in order for it to get down there. Because I don't think anybody's going to get short down at the lows, knowing that that 200 is support, and it's a major support. You know, I think if we get a bounce, then, you know, we're more likely to get that 220, you know, bring it down to like 3 days, and before you know it, we've gapped down to 200. That's the move I'm looking for. That's the short I'm looking for. Exactly what you just mentioned. I was pretty happy with just getting a really nice solid win under my belt, and I was able to take it right over to the SPY, get a long off of that, or at least call it out, and just beautiful morning. Just beautiful morning. Not going into the week, not rushing, just acting and not overthinking, acting on what I see. Come on. What are you going to do? She's going to go lower, but I don't know. Maybe I'm just selfishly wanting it to go higher before it goes lower. I do think that, though. I think that it needs to pull back, you know, to bring in some liquidity to the short side. I don't know. What is that? What is it called? The SLR rule? It's like the short locate rule or something like that, where it's like 3 days, closing 3 days in a row, red, or it's like a certain, I forget. It's like 3 or 4 days in a row down. I don't know. I'm probably getting it confused. I know you know what it is. I know what it is. I just can't think of it right now. I could look it up. Yeah, they are, man. And I just want to practice what I preach. Because like Boeing, right? I messed that trade up. I was right on the trade. I just needed to put it on when I said I needed to put it on, which was that pre-market high. I got into the trade before it got to that high. I took a loss on that trade, and then it was like I was fighting just to, like, I noticed it started to mess with my conscience. So I'm like, yo, I need to throw that Boeing trade in the trash. Like, I needed to get some wins. Like, I could see that Boeing was messing with me. I was taking the small loss on that trade, and it was it was following me to the next idea. But it was my own stupid fault. Like, it was an easy trade. Like, the pre-market highs get short, and I took it before that. Right here. I ended up getting short, like, right here. Or it was like this pivot high where that line is. When I was like, no, this is where you get short. And look at it. It went right up there. Touched it. And then it sold off. And then you came in with the gap down. And even the contracts I got in here, or I'm sorry, here, they were up. I think these were like $1 something. They opened up the next day at like 2 something. So even if I would have held it, I would have been okay, and I should have. So that trade kind of started to mess me up. And there was another one I got a red trade on, but Apple and I think the SPY, yeah, it was the SPY short that made up for the other loss of this trade. That other than Boeing, there was another trade that I had a small loss on. But it was stupid. I was doing stupid shit. Like, not like I was just like, you know, it was all in my actions. And I think you know, you can control them, you know? Like right now, I would say I wouldn't short Boeing until it's back up to yesterday's high in the 200-day moving average. And if it's not there, don't do anything. You know what I mean? So this right here is where it was. I got short at 230 and my stop loss was at 235 and the IV was already so high. So you're trying to hold $5, right? Even though it still kind of makes sense. Or what, 230, 231 to 234. You know, trying to hold it $3 when the IV is like it was. But you know you're going to get this thing down to 220, right? From 230. So that's still a 3 to 2.5. Almost like it's a 1 to 3, right? You're risking 1 to get 3 of what you risked. But the IV was so high, it was killing me. I was down 50% on that position. So yeah, that right there, just doing that stupid thing messed me up for the next trade that week. But I got 2 green trades, which pretty much paid for those. Which was 100% on Apple and damn near 100% on SPY. I took it off before 100% on the SPY trade. But yeah, because last week, that's what I was dealing with, was this trade here. And there was somewhere else. I can't remember what oh, Google. It was Google. When I should have took the long. And I'm like, nah, I'm just going to stay on the 138 short. Look how strong it was last week with the markets. All because of Boeing. All because I didn't get in when I said I was going to get in. I got in before. And it just felt like it was just like sitting right there with me every time I went to go do something. Can't explain it. So it was good, right? This week we started off solid. Solid start to the week, and the market hasn't even really moved. I am still looking at a Google short, possibly. You know, I don't know if I should take a long. Like, here's what I'm thinking. Like, I'm thinking we get this short up here at 143, right? Get it up at 143. Turn this support into resistance. 142.50 to 143. I would preferably like, you know, I wouldn't mind yesterday's close, and I was thinking about taking a long to get there, but that trade's already long gone over with. And seeing if we can get this 138 fill, which is down here, like right here. So we almost did it today. It's 140. I'm sorry, a 140 support. Where's the SPY at? The SPY's down here. Here's a good way to look at the markets if you guys don't already. All right, if I were to bring up the SPY, okay, Google is there. Well, the SPY's coming in, so Google and the SPY are pretty much matched up. Like, you could use this as the SPY. right? So if that's 1 hour, like if I take you to the SPY, and it's like right there, so you can follow. And if the SPY is leading or Google's lagging or SPY is lagging, you can use it as arbitrage. See, they're just about exactly the same. You have this little area here, this pivot high, right? And Google is right here flirting with that 140, the 140 level, and Google is right there, right? So it's an easy way to look at this. And if you did take that long to 473, you probably should have taken profits. That's also a really nice trade. We bottom ticked this, guys. Right there where that circle is. We bottom ticked this. And it was just a small trade. We were just looking to put on a small trade, get green, put some money in the pocket, and start making money. Start, bringing that equity curve up. The home runs will come. We got to worry about base hits, doubles, and even a triple if we can get away with it. The market's not moving much. I think tomorrow will be a lot better. This week overall will be light because next week we got data, big boy earnings. Like should be a decent week next week, going into the end of January. The volume is shitty, or you know what I mean. So, I'm trying to think here. I still think we have more upside, guys. I don't think we have a problem testing yesterday's close and getting up here to 474 or 475. I'm just going to say it now. I think you see a 475. I think we could pull it back a little bit, and then just like late in the day, you just blast off to 474, 475. The rally will start at 2 o'clock, right? 1:45, 2 o'clock. And you look back, it's 3:15, 3:30, and you're like, oh shit, the market's moved 3 points in an afternoon. So just be aware of that. And I say that because the market's oversold on just about every time in it. Just about every time frame. You have a 15-minute chart or 5-minute chart here. Pull it back to see if you can pull the 5-minute chart. I would like to see if you could get it back here to 472, but 472.20. Let it go up a little higher, have it pull back, hold this level, all right, and pull that RSI back. Look how the volume is also dropped off. Go to like a 30-minute, all right. It's kind of halfway. It's working its way up also, but still kind of low. All right. It's at 47. I mean, it's not bad, but I feel like it's time to start turning things around. Let's go. We could go to an hourly. Look at the 2-hour. It's also at 40. Look at the 4-hour. All right, and then the daily, which is going to be a bit oversold, but it's really not. So I think you could see a lower high put in. So that's why I think, just according to the RSI, we could get ourselves a little bounce. All right. I know I'm talking too much, but, it is a quote-unquote podcast thing. We do have a double bottom here. It's like, what are we going to do? What are we going to do? I would like to see the SPY bounce up into 475, 476, and reject that level again. And then we get a nice pullback. We have a nice double top here. You put in a higher, you ended up closing and opening higher than you did here. And you're getting some divergence from that. Let me see here. Let me see.
Spirit Airlines in trouble once again this morning. Stock cratering after a judge blocked its $3.8 billion takeover by JetBlue. Shares lost about half of their value yesterday, down another 23% again today. TD Cowen airline analyst Helene Becker warns bankruptcy could be next.
Meantime, a Bayer call from Barclays grabbing our attention this morning. The bank says there's a whole lot of noise and very little light for Disney at the moment.
We're about to find out here what the SPY's going to do. But I don't know, guys. That's about all I really have today. We had some really nice green trades. Watch Tesla. Tesla's consolidating here, and see if it can give you a nice little run back to the upside. I think it needs to make that pivot high, or the low. I think it needs to retest this area, and close that gap and possibly go lower. Do something for us. So that's all I got for right now. If I see anything, guys, I'll let you guys know. And I have JP Morgan on watch. Also. All right, you guys know that. I've been wanting to short this thing for a while now. JP Morgan. All right, so JP Morgan's starting to work back up to... This thing's been a pain in the ass all day. 470, 469, okay? The level of resistance is probably up there at 471, so you just watch the volumes, kind of take notice how it's reacting at different levels. Is it rejecting it or is it holding it? Because if it's going to reject an area, you want to see it do it in a decent manner with some volume. That'll give you the inclination that level's resistance. So 169, 170, 50-ish. I don't know if you get to 172. You could. 172 is definitely an area. That would mean that you would have to recover the majority of that earnings pullback. It's so funny. She just said pullback on TV. So we'll see what happens here. Look for a double top, maybe at 169. We'll see. We'll see, guys. I'll let you guys know if I see something and I hop into anything. If you guys have any type of questions, just throw them in the chat. I'll get them answered. Hit the like button for me if you haven't done so. Subscribe. And that's about it. Maybe you could randomly share this to a random person, and that would help, people find the channel that would like to be here. I am watching Tesla just to see if it decides to bounce. This could be a double top here. Oh, dude, I appreciate it, man. Let's see here. I have leave soon helping someone move furniture. Brutal. But that's cool. That's nice of you. Yeah, man. I'll talk to you later this afternoon or tomorrow morning, Basic. You have a good rest of your day. And, if you need anything, just hit me up, bro. It's always good to chat with you.
Talking about Netflix's first mover advantage. This is a company that was founded in '97. Obviously, they weren't streaming at that time.
That's going to be messy. It's going to be messy out there. I don't know how much snow you got or didn't get, but it's messy here. The sun's out, so that should help melt some of the snow we got the past couple days. Anytime, man. Yeah, I know. It's frozen here, too. I felt bad for the cat last night that's outside. I'm like, dude, you got to get under the blankets. Do something because it's freezing. But whatever. So, yeah, I'm going to go get something to drink. I'll be back. See what happens the rest of the day.
Option for streamers enables them to lower the cost and have incredibly low-cost offerings elsewhere around the world. Here, the U.S. market is very saturated, but the place where they're going to be adding subscribers is internationally. It is overseas. So that's a real key piece of this. And then the other question, Leslie, is how do they fit into this streaming landscape? If you see everyone else pull back, Netflix can continue to be the dominant place, the go-to, sort of the must-have, as maybe people will be pulling back on the overall number of streaming options they have. So we're going to be really looking forward to hearing what they say in their earnings, which is just next week. And, of course, that guidance is always what I hone in on for Netflix.
Absolutely. Julia, thanks so much. Coming up, Shein's path to going public is hitting a new roadblock as regulators scrutinize how the company handles its data. We have that story after this quick break.
There's your Verizon. See if this could be a nice long or it's just a nice short. And you're going to get that retest to 38. 39.98. Let me see here. I just keep yawning. Yeah, there is. Got a nice 1,000 cell loader in there. The spread's pretty tight as well. Got a penny spread. It's a good sign. There's a lot sitting on the bid there. There's 59. 59. I assume 5,900. Let me see here though. It's still, like I say, this is a nice area. 38. Prior support, a little bit of a prior resistance, and I haven't traded Verizon in quite some time. It's been a while.
Member.
This is crazy. Sorry, I was listening to this about Didi and Baba and stuff like that. I almost bought Didi, and I'm so glad I didn't. I only bought it.
Our Deirdre Bose is watching that in today's Tech Check. Hey, Dee.
Hey, good
I was
morning,
only going to
Carl.
buy it
So
because of
one the
my
most
mom's
anticipated
name.
IPOs of the year risks not
And it's a
happening
good thing
at
I
all.
didn't.
A source familiar confirms that Shein, which confidentially filed to go public in the U.S. last November, is facing a security review in China, adding that the review centers on
Yeah,
the
I owned it
presence
at like
in the country, and it could impact the planned listing in a few different ways. One, this kind of high-level review by Beijing has derailed IPOs.
yeah,
in the
I owned
past.
it back
all began with
2019,
Chinese ride-hailing company
2018,
Didi. Just days
2020. I
after
bought it
went
again.
public
I bought
on
it.
the New York Stock
I've bought
Exchange. Beijing
and owned this
launched
thing a
similar
bunch of
probe,
times.
ultimately destroying billions of
It's one of my
dollars
favorite
in value
ones.
and leading to its delisting within 1 year. After that, all Chinese companies seeking an IPO were subject to a security review and approval from the government, including TikTok parent ByteDance shelved
Maybe
or
not. I
scrapped
guess I
IPO
didn't.
plans altogether. But perhaps more importantly,
Oh,
this review itself
yeah,
draws attention to
I paid
Shein
up for
as
it.
a Chinese company.
I haven't
has
seen
gone
it
through great
or
lengths
touched it
to
since
position itself as
since I sold it in the
The
60s.
startup moved its headquarters to Singapore
This would be
and
a
is
good-
diversifying its supply chain. Here is Shein's Group Vice Chair Marcelo Clare.
This would be a good buy for anybody looking for a decent name, right? This would be a really good buy at these prices, in my opinion. Maybe I don't think things have fallen off track. I haven't read their balance sheet and all that fun stuff, but you know, Verizon's top tier, man. You gotta have it in there. I feel like.
Beijing's review could be just as tough and far less transparent. Someone described it to me as a black box. Now, this delay could also have broader implications for our IPO market at large. Last valued at $66 billion in the private market, Shein is the highest profile and most highly valued IPO candidate this year. If those plans are thrown off, we may not have that sort of. Shein itself is an important indicator of investor reception to new listings.
Yeah, is there a sense that Shein needs to go public? Given their business model, you know, are they cash flow positive? Like, do they need the actual fundraising from an IPO, or can they kind of sit back, battle these forces for a while, and then go public when they get the necessary green lights?
Well, Leslie, we don't know because its financials are not public and it filed confidentially, so we don't have them. But, I mean, you can only sort of think that if it is pursuing a U.S. listing, it maybe needs the capital to do so. You know, one of the other Chinese companies that we talk about a lot that has made itself a huge presence here in the U.S. is Temu, right? But that is owned by Chinese company Pinduoduo, which is already public. So there's this idea that perhaps they need the capital. And remember, too, that this business model rests on really bargain basement, dirt cheap prices. And what we've seen in the past from these kinds of business models is that they subsidize for a long time just to try and acquire these customers, bring them into the fold, and then they slowly start to raise. So it's possible that they're burning cash now, but looking to become profitable. That's sort of been the business model.
It's just amazing that the phrase regulatory crackdown is never really that far away when you're discussing some of these China giants, Dee. We're going to watch that one closely.
And it just raises so many questions. Don't forget as well sort of the golden shares, right, that were implemented after the Alibaba fiasco, after the Didi fiasco. A lot has changed and changed Chinese companies and investors' minds over the last few years.
Great look at an important story, and more important in the months to come. Deirdre Bosa this morning with Tech Check. Still to come, Redfin's chief economist will join us. She'll discuss why 2024 could be the year that home buyers finally catch a break. When Money Movers continues.
passion.
Welcome back. Home builder sentiment jumping 7 points this morning. While still negative, it's moved 10 points higher in the past 2 months and is at its highest level since September. The move on the back of falling mortgage rates. The 30-year fixed rate is now at a 3-week low. That's
all right. We
more
back.
than 10%
We back.
jump
We back. We
in
back.
mortgage demand week on week. Let's bring in Redfin's chief economist Daryl Fairweather. Daryl, thanks for being here. So, do you think that this moves the needle at all for home
I
buyer
had to grab a
affordability?
drink and something to eat.
Any little improvement in rates does move the needle. It moves it for home buyers, for builders. Rates haven't come down all that much, though, compared to where they were a year ago. So I think we still need rates to fall more for home buyers and builders to feel confident again.
So what, we tease this segment as
So real quick, what I'm thinking, I'm thinking about
as we've discussed kind of is
what this morning, like I said, look at the daily chart for JP Morgan. I'm thinking about putting a short on. If we can just get a pop. See this, when it pulls back, it's going to drag this 9 EMA down. I feel like I missed my shot at 169. I want to get short. That's a nice rejection of this support level. Pulls back into it. I want to look to see. I'm going to get some time on this. Let me go run through the contracts real quick, and I will let you guys know what contract I decide to go with.
This year compared to last year, but from a historical perspective, it's still not a great time to be a home buyer.
What does it mean for housing prices overall if you're seeing more negotiations take place in these conversations for homes for sale? What does that mean for the values of homes that are already occupied?
I don't think a homeowner will be guaranteed an increase in equity this year. It may happen in some places that are gaining home buyers, Sacramento and Central California, for example. But other places where people are leaving, those home values may continue to fall. And at the very least, people can't be guaranteed an increase in their home values.
Daryl, are you surprised at some of the high-frequency data that looks at, say, asking rents down 5 months in a row, down year on year, not feeding into shelter components of CPI? When do you think that really starts to happen in force?
I got to check the open interest
It
on
should
this. Hold
happen.
on.
The way that CPI measures the cost of housing, it's a bit indirect. It's a survey, and those survey respondents, they might be paying attention to what's happened to them personally. Like, has their rent gone up since the last time they got their lease renewed, which may have been 2 years ago. So I think that the current data that we see is going to start showing up eventually, but there may be months where it doesn't look like it's improving.
As you look at the mortgage lock-in rate, given the current dynamics of interest rates and the potential for a pivot, maybe in the second half of this year, depending on how things go, 89% of people with mortgages have an interest rate below 6%, and that's actually down from 93% in 2022. How does that dynamic shift consumer behavior as it pertains to their willingness to move out of their homes and or stay put?
We are still feeling the consequences of the loose monetary policy we had during the pandemic. When mortgage rates were at 3%, so many people, anybody rational, would go out and get a 3% mortgage at that rate, at a 30-year fixed rate they can hold on to for decades. But that locks people in place. We're seeing some more new listings pop on because life happens and people need to move on, and that mortgage rate may not be enough for them to stay. It's really just a financial decision.
That's a nice rejection on the SPY, guys. Right there at 473. Again, that was the target. So the SPY's pulling off of 473. You're going to need some real volume if you're going to get any type of extension.
That's why your point about just the idiosyncratic markets is important. Daryl, thank you. Appreciate it.
Thank you.
After a big year for workers' rights in 2023, we're already seeing the momentum continue this year with Wells Fargo employees voting to unionize a second branch. So where else might union activity pick up? Our Kate Rogers has been following this story closely. Hi, Kate.
Hey, Leslie. Well, 2023, of course, was a banner year for the U.S. labor movement with grassroots
She said
efforts
banner
from workers
year.
in entertainment, airlines, healthcare, and more. Labor analysts project that momentum and public support for unions near all-time highs will bolster similar optimism in the year to come. Now, overall, union petitions only rose 3% in fiscal year 2023.
Anybody that's
according to
ran
the
ads,
National
y'all know
Labor
about that
Relations
banner
Board.
year shit.
But according to Cornell's
You guys
strike
know
tracker,
exactly what
the
that
number
means.
of workers on strike essentially doubled from 2022 to 2023 to nearly 500,000. And the workers that
know,
went
I
on
seen
strike
that.
got big results from Hollywood to Detroit.
Those strikes were notable for the gains that they gave to the workers who actually went on strike. So, in other words, the strikes were generally successful
It's
and
insane.
led to
At least-
better terms and
So
conditions
let me turn
of
this down.
employment
But around
and a
my way,
stronger-
yo, Walgreens is packed. Even your way. I mean, you're around the corner. You know what I mean? You're not too far from me as well. And I know where I'm at. Like, they have the 24-hour Johns, and that's about it. Like if you go anywhere else, it's like nasty, or it's just like Rite Aid's going out of business. They don't clean their bathrooms. It's kind of like, where else are you going to go if you don't go to Walgreens? You know what I mean? Other than you have your mom and pop pharmacies, but from what I see, which is crazy. I don't know why this is. This news came out last week, didn't it? It's like 2 weeks ago. Oh, it was the earnings. That's crazy. Wow. Holy shit. Dude, that's insane. This has got to be a buy. I don't know. Maybe shit's really bad. I don't know. I'm not sure. That's crazy. I always thought like Walgreens was with Walmart, but holy smokes. That is crazy, bro. Like, you really are at those levels. That's no joke. This thing might go bankrupt. I'm going to be honest. This thing could go bankrupt. You know what this reminds me of? This reminds me of Credit Suisse. I know it's not, banking shit, but that reminds me of Credit Suisse.
Speaking of the consumer incomes, real incomes are growing, and that certainly feeds the retail sales number today, along with some of the capital gains we've had in the last few months.
Real income's growing, credit is growing, and we're seeing that back at levels, that we've seen kind of.
It's wild. It's wild.
Obviously, the market reacting to that today, with the Nasdaq coming off of its lows, but still down about 0.8%. The S&P down about 0.5%, and the Dow essentially flat today. So it's really the growthier names that are taking some profits off the table today.
There it is, guys. What did we say? Looked at that pullback, and I said watch for a bounce at the 23.6 fib, and it's doing it now. I think that's it, though. Because you need a big increase in volume, and I think people are just about done.
The Judge at Post 9. Let's get to the half.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The state of the markets is more evidence of a resilient economy. Well, that sends rates rising, and stocks are trying to make sense of all of that. We'll debate it with the investment committee. Joining me for the hour today, Joe Terranova, Jenny Harrington, Jim Leventhal, Rob Sechin. Let's check the markets because we are red across the board. There you go. Dow's off the lows. Most of the major averages are. NASDAQ is weak today, though. Down right now by about, just shy of 1%. Feels like to me, Rob, the market is struggling to figure out, like, what retail sales today, what all of it means for Fed policy. You see, the March expectations coming down a bit on that strong number. So we're twisted trying to figure out exactly what the road ahead is going to look like for Fed policy, because we've built in a lot of expectations.
No question. I think the way to think about it is, let's realize in 23 we came in short bearish and expecting the worst. And in 24, we came in long bullish and expecting the best. And I think what's happening right now is that markets are pushing
My
back
monitor's
against that
going
narrative.
nuts. It's got to
As are
chill.
we. I think there's going to be a lot of opportunity this year. We can talk about the playbook in a little bit, but there is a wide range of outcomes that could happen with equities. I mean, you can see a scenario where the Fed engineers a soft landing and we get to the 5,200 that Tom Lee's talking about. That's nirvana. Has to be near perfection.
That's kind of the top end of your range, too, in the best case scenario for your outlook for this year, right?
That is. And everything has to go right in that scenario. We suspect, though, that we're going to be challenged throughout the year. I think what we say is we're data dependent. So we're hanging on really every word, every data point to be able to see opportunities at the lower end of the range. So what we would tell our clients is that we want to be mindful buyers if the market gives us that opportunity to do so. And we want to be pausers because we're long-term investors. There's no question about it. We're not selling when the market gets to the upper end of the range. We're undulating the accelerator and reacting accordingly. And I think now's the time to pause and see if it's a pause that refreshes. You know, the bond market's sending a lot of various signals, right? The 2 year specifically. And is it one of worry? Truth is.
All right, so what I'm doing is, look, there goes JP Morgan, guys. JP Morgan's starting to break that level. I might just have to get in.
Lead you to believe.
What I was going to say is I was looking at the open interest to get like some time on this thing and really catch the move.
Then we start to think about, well, what about a policy mistake? Fed stays too tight for too long. It leads you to what Waller said yesterday. And remember, he's sort of emerged as this person within the Fed that, you know, he arguably caused this whole rally from the end of October until the end of the year. And he now seems to have put a little cold water on the rally over the last couple of days and caused this move higher in interest rates, where he says that policy is set properly. Those are quotes. That the Fed should lower rates, quote, methodically and carefully. No reason for the Fed to move rapidly as in prior easing cycles. It goes to where I started. We're not really sure what's exactly happening and how the Fed's going to react to it. But the market has priced a lot of stuff in.
Yeah, and I think it's safe to say that we're not sure. I'm not waking up in the middle of the night worrying about the markets right now. I will acknowledge to everyone watching that this is a heavy tape right now. I mean, no question about it. This is a heavy tape. And I think that this is just simply an adjustment to the idea that we're not getting a rate cut in March, and we shouldn't have gotten a rate cut in March.
I'm trying, guys. I'm
very
trying.
likely
I'm
to
going to
get
miss
one in
it.
May.
God damn it.
And I think the market just simply got ahead of itself. But I do still commit to my overarching belief that this is a year in which earnings matter far more than the Fed. We're talking about when the Fed's going to cut, not if they're going to cut. We're talking about the Fed cutting, not how high are they going to continue to raise rates. And that's a complete tone change.
All right, so I'm looking at next week 65s. Next week 165s. All right, next week 165s. They were, oh my God. They're 10 cents higher. They're 10 cents higher. That's up to you if you guys want to pay for it. I want to try to catch a bounce back. See if I can get a 75 fill. I'm going to try to limit order in this. Let's see, where's it at right now? Done. All right, let's see what happens. See if I can catch a fill. It's going to go, we could probably get a better price. I'm in. All right, well, I have a starter position put on here. It's probably going to bounce, but I want to hold this. This is for January 26th. Where are we at here? We got a few people here. If you guys could, if you haven't done so already, just do us a solid. Hit the like button. Subscribe if you haven't already done so. We are in those positions right now. We are in that position right now. JP Morgan. Just sit back and we'll monitor this thing, okay?
pushed valuations offside. The way I look at it is, if we can get to consensus earnings, which is $247 a share, that's assuming 11% growth over last year. You put a 20 times multiple on that, that gets you to 4,900. You put an 18 times multiple on that, that gets you to 4,400. So I look at it like a range. If we can have Rob's perfect scenario, right? Everything goes great. I think we get to 4,900. That's up 4% and change from here. If we're kind of in, valuations not being totally offsides, hovering at 18 times, that's down 7% from here. So I think it's offsides, but I think the magnitude this year should be more tame than what we've seen in the past 2 years. I mean, we're coming off of some crazy emotional swings, right? Thinking about 2022 with the market being down 18, last year with it being up 26. I kind of like where we are right now because we can point to anything. We can point to everything, anything, but I think the reality is we just need time to digest. And I think it's a pretty healthy, I would be thrilled if we end this year flat after a plus 26% year. So I think it's a healthy place to be in where we're not getting crazy with overly robust expectations.
What do you think about what Diamond said?
I think there are always concerns, whether it's geopolitical or economic. I think in 2024, yes, we have concerns. And I think one of those concerns is what you cited before, and that is ultimately what the direction of monetary policy is going to be. Are they going to make a mistake and stay too long? I think that's the risk, that they do stay too long. I also think when you take the totality of the first 17 calendar days of January, what's missing clearly to me is follow-through. Follow-through from where we were on Wednesday, December 27th, when a 10-year Treasury was 3.78, and we were talking about a 10-year Treasury falling to 3.50. You never got that follow-through. And Scott, because you didn't get the follow-through, once again, you're seeing that capital is frozen. You've talked to a lot of people in the asset management industry. They will tell you that a lot of the money that was in motion at the end of the year is once again frozen because you're challenged by a 10-year Treasury above 10%. And people are still sitting in those cash yielding equivalents.
Maybe you're challenged by valuation because you're trying in your own mind to justify the valuation of the market when you look at where we are today versus the 10-year average. The Dow, for example, 17.5 times today, 16.5 times is the 10-year, Rob. S&P 500 today, 19.5 times. 10-year average, 17.8. NASDAQ 100 today's 25. It's a 10-year historical average is 21.7. So we have the Dean evaluation from NYU, Aswath Damodaran, on Closing Bell with me yesterday, and he said, yeah, it's extended. Listen to what he said.
I think right now the market is overvalued. I mean, my estimate is about 9-10%. And part of the reason, I think, is the expectations game has turned against the market. I mean, if you remember at the start of last year, when recession was almost guaranteed, rates were going to go up, inflation was out of control. And every strategist that you had essentially said it was going to be a terrible year for stocks. Turned out to be the exact
feels good to take a trade, and as soon as you take it, you're nice and green, right? Let's get those likes up, or I know we're not working with much here, but if you could, share it, like it, that would be awesome. We would greatly appreciate it.
Why
we in it to win
I
it,
think
baby.
Stocks
Let's
are in
go.
a dangerous place right now.
What do you think?
I think he's right, at least in the short run, because even if you look out 2 years and you go to 25 and you assume that the earnings deliver and you're at 270, you're still at 17.5 times. It's still a very frothy market from a valuation perspective. And that's why earnings is so important right now. And if you look at the Magnificent Seven, let's say, and you've seen a dichotomy this year, those that are growing their earnings quite substantially are performing. Those that aren't, the Apples, the Teslas, are really struggling from a performance standpoint year to date. Microsoft, Google, Meta, doing great because they have earnings expectations that are up and they're expected to deliver. So it is a story of earnings delivery, and we think you want to hug that quality trade. Now, that's a trade that's worked for a year and a half.
Well, look, we came into this year thinking that there was going to be a shift from this so-called quality, like mega cap, that's what you're speaking of, obviously, and it was going to be this broadening out rally because we were going to pull it off. Pull the soft landing off, Fed's going to cut, economy's going to hang in and maybe no landing at all, and all is going to be right in the world. But Jamie Dimon suggests maybe things are a little bit ahead of themselves. Damodaran says maybe valuation is ahead of itself. That is exactly why there's been a move back to quality. If you look at the performance.
And like I said, if you guys want to, go ahead. Take a piece off. Take a piece of profit off. All right? There's no problem in that. All right? There's nothing wrong with that. All right? I know we just got in it, but if you want to take a piece off, you know, it's, you know, depending on what you got in. All right? Don't be scared. It gives you the extension. Take a piece off. It pulls back. It extends further. Take some off. All right? The gap down is what we really want to look for into tomorrow and things like that to see if we can get ourselves a nice gap down. We'll see what happens here. See if we can extend the rest of the day and try to take this thing down to lows. And possibly, hopefully, get a gap down. That would be nice.
Times is not expensive. And some people are going to say, well, it's a higher interest rate environment than it was 2 years ago. So what? The 10-year averaged 5.5% in the 90s, and you had low 20s multiple for most of the last half of the 90s.
They're
so
cheap for a reason. They're cheap for a reason.
Which is cheap for a reason?
The ones that you cite are the valuation is cheap, small caps and these other areas of the market.
I'm talking about the other 493.
Of course, they're much cheaper.
But can I say something on
is
that?
JP Morgan cheap at 10 times?
JP Morgan's had a huge run, so that's why you even question that now.
Here's the thing. They're cheap. Sorry. I'm so excited about this topic.
Obviously.
They're cheap compared to the S&P. They always have been. They always will be. What matters is that they're cheap compared to their historical levels. So you take mid cap 15.2 times, small cap 15.4, MSCI ACWI. Those are all about 3 points lower than their historical averages. They always trade cheap to the S&P. But where they are now, they're not cheap. They're always cheap for a reason, but right now they're stupidly cheap.
How did we flip the conversation? We were talking about expensive. What they are is not expensive. You cannot say that small caps are expensive.
But here's what's happened, though. The burst of activity at the end of last year threw everything off. Because the stocks ran up so much.
It was rates-driven, though, Scott. It was rates-driven. It was 100% rates-driven.
Right.
And so you have this dichotomy between cheap for a reason and quality names that are cheap, because you can look at international indices, small cap indices, and you will find value in there where there is earnings to support those names. And then you'll look at others that have rallied dramatically, all on the back of expectations of very large rate cuts that are not materializing, that the market is pushing back against
Jim
now.
is trying to make the argument.
I don't think he's making a market call.
He's trying to make the argument that earnings are going to be supportive of those 493 other names. Your whole argument is based on that.
That is the central thesis of my argument.
Yes, and the reason why there's been a reversion back towards mega cap to start this year is because that seems to be thrown in question now. About some of the data has been squirrely. The Fed direction is not so clear, certainly like people thought it was when the calendar made the turn. So you go right back to what you believe in. Balance sheets, cash, mega cap.
Scott, I wouldn't disagree, but let me add to what you just said as far as reasons why the market is definitely heavy, as I said, in the first 3 weeks. There's a lot going on. There is questions about earnings. There's always questions about earnings projections, folks. Always, okay? But if you look at GDP growth, where it is around 2.2%, margins improving. I've said this for a long time. You look at the PPI so far below CPI, that equates to margin improvements. It is likely to get that earnings growth. What we're not talking about is all the other stuff, and there's a lot of it, okay? The Middle East is this close to blowing up. One stupid thing on the northern border of Israel, and that's partly what the market's worried about. It's also worried about politics here in the U.S. and elections across the globe. My point on this is not to say that there hasn't been a rotation of quality. There has been. My point is to say that outside of that quality, if we're talking about valuation in the markets and being overvalued, it's in those FANGMA / quality names. It is not in the small caps at 15 times this year's earnings.
Yeah.
Yeah, I think we're kind of all over the place. I agree with Jimmy when you're talking about valuation. Small caps are not overvalued, but your point is well taken, and your point is at the end of the year, you saw capital going into the neglected areas of the market. And it's because of what I identified at the top of the show and what Rob just also mentioned. And it's because rates looked like they were going to move significantly lower. And they have not. And there's an effect of rates moving higher on the balance sheets of companies that are not as profitable as the mega caps. So really what has not unfolded so far this year as rates have risen is that people have begun to shed their exposure to these quality names and move into the areas of the market that were neglected last year and are reliant on what the cost of capital is. And that process isn't going to unfold unless you see yields begin to retreat. If yields stay elevated, this is the formation we're going to have. And I think you're going to have this formation through the first quarter.
I don't think Jimmy's argument that all these other stocks are cheap or undervalued is the argument. There is no argument to that. Yes, they are cheaper, okay? They're cheaper. There's a lack of confidence to buy those names. It has nothing to do with the valuation of those stocks. It has everything to do with the confidence on the direction of where we're going and what the Fed's going to do. Period. End of story.
Can I ask Joe a question that directly ties into this? Let me do this to you. What happens if the yield curve uninverts? What happens to the market?
The yield curve looked like it was going to uninvert.
Yeah, now it's reinverting.
Yesterday, we were sitting on the
by what, 25 basis points? I mean, we were talking 125 basis points 6 months ago.
Okay.
My point being is that's an indication of economic strength.
Okay. Yesterday, the yield curve 2 to 10 was negative 15 basis points. Okay, we were coming very close to getting back to disinverting. Today, we're seeing a dramatic move in the 2-year. Now the disinversion is lost. It's inverting. It's deepening. It's minus 25 basis points. So I think, no, but Jimmy, I think the right word to use, okay, is tell me if the 7 stocks, forget the other 493, because in the other 493, you could find opportunities. I completely agree with you, okay? JP Morgan being one of them, we know the list. But what you have to acknowledge is those 7 stocks are incredibly attractive in the type of environment that we are in right now.
All 7, Joe?
And profitability.
All 7?
Take out Tesla. Profitability is being prioritized. What your margins are. You're seeing when companies are missing, like Morgan Stanley yesterday. It was a margin miss. When you're missing on the margin, the market is punishing you for that miss. And I think that's incredibly important. We're back to a place where the fundamental metrics are going to matter. And you can't tell me that you're going to find better fundamental metrics than you could find with Microsoft, Alphabet, Apple, and Amazon.
Let's talk some others in quotes. Interactive brokers. Since we're talking about earnings and we're talking about others and we're talking about financials, let's talk about interactive brokers, because shares were down about 4% and then they turned around and went positive. Earnings missed, revs beat. What's up?
They sure were. Net interest income, clearly in 2024, if rates are going to move lower, net interest income is going to come under pressure. They did an excellent job on the call, CEO Thomas Peterffy, of explaining that they had strong confidence that, in fact, they'd be able to overcome net interest income on the decline. I spoke about margins. Pre-tax margins for interactive brokers, 72%. Is that knowing how to manage the business? That's a fantastic job. Futures and options trading increased significantly. That indicates risk management is clearly being embedded on the part of institutional and retail investors. The stock reversed quickly. I think it's approaching $90 once again. And I think this stock ultimately will see $100 because they are perfecting in a capital market environment where you're seeing increased activity.
Jenny, Schwab. Shares were down a lot. Now, let's take a look at a real-time look at Schwab, because they seem to have pared some of the losses. So they have, in fact, done that as we've worked to noon here in the East. What's your take here?
So they reported earnings, and like top line, EPS came in 6% ahead. But once you took out taxes, you realize it was down by 3%. And I think that kind of jarred, I don't know, the algorithmic trading programs, because again, no one with a brain would have read these earnings and said, boy, the stock should be down 7 or 8%. So then people actually started listening, thinking about what was going on. And what they saw was that total client assets are up 21% year over year. There's a lot of noise in here. There's still the TD acquisition sorting through. They're seeing the end of cash sorting. But once you step back, here's what you have. You have a company that's trading at 17 times earnings, and you've got earnings growth of 17%, 28%, 19% expected for the next 3 years. So when we talk about, the Mag 7, the top 10, I like that setup of valuation plus that level of earnings growth better than anything in the top 10. And I think these are the kind of things that ultimately drive the 493 this year.
All right, we're going to take a quick break. When we come back, we have portfolio plays to discuss. JetBlue, Disney, Alibaba are all on the move today. We all have ownership in them as well. We'll get those trades next.
Like I said, I'm still here, guys. I was just listening to that. I was kind of just eating. If you guys end up taking those JP Morgans, just be careful. Buy close to the money. Understand what it is you're doing. All right? Understand what it is you're doing. If you don't have an idea of what you're doing, or you think you do, and then it turns out you didn't have an idea, give me a shout. We can help actually teach you, understanding how to do this the correct way. Because I assure you, ain't nobody going to give you some of the other stuff that we went through this morning. So far, 3 green trades. I do have a limit order out at 82 cents just to take a piece off. I was looking at those deltas for JP Morgan. I want to stick to my targets, but it looks like the deltas on those are a little bit higher than what I wanted, and I kind of rushed into it. It's all good. I don't really care. I will probably, if it starts to move in that direction, and I see it starting to get up to like 82 cents or so, I'll just limit order up to like 83. I'll see what it's doing, see how it reacts and stuff like that. Again, the deltas on those were a little high, but, it is what it is. I still think we can get a few dollars out of this. I just wanted to relate that in case you guys, I don't want you guys to enter. The entry should have been up here, like we said, at 169, but I was off trading something else. I missed this bounce here. I was still watching it, and I noticed it starting to roll over a bit, so I put it on. All right, it's all you can do. All right, so if you start seeing this thing go against you, you got to understand the options chain and how to read the options chain, because you don't hurt yourself.
All right, we're back.
All right, you got to know what you're doing.
Stocks that are on the move here. And there's news around JetBlue and Spirit.
It shouldn't be too hard to get these things down to 167.50.
On this
My
deal,
goal
down
is
a bunch. So what do we do here? Look at that. It's down almost 10%.
At least, for like a nice
we bought this before the Spirit deal was announced, and so the stock got hammered
would
on
be
the Spirit deal.
like
Spirit deal
down here towards yesterday's.
Now it's down 9%
And if
today.
you notice,
think
like towards yesterday's
investors
like
hated the
open,
Spirit deal and drove the
if
share
you
price
notice,
down.
it
They
looks
loved
like
that
the
it was
market's
over.
trying to pull back too. All right. From like, if I'm looking at the S&Ps and the Dow, let's go look at the Dow. It did there for a minute. All right. This was the spot that I said I was going to look for a long on the SPY. So there is there's a hedge, right? JP Morgan with the short, and you could go with the SPY long. Okay. In case you get a bounce off that 472, 471.50 area. Just an idea. That's all that is. Yeah, 471.50 looks like a bit of support there. What was I going to say? So yeah, looks like the market's, pulling itself down. I will and should have a piece getting ready to come off. All right, at 82 cents on JP Morgan. I'll let you guys know if I get filled. All right, and again, like I said, I'm going to if I start to see, you know, some continuation, I'll just bring that order down, and I'll just let it. I'll try to squeeze a little bit out of that first take profit, but I want to take a little off because of this delta that's on there, and then we'll see if we get that gap fill or somewhat of a gap down tomorrow and get the real bulk move out of these. So yeah, we got that on. Tesla, that was a nice trade. Missed the SPY long. If you missed that, it's all, you know, that was over a 50% trade. So it looks like we're going to roll over here. Let's see if we can get some volume to start coming in here. I might jump these up to like 83. I might be testing it. I will turn on the camera real quick. I guess it's frozen. I don't know the song from Frozen, but here we go. Here we go. Let's see. Activate. All right, activation. Activated. All right. So again, I have a limit order out right now at 82 cents. The spread, obviously, it'll have to get up to like 83 or so to start getting this. But again, depends on if you get that follow through. You can see right there, it's not doing it because you have orders. You know, you would. We'll see. We'll see what happens. You can see it's just stopping there in front of 81. So I got it above 81 in case it does give it to us, and then somebody out there market orders and they take a higher price, right? So that's why it's always good to do those type of things. Again, you can just randomly get filled. You got a lot sitting there at the 80. You know, this thing really hasn't even moved yet. Like I said, with this trade, I think the majority of the move is going to be, you know, overnight. And there's a SPY breaking 471.50, pulling down. All right, let's see what this afternoon brings. It's only 12:30. We still got a few minutes. It's still early in the day. You got the sun blinding me. I wish I could turn on some music. And if you guys have any questions or anything for me, throw them in the chat. You know, I'd be glad to help you guys with anything, if you guys even need anything. I'm not saying that you guys do. Yeah. Who? Let me ask you guys a question. Who would want to go buy a house? Who would want to go buy a rental property if we could get the right price? Who would want to go in? Like, as a group, who would want to do something like that? And actually let's go make some money, right? Get together, put up some money, and go make some money, right? Just like we're doing now. Come on, you can do it. Give it to me. Just 2 more cents. Get a little more follow through. Probably get a bounce here. 15-minute trade line and stuff. Oh yeah, they're all packed like sardines at the 81 cent level. Let's go, JP. Let's go, JP. Let's see here. So that would be what would that be from the entry price? That would be 10%. Hold on. What? Yeah, that would be about 10%. 82 cent exit, if we get it, would be like 15, 13, 14. I'd have to do the math on that. But again, that's just to take some risk off and lock in a little bit of gains, and it's to manage your risk. It's not really to make. It's not there to make money. I mean, it is. Don't get me wrong. It is there to make money, to put some of that money in your pocket in case the trade goes sideways. But come on, let's go. Give it to us. Knock them out. You got them packed in at 80 cents. They're trying to get them to drop the bids. There we go. Let's go. Let's go. There we go. I got one filled, guys. Let's go. That is one off the board. Beautiful day today, guys. I fucking love it. Love it.
Secretary of State Antony Blinken is reportedly stranded in Davos after his Boeing 737 plane broke down due to an oxygen leak that couldn't be repaired. According to a Bloomberg report, a smaller jet was being flown from Brussels to fly Blinken back to D.C. after attending the World...
Let's get some follow through there. I just wanted to log some of this stuff again. Look for that 167.50. It should give you 83. That's why I say it should give you about 83, 84 cents. If you can get, if it'll give you that. All right, it's giving you the trade. So don't, you know, it's okay to take profits, right? You want to take profits on these extensions. It's giving you the direction. All right, so just give it time. Let the trade play out. You know, even if you got to give yourself a month. You know, again, it doesn't mean that it's going to go down. All right, it doesn't mean we're going to get a gap down. I mean, I could easily look at this 3-minute chart and say, oh, shit, look at that volume. Look at that volume there. Wow. All right. So, we are officially red on JP Morgan. Not on our trade, but JP Morgan is red. So, hopefully you guys were able to take part in that from the 76 entry, 75, 76 cent entry. I've been wanting this trade, guys. This is the one that I've been wanting. I've been watching JP Morgan for 3 weeks now. And we've been talking about this. We almost got short earnings. I traded... What did I trade? It wasn't Apple, was it? I can't remember what it was. What did I try? I think I missed... I forget what I was watching Friday. But we were watching JP Morgan. We came in on Friday and we said JP Morgan's on the top of the list. There you go, guys. There's an 85. If you guys got to take a piece off. I would. Got to take some off there on that extension. That's a nice payday just in that little bit of time. We still have the rest of the day to go. All right. You may get you still might be able to get like a 168 entry. You might. I'm not sure though. Let's go, guys. Let's go. And people say options are a scam. No, the fact that you hang out with someone or like, you know what I mean? It's like invest in yourself and learn how to do this shit. All right? Options are not scams. They're only a scam to the people that don't know how to trade them. I mean, every day, guys, it's not hard to pull money out like this whole... It's funny when you see people trying to sell you guys to sell subscriptions and stuff like that. How it's this crazy thing that they made money in the markets. It's not hard. It's not. Sometimes we make it hard on ourselves. A lot of the times. I take that back. A lot of times. But like, to make money in the markets, it's like, it's not that hard. It's not that difficult. It's really not. All right. Big deal. Oh, guys, think about this. We went 100%. We had 500%ers this week. You know? We had one, what was it? Not yesterday. 2 last week. 2 last week. Ourselves. Alright, so, and again, I'm trying to think if 95 cents is reachable. 93 cents, maybe? I'm going to try to take another piece down here at low of day. This will be the next area if we can get it. Alright. That will be the next, one of the next areas. I'm going to go scan around. So I got to put in... So it's at 80. So the bid ask is at 84.86 right now. So let's see. Let's find out what would it be. Let's see. 28, 62. There we go. Let's go. 87. 87, 66. So that should be about $1.10 down here, guys, from 77 cents. 75 from our entry. So maybe I'll put $1. I'll limit order $1. All right, so that circle, guys, is where I would like to get JP Morgan down to. All right, hopefully I can take it in front of this. I'll have to keep my eye on it. Let me set an order. Let me set a reminder here. Like I am even tempted just to take another piece off here in case we get that bounce and then re-enter half of what if I take some off here at like 86 cents. Like that's also going through my head would be to take half off right now, but then reload here in the afternoon up at VWAP 168. That's really on my mind right now. I don't want to screw this trade up though. So I think down here 167.15 we should be at like $1.10. Again, it's going to depend on how fast or how slow we get there, but like $1.10, $1.15, $1.12. You know, I feel like that is very achievable. 60, what is that? A 60-cent move. We're at 71 cents, and to get to so that'd be a 61 cent, 165.28. So 96, 106. 96, 106, 7. Yeah, so I think like a 110. I think it should put us around like $1.10. Right? A little below, a little above. And again, that's also going to depend on how fast or slow we get there. All right, let's go scan the markets and relax a bit. Yes, let me set an alert. How do we set an alert? Do you guys know how to set an alert for Thinkorswim? All right. I want to put it. No, come on. I feel like I want to put it. Why is it not moving? Oh my gosh, you're killing me, bro. Cancel. Alright, come on. Dude, I gotta take some off on this run, guys. This thing is straight down. I feel like we're gonna get a bounce. And I can just enter this again up here at a better price. So if you guys haven't taken profit, you guys need to, because it's going to really suck to watch these things go back to where we entered up here. The most of this money is going to be made if we can get a gap down. If we can get a gap down. And just really start to get some follow through the rest of the day. Let me bring up a 15-minute chart and stuff. again, I think we got on these at a really good time. I think we got on these at a really good time, guys. Like, just as it was starting to break down, yes, it would be nice to be up at the highs from the earnings, but, you know, it's all good. It's all good. Alert when mark at or above we're pretty much freaking there now.
Rob Sechan, of course, is here today, hasn't given his yet. What do you think?
Biotech, IBB, if you want the ETF. Why is it hated? It's relative performance.
Yeah,
it's been an absolute stinker. Underperforming the S&P by 20%.
167.20.
Largest since the 90s, and by 40% since 2020. And this is despite what's happening in the healthcare space. So why do we like it? Reasonable valuations, returns to earnings growth, low expectations, slightly improving sentiment. You've had some people talk about it on the show this year and all across the net.
All right, we got the order in, guys.
And, you know, when we look at this, we mainly own it through securities.
All right.
It's been an underperforming the S&P by 20% last year, which is the largest since the 90s, and by 40% since 2020. And this is despite what's happening in the healthcare space. So why do we like it? Reasonable.
Gotta love that I put a limit. Gotta love when I put that down there. It's really starting to sink down into that level. Again, I will try to. Sorry, I gotta use the restroom. My stomach hurts. I will try to, you know, continue to play this if we get a bounce. All right, so keep your eyes on the markets, the overall index, the overall banking sector. If you're in this trade, manage this trade appropriately. If it's paying you, take profits. I don't want to hear anybody saying that they got whooped. And the worst feeling is when you are up on a trade and you don't take it, or take some off because you think you only bought 5 of them, or you bought 2, right? Take half off. I don't care if it's paying you $5. Take half off, okay? Take half off, and it gives you an extension. Take another one off. It doesn't matter. 10 is better than going negative. 100 is better than going negative, and accumulate it, right? This is a lifelong thing here where we're going to build our net worth. All right, that's the goal. The goal is not to try and get rich quick, because it's not going to happen. You're going to get your ass busted. All right, you're going to over leverage yourself. You're just going to get yourself hurt. That's all that's going to happen. All right, I'm really happy with today. I am really happy with today. All right, you hit 90 cents there, guys. So we, 74 on 90, like that's 20 cents. 20 cents on 100 is 20%. Think about that. We're in at 70, the low 70s. So, that's probably 30% right there, just during lunchtime. Let's get it. Let's go, guys.
More important point is what Jim said, which is within the biotech, which I think it kind of, again, it goes back to small cap, mid cap, whatever it is. Just go in, dig down, do the work, and choose. Like, each of these areas have really great opportunities.
That's going to lead you to the more mega biotech names, though, right? I mean, that's where we're all going to be because of the quality associated with
But my
those.
point is, like, there's pockets out there where there's opportunity available, and like biotech is rich with opportunity because the entire thing's been thrown out. So sort through, and you're going to find gems out there. So yeah, Regeneron's been fantastic.
We also own Regeneron. We own Vertex, and then keep in mind, Eli Lilly is trading like a biotech. 1 point on biotechs overall. Let's remember, as rates rise, it's a little bit of a challenging environment for them.
All right, coming up, we are going to trade more stocks on the move today. We've got 2 big winners, 2 big losers in today's trade. But first, Mike Santoli, his midday word is next.
It's your Verizon.
All right, back on the half. There he is, senior markets commentator Mike Santoli with his midday word. This really does feel like the market's not really sure now what to make of that retail sales and yields going back up. You put Waller into the stew, and I'm not sure what you put in the bowl.
Well, I think, Scott, first of all, the backdrop is we're 3 weeks into this kind of internal pullback, payback mode we've been in for a bit, and it's really evident in the breadth numbers. Very weak again today. So you're seeing some of the kind of reset happening below the surface of the indexes. And yes, because the 2-month rally got everybody exceedingly confident about both legs of the soft landing hypothesis, the lower inflation, immaculate disinflation, plus resilient economy, you're getting tested, I think, to some degree on both sides of that. I happen to think a better economy with maybe delayed rate cuts or fewer rate cuts is the preferable path. But at the moment, you have to kind of sort through the idea that neither one gets satisfaction for a little while. I was sort of sympathetic last week. HSBC came out downgrading to kind of a neutral or underweight in risk assets temporarily, saying there's a reverse Goldilocks period we might be entering. I don't know if that's what we're in.
All right, sorry, I'm back. I know the thing is messed up. All right, let me fix it real quick. I gotta work on my vocabulary. I gotta work on my vocabulary. All right, guys, so beautiful trade here, beautiful setup. I'm actually seeing something that this was a really nice resistance support level from yesterday. Markets, as soon as we entered this, we had the markets at our back. As soon as now, you got to understand too, as JP Morgan's pulling back, it may be important to do things like look at the Dow. All right, look at the Dow. The Dow is in a downtrend. The Dow also bounced higher into that support zone and rejected it. So now we're going to look for the Dow to get to like 372.99, 373. That could be another reload on these JP Morgan puts. Maybe another small position. All right, so this is, if you're not experienced, do not do this, okay? Because you will just get hurt. All right, but what this is people call it holding a core, trading a core, right? Let's say out of that 100% position, right? Let's just say you bought 75 shares, right? Let's say you bought 75 shares, or in this case on JP Morgan, let's say you shorted 75 shares, okay? The other 25 shares, you're going to rinse and repeat. The bulk you're holding, the quarter of that position, you took profits on the extension that it gave you. On the bounce back, you're going to get short again with that 25% piece. Let it try to pull back, take profit. It bounces back, get in again, take profit, right? And you're doing that. You can do this with a long-term portfolio too. This is how you build like compound real wealth without that bullshit ass dividend shit. All right? If you take a piece of whatever it is that you have ownership in, right? Like we just said here, JP Morgan, right? Let's just say you own 1,000 shares or you own 100 shares. You would take 25 shares and you would be selling, your daily moves, right? 166.50 to 165, taking profit, right? It gets to 167, take profit, right? Until you run out of those 25 shares. Let's say every $1.50. As it goes and gives you an extension, you take profit. And then on those pullbacks, you buy it again with those 25 shares. You have 75, you're taking 25%, which would be 25 shares. You guys know what I'm saying. And taking a quarter of that and just, making it work for you, right? Paying the position off without selling any calls or puts, without selling any insurance, right? With potential, I can't say a potential. I can say a potential loss, but not really. If you know what you're doing, you're not going to lose them. Like some people would own 100 shares at JP Morgan or 1,000 or 10,000 shares, and they're going to sell like 10 contracts, right? They're going to write covered calls to bring in weekly money off of that 100,000, 10,000 share position that they have. All right, you own Walmart, you have 100 shares, 1,000 shares, whatever the number is. It's got to be 100, 1,000, or whatever, unless you have a margin account. But you're selling insurance to someone else that if something were to happen, they get to either sell or buy that stock, your stock that you own. They're paying you a premium in case either it goes higher or it goes lower, whichever direction they're, hedging against. And so instead of putting your stuff up for collateral, and again, you could always do it both ways. Like I can't say that. It's hard for me to sit here and say you're just going to write covered calls and lose your shares. You're going to get paid for them, obviously, but that's why you don't just do things like that, or you don't sell puts. You don't write puts or whatever. You want to back it up. All right, there's spreads, there's different ways that you can maneuver it. That no matter what, you're going to sit. You'll lose a little bit here, but you'll make it right back up here, or you just break even, or you'll just lose a very little bit. So again, though, if we get a bounce back, what I'm saying, long story short, is if we get a bounce back to like 167, like yesterday's high for whatever reason. Even, see, like we just turned this into resistance. All right. So maybe we won't get to 110. But again, guys, my target is like low a day. My target's down here. Just for now. All right. Let's see what we got here. Yeah, I thought 110 was a little too much, but it should be. See, we're at 33 cents. What's going to happen if you're in the next week 165 puts is that you're going to notice from 167 like 30 to like 166.99, as soon as you get to that dollar, it's going to pay more. All right, it's going to pay more. Once you start dropping into 165, you should see these contracts go, you know, you'll see these contracts go from 88 cents to 180. That's 100%. It's over 100%. It's not going to be 180, but you're going to start to see it get to 130, 120, right? So, but you need to get this extension. All right, this is a nice trade. Beautiful timing. I wish I got it a bit sooner. What I want to see now is I would like to see a bounce. I know you guys don't. Whoever's in this position, you guys probably don't want to see it because you don't want to see your options decay a little bit. But I do, because I want to buy more. All right, I want more. I want this thing to go up to make VWAP resistance. This is a nice trend. You guys have the opportunity right now to take from 70 cents to 90 cents. All right, that is what? What is that? Shit. I'd have to do the math on it. 70 cents to 90. What is that? 90s. Is that like 30%? 25? I'd have to do the math on it. All right, so what was I going to say? But that's it. That's really all, guys. I'll watch it here because there it is. I probably got my last bit just taken off at 91 cents. Dude, I did not expect to be taking this off already. I just keep reloading it just to see if we get the fill. There it is. She gone. She gone. All right. And I thought about taking it to 93, but I figured that was a little too much. All right. So there's another piece off there. I hope we get a bounce back. So there's another piece, guys. There's another piece off the table. Just taking these profits off. I mean, it's paying us. You got to take it. Right? If we get the bounce back, we can re-enter this. It feels. Hold on. Do we have a bond auction or something? I don't know why people are going crazy about. Yeah, 20-year bond auction. I don't think this is going to be anything. It shouldn't be. But watch, you're in a JP Morgan put. Just know that it's 1 o'clock and there's a bond auction. So be careful. Banks will be directly influenced by bonds. Okay? They will be directly influenced. All right? I'm going to take this off because I don't want to get caught in something stupid, guys. I'm out. I'm out of this trade. I didn't know that there was a 91 cent out. I want to see if we can get another opportunity in case this bond auction sends this stock ripping to the upside. It'll eat all that premium, and I did not know and think of that. Hold on 1 second.
Thank you very much. I'm Tyler Matheson in for Kelly Evans. Here's what's ahead this hour. The consumer just won't quit. The latest retail sales coming in stronger than expected. Investors not too happy about it, however. So could Jamie Dimon be right that rates could remain higher for longer? We will discuss that one. Plus, Chinese cars are flooding the West, but are they a real threat to U.S. automakers? We will head to...
So yeah, you guys see that? I'll put it in the chat, but I don't want to get caught in the auction if there is any volatility. But yes, I want to get back in this if it gives it to us at another price. I don't think that it's going to. People took the one bond auction, which it wasn't the bond auction. It was the Treasury General account that is what made the volatility and all the liquidity and the volume that we had. So you can see here the 20-year is up a little bit. Okay, so that should mean that the TLT should be pulling back, right? It should mean TLT would pull back, and it did. You guys can see here that it pulled back. All right, now, if you guys don't know this, let me fix my screen. If you guys don't know this, TLT prior to COVID and even now, we're trying to get back on like normal stance. Usually, banks and TLT, like JP Morgan, Bank of America, banks and TLT will do the opposite of one another. As you can see here, right? Let's go to, what is that, a 2-minute chart? All right, you can see here how TLT pulled back in the morning. All right, you can see how it's pulled back and then it's bounced. And then I take you to JP Morgan, and it looks exactly the same but opposite. See? You can see it right here, right? It pulled back and then it bounced. Now it's going down. Now if TLT starts to see, it's still going up. So as long as TLT goes higher, then banks are going to pull back, because that means yields are coming down. It's supposed to, all right? But that's not what happens, because we're in a weird time here where banks and TLT will go up and down together. But it's just a weird time, all right? It's a weird time. And when I say weird time, you know, the dollar hasn't been where it's at and valued. People keep saying, like the video with Vaswamy, whatever his, I forget his, I can't remember how to pronounce his name, Vaswamy or whatever. There was a video about like somebody asking him about, oh, the dollar's losing its value. Who in the hell ever, like, whoever started this dollar losing value shit? And the understanding that 90%, 80%, 85% of the companies in the S&P 500 do business overseas. So if you have a dollar that is higher than the other countries, that means they're bringing in less. So let's just get that like clarified on what you want and don't want. You want a reasonably valued dollar. Yes, you do. And right now we have one. Go look at the chart of the Dixie. Okay. Now I'm not like fighting with anybody or anything. It's just like we are usually in the 90s, 95, 96, 98. We were all the way up here at 110, something like that, right? Something crazy like that. 112. Look, 116, 115. All right. So now when you go overseas, or it was at least, I should say, you're paying more because the cost of overseas is a bit different, right? Because when our dollar is worth more, technically it takes less dollars. But if their dollar is worth less and it takes more of their dollars, it's going to take more of your strong dollar to pay for things, if that makes sense. Right? So what happens is you actually want the United States dollar under Europe, under Germany and stuff, so that for a couple reasons. So when you go across seas, you know, it's not expensive, okay? Like you're not like paying out the ass to pay for things because of the fluctuation in currency and the foreign exchange. But even the companies that do business around the world, you would like for them to be able to bring in more dollars. And when they turn that over to dollar-denominated, not dollar-denominated debt, but when they turn that into U.S. dollars, right, it's more. So if you have a strong dollar, right, you're only going to bring in less money from overseas. And you don't want that, right? You don't want that. So, and it's funny. You would think with a strong dollar, technically, it means that it takes less dollars to buy the same thing. But we've been paying more. We've had inflation. This is why this whole thing is crazy, right? And people don't understand that. And I just thought it's really funny when people like it's just so weird. You guys know how it is. It's not even that it's weird. It's just one person says something, and then everybody goes along with it, and they don't even know what they're only saying it because Blow Joe said it. Oh, our dollar, we've been spending so much money, it's not worth shit. It's going up in value, and we got a pretty strong dollar, and it's been the strongest that it's been in quite some time. And you kind of don't want that. If you know how things work around the world, right, it is better for us to be under and less valued than other currencies, right? Because when we turn that over, right, a lot of our companies do business around the world, right? Not just here. So it has an effect on earnings, all that fun stuff. All right, that's just a little lowdown. I mean, look at the dollar, just ripped. Our dollar is so weak, and it's just ripping hell. It's ripping face. You could actually say that 2015, in the Obama era is when you had a horribly weak dollar, a worthless dollar. You come into the Trump administration and the Biden administration, things have gotten a lot better on the strength side of things. So not sure that's what we want, but you know, we are bouncing here, so we'll see what that means. If the dollar can pull back a bit, guys, I would like yields and the dollar to pull back a bit, because I still would like to be able to get some more of this. I want to get more of this JP Morgan position on, okay? Gosh, man, we fucking killed it today. We killed it today, guys. I'm so, I don't know. I'm just filled with gratitude. Like, I just, you know, it's been a, you know, I needed to get that last week out of the way. Not that it was a bad week, but it was like a mixed result week. And we started the year off strong. Triple digit gains, over 100%. Wasn't there a trade, or was that what was it? The one trade went up like 1,200%, right? It wasn't 1,000%, or it was 1,200%. But, and what was that? I can't remember what that was. But anyway, let's see if we can get this dollar to pull back, rates pull back a bit. Maybe TLT bounces a little bit, and then we get the banks to bounce a little bit. I would like to get in again before the day is done. I just forgot about there being a 20-year bond auction, and I didn't want to be. You got to manage risk. I didn't think that there would be a reason to exit that trade with the 20-year, but because of what happened about 4 weeks ago, now everybody's looking at bond auctions. When I've been saying a fucking 6-8 months ago, guys, just look at the bond auctions, right? Just know where they're at. Just know that they're there, and just keep an eye on them, right? Because what that does is it allows you to not have to look where yields are. You'll have an idea where yields are and at what price range. Not what price range, but what target, right? 3 months, 6 months, 2 year, 10 year, 5 year, 30 year, 20 year, 10. All right, and you'll be able to just, you know, if you're new, I wouldn't expect it, but you know, for somebody that's been doing this for a while, you're just going to instinctively know where yields are, and you're going to know what to play based on yields. If yields are pulling back, we're long tech. If yields are going higher, then we're going to short things like solar names, maybe car, dealerships, right? Things like that. Things that have a heavier weighting on when yields go up. If that makes any sense. I got to dust later today. I got to dust and clean later today. I got so much stuff I still need to do. All right, we got to our target. It's at 94 cents, guys. From 74 cent entry. That's pretty nice. So what would that be? 74, let's just say 90. Let's just say 70 to 90. 80, 90. So 20% on 80 would be 40, right? No. 7, 6. Yeah, that would be 40%. I'm thinking about this way wrong. 70. What is that? 4 and 4, 45. Okay, so just about 25%. Yeah, I was right. So 70. 35 and 35 would be 70. 35 would be 35 would be 50%. I'm just going to say it was about 25-30% trade today. That's not bad. There's a nice double bottom here. And guys, you know, you can't beat that return at lunchtime. It's a beautiful thing. All right. So what I want to do is I want to look for a bounce, and I'm going to put less risk on the table this time to try and keep this trade on. The delta was a little heavy, so this would be nice. That like I want to rinse these things. I do want to put some on the hold. I just feel like I don't know. It would just, you know, being in it is one thing versus, you know, being in it on a day when you just get that continuation, right? That high volume, high continuation, and you're just in it, right? Those are the trades I like. It's not always going to be that way, though. And if you guys have any questions, please, by all means, throw it in the chat. If you guys have tickers as in company names you want to look at, questions about me, anything, throw it in the chat. If you guys could, hit that like button, subscribe if you haven't already done so. Send this video, share this video to someone else. I don't care if it's a random stranger or a best friend. All right, if you know somebody that wants to get better in the markets, that likes the markets, that want to just grow their net worth, okay? This is the place to learn. I would not come on here and, you know, tell you guys some of the things that I do and tell you guys some of the things that I find that works and be on here not knowing what the hell I'm doing and look like an idiot. All right, we had some really nice risk management stuff this morning that I thought was really cool. It's not that it's cool, but you got to know it. You guys got to know that stuff. All right, because people don't last in this game because they don't understand how to manage risk. Like, they don't understand how to manage it. They think they do, but they don't. All right, you know, they're a little over leveraged more times than not. But I'm thankful for today. I'll keep it at that. I am thankful for today. We had a wonderful day. Nice profitable day. So again, I'm just going to wait for a bounce and look to re-enter this. I'd like to try to be able to get in this at VWAP if it gives it to me. What that's going to allow is it may allow for a cheaper entry as well. All right. It may allow for a cheaper entry because it's going to buy time and it's going to give back all that price. Okay. I got to figure out, you know, let's see here. Like I said, I think this I think JP Morgan is a bit overdone. See, here on the 4 hour, it could pull itself. It could go higher. That's what's funny. You know, the daily chart looks like it's overdone. And when I mean overdone, it can just consolidate, but I think JP Morgan needs to pull back. I'm going to be honest. I think JP Morgan needs to pull back, test the 50-day. And it doesn't mean that it's going to do it in a straight line. Right? I would like to get this thing down here to 160. Even getting it to test you know, getting it down here. Yeah, down at like 165. That would be a killer trade, guys. 70-cent entry at 165. That would, oh, see, that's a 30 delta. I mean, you could just pretty much say that's 167.50. 167.50. I don't know. It's a nice trade. I'm going to say if you got this down here on the 165s and you took it and wrote it down to 160. Where are we? Yeah, you took it down to 163. Shoot, you're looking at a $2, like $1.90, maybe $2.25, $2.50 from a 7-cent entry, 70-cent entry. So about maybe 300%, 250%. Easily doable. Easily doable if the entries are correct, if the timing is correct. All right. But what we do is we're gonna gather these wins up, and you know, I'm not upset that I took profits on that and took the position off. I was gonna take a few of the contracts off, like as it gave me the extension, but then I heard bond auction, and I'm like, I think back, I'm like, shit, I don't want to get caught and it just bounce, right? And then that's everything. That's why you manage risk. That's why you manage risk. It's not hard. It's not hard to take profit. If it pays you, put it in your pocket, bro. What are you doing? All right, remember the chart we did this morning, where we drew the line, and we have wins and we have losses. What do we have today? If you were to draw my chart this week, what would my chart look like? This is the chart, right? Right here. That's the line. All right. And what we have here is a failure to communicate. No, I'm just kidding. So the wins up at the top, the losses at the bottom. What we're going to have is something like this. And then the JPM, and then a little bit more. Right? That's it. That's actually the equity curve in and of itself. That's hilarious. I mean, we can pull these down. We don't have any losses. We don't have any losses today. We didn't trade anything yesterday. So it's not hard for me to be green. And we're green. Think about the month. Right? We had a break even small profit last week. The week before that, we murdered. We had a wonderful week. We had a great week. So this month of January is just, we're killing it. We're killing it. I like this. I like it that we don't have any losses. We're going to get them. We're going to have some, but you know what we're going to do? What we're going to do with them losses? We're going to make them right here. Yeah, we're going to keep them nice and tight and nice and close. We're going to keep them real small and real close. Right? We keep our enemies close. We keep our friends close and our enemies closer, right? Isn't that what they say? So losing is your enemy. You are afraid to lose. You're embarrassed to. You shouldn't be embarrassed to lose, but you know what I'm saying. I could have just went on and on, but you know, just be a fucking winner, man. Just win. Just like the song. No matter what, you know. Are their hands going up? Oh shit, JP Morgan. And he's staying there? No, I'm just kidding. I don't know. Alright, so again, VWAP. I'd like to be able to get another test of VWAP. If we don't get it, it's all good. It's all good. I don't care. Right? Because tomorrow, if JP Morgan decides to give us that extension, I'll be right there waiting. I've already locked in gains so that when I trade this again, it's already at $1, guys. It's sitting at $1. That I don't have to, like, I'll be fine. I've earned the right to take risk, first off. And then second, you know, we put some money in our pocket. Dude, I'm hype. I'm really happy about today. I wish that some other people were able to take advantage. I'm going to scan the markets a little bit. If you guys have any questions, holla at me. Throw me a like. Share this. Something. If you haven't subscribed, subscribe. If you have any questions about the trades, let me know. This is big, guys. So, 74 cents. I think my fill was 75. I market ordered in. I got screwed. All right. I think my fill was 77 cents, but I know it was a low of 70 cents. And even better, it was 60 cents when I went to go get in this trade. It was 60 cents. So some people are getting ready to, or they're 10 cents away from 100%.
In particular for lawmakers in the Northeast trying to get reelected. So I'm not sure how that one will work. Yeah. But on the pass-through deduction that actually affects the economy, I think we have a decent chance of getting that done. But if it doesn't, and we continue to have these, you know, even this week, we have a CR, another government shutdown potential. We're just going to be rolling through these all year long. And that, to me, is way more important than monetary policy because the Fed's told us what they're going to do. They're going to lower rates a couple times this year. They're not going to raise them any further. It's very unlikely they'll do so. That's a pretty good operating environment for investors. So that's why I think fiscal policy is way more important now.
All right, Jamie, thanks very much. We'll see you again soon, probably on a Fed day. That's my guess. Jamie Cox, we appreciate it. Coming up, Bank of America is crowning the king in streaming, saying Netflix has won the so-called streaming wars, game, set, match, and between password crackdowns and advertising opportunities. This might just be the beginning for the media monarch. The analyst behind that call will join us next. Plus, China just passed Japan to become the world's largest auto exporter. Can you believe that? So are they a serious threat now to American automakers, not to mention the Japanese, the Koreans? We will look at whether the West should be worried when the exchange returns after this.
This is The Exchange on CNBC.
All right, there's a breakdown of the SPY, guys. Man, perfect timing. Perfect timing. What a day, guys. What a day. Let's fucking go. All right, let's go. Believe it or not, there's another trade right there that it's okay that we missed, but that's a nice double top. What did we say right here? Get short, Google. Another one. DJ Khaled. I'm going to have to put him on the thumbnail because that's what we're doing. Just another one after another one after another one. All right? Just green trades, right? You know, it's not hard. It takes a while to learn it. You just got to know what you're doing, right? You got to understand the math that goes in it and let that, like, that is enough justification that it's not going to take much when you make the right decisions. As long as you make the right decisions and you're somewhat, you know, I don't know the word I'm looking for. I had it, but it left. If you're halfway competent, if you're halfway competent, you can do this. All right, something you guys can do.
All right, Peacock made its move in the streaming wars over the weekend with the exclusive rights to the Chiefs-Dolphins Taylor Swift game. But our next guest says the streaming war is already over and that Netflix is the clear winner here. She's got a buy on the stock, just up to price target from $5.25 to $5.85, a 20% upside from current levels. Joining us now, Jessica Reif-Ehrlich, B of A securities analyst. Jessica, nice to see you again. How have you been?
Great. Thank you for having me.
Oh, we're so glad you could be with us. So, game, set, and match. I guess I can't quarrel with your conclusion here. If I were cutting the cord and I said, okay, now what do I do? My number one default choice would be Netflix. Easy.
Not even a question. I mean, Netflix is what the old bundle was, all in one service. So it has something for everybody. It cuts across every demographic. And there really are very significant growth drivers, including, what you're intimating, which is their engagement is so strong.
Yeah, their engagement is strong. How is the crackdown on password sharing going? I'm asking for a friend here.
Well, it's interesting. They've had really good growth since they started cracking down, the password sharing crackdown. But it feels like there's a long way to go. They've said several quarters. Most people, anecdotally, that we speak to haven't been touched yet. So it does feel like there's still a fairly decent runway from password sharing crackdown. There's also a runway. I mean, just think about how many broadband homes there are in the world and how many connected TVs there are. There's a very long runway for subscriber growth, and they have the content.
A couple of years ago, there was, as I'm recalling, you can correct me on this if I'm incorrect, there was a concern that Netflix was spending so much on new content generation, some of which has paid off beautifully, but some of which, it's a hit or miss business. But now, its top 10 list has been dominated, you say, by third-party content, which can't cost them as much as original content generation. How does this play into their current profitability picture and into their future profits?
Excellent point. The underlying drivers in the media and entertainment sector are all really positive for Netflix. For one, viewers continue to move from linear to streaming, so that's a positive. They do dominate their own content for television viewing is actually doing very well. But if you look at the third-party acquisitions they have in film in particular, it's amazing. Their just engagement is really strong, and they dominate most of the streaming charts. So the trend, for years, a lot of the studios, the traditional studios, pulled back content and only kept it in their own walled garden, wouldn't sell to Netflix or anyone else. That's opening up. It just didn't work. Warner Brothers Discovery has way too much content to put on Max. And Universal is selling movies, Sony's selling movies. So the ability to get third-party content, yes, it's lower cost, but it's also quicker to get onto the schedule. You don't have all of that production time. And it's known content, so you don't have to market it that much. So it's like a win-win. It's a win for the studios because they're selling content, but clearly a win for Netflix because they're getting access to top-quality content at lower prices than it would cost for them to produce on their own.
One of the numbers, oh, by the way, I was watching Netflix last night. Weirdest movie I think I've ever seen. Ethan Hawke and Julia Roberts were in it. I have no idea what the name of it was, but it had the weirdest ending I've ever seen. One of the numbers that I was drawn to is forecast for profitability and gross margin increasing from 2023 to 2024 and again
put me to sleep.
into 2025. How are they doing that?
There's $1, guys.
This is just the beginning. They are the only
There's
profitable
$1.
streaming service, but now the leverage will start to kick in because they are scaled. They're almost 250 million subs, probably over when they report next week on a global basis. But
how many of you guys were able to get this? There is $1. Did anybody take this? Anybody? Please, don't let me just sit over here and fucking win by myself. I know. I'm just going to pretend all you guys did.
So the advertising is just beginning. This is a 3 to 5 year growth driver. Then there are price increases. They surprised the market with a price increase last quarter. And you know, we'll see what the churn is, but maybe not that high. And then there's bundling, which is really interesting because what we're starting to see are things like Verizon offering Netflix and Max together for $10 with advertising. That's a bargain for consumers, but it's great for Netflix and Warner Brothers Discovery because it decreases churn, decreases SAC or marketing, and increases the customer lifetime value. So there's just a lot to like here.
All right, Jessica, it's always great to see it. What was the name of that movie again, AJ?
Thank you so much.
Leave the World Behind was the movie. All right, go look it up. Jessica, it's always great to see you. Nice to have you back.
Okay.
Fantastic.
Thank you so much.
Oh, you're welcome. Coming up, EY unveiling its first ever deal barometer looking at the state of M&A in 2024. The sectors they are watching and how the Fed could end the entire deal-making environment ahead. But first, Boeing CEO Dave Calhoun in Kansas speaking to workers and the CEO of Spirit Aerosystems, which built that MAX 9 fuselage that had the door plug pop out. We'll tell you what he's telling them and what Boeing's next steps are. The Exchange is back in 2.
Do I have to say it? 105. 105. You guys got to, if anybody that did take it, you guys got to really think about taking profits off. You have just been handed a beautiful trade. All right. You got to be, what is that, 70s? Let me tell you, it's 40. So 120.
That first time you take a step back. I made that. With your very own online store. I sold that. And you can manage it all in one place. I built this. And it was easy with a partner that puts you first. GoDaddy.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer.
It's not even the afternoon either, guys. Like, this is lunchtime and we're getting away with trades like this. This is the opportunity that's out there in these markets, guys. It's crazy. It really is. It's awesome. You guys live in a great time right now where there's just a lot to be thankful for. And it's a great time to be alive in stuff like this. Like, when can you say that you can just get a damn near 50 to 80% trade on and take profit, you know, get in it at lunchtime and take profits before 2 o'clock. You know, the opportunity, you just got to know where to look, right? You just got to know where to look. Just got to know where to look. I wonder how many people got worried when they seen all that candle, all that volume.
Preventing almost 9 million pounds of plastic from entering circulation. Aldi will have reusable bags available for purchase. Back over to you.
All right, thank you very much, Julia. And coming up, China surpassing Japan as the world's largest auto exporter, and that is worrying some automakers in the West and elsewhere. We will look at how real the threat is and who's most at
I'm getting tired just sitting here, guys. I got Red Bull in my veins, and it's just, you know, just sitting here, and I'm crashing.
With Invesco QQQ, a fund that gives you access to NASDAQ 100 innovation
All right, what are we going to look for now? So we got to wait for this trade to come back to us and see if we can put it on. You know, I want to look for a bounce to VWAP to see if I can put that back on. All right. If you guys do decide to enter it, or if you guys did decide to enter it, please take profits. That's all. Like, share, subscribe. Like, share, subscribe. Like, share, subscribe. I don't know, guys. I don't know how much more I've got. You know, I don't know how much more I've got in me. I still want to see if there's a Tesla long worth having up to this like 218, 217, 219, 220 quote unquote area. Or what is that? Let's go look at the scanners and see what we have going on. I'm going to scan the markets. If I see something, I'll let you guys know. Beautiful. Beautiful. 3 green trades today. Huge. Huge day, guys. Huge day. This type of day should make your month. Make your week. Not just your week, but your month. Yeah, and you guys know that's ultimately what you want, right? Is when you put on a trade, and then you have the markets at your back. You know, it's the best. It makes it real easy to just sit in the trade, and the S&Ps, the Qs, and the Dow, they start pulling back, and they're just going to take your stock right on down with it. Right? There's the Dow, or there's the SPY. All right, there's the SPY, and we said this morning we wanted to get down into this range. All right. And that's what we're doing. Your support should start to step in. You know, it could be at a few different places, right? 467, 468. It's going to be different for it's going to not different for everyone, but like, let me see here. Let's see where. I think, you know, I feel like the SPY has some room. All right, the SPY has some room. Right here. That's about all I think it goes. We don't really have a reason to sell off, but 469. Okay, 460, not 469, but 470 / 469.99. So, you know, don't think I mean 469, but it could, but I don't think it will. This is just falling out of bed now. It feels like we're just going to fall out of bed. Here it is. You know what? Give it to me. I think the target's going to be 468. I feel like that's the target. 468. 468. Again, I'm sorry. I am a bit tired. We have a double top here on the SPY. Looks like you should start to gain some momentum here. 468, guys. 468 is where I'd look for the spot to get to by tomorrow, possibly. You know, I don't know if it's going to get there, but that's the area.
These are the top 3 countries for EVs in terms of exports.
That's very interesting, and it's
I
not
can't really
as
see
though,
well with the
for
sun,
example,
too.
Mexico does not have a domestic
you know,
automobile.
falling
I mean,
asleep.
they're making American vehicles, but they have a
Not falling
large
asleep, but
presence
just-
in manufacturing. So it's not just
It's the Red Bull
countries
and
that
it's the
do
caffeine.
not have vehicle manufacturing.
Sitting here,
Russia has some vehicle manufacturing.
watching
We
these
can speak to
numbers.
the quality of the vehicles, but so at any rate, so this is
always
in
been like
Europe
that.
and also in the West in Mexico. Not in the U.S. Why haven't Chinese companies come
That would
into
be
the U.S.?
so
Have
cool
they
if we could
been
get
blocked
10 likes
in doing
today.
so?
10
I think if
likes.
you look at the export tariff that the U.S. is imposing on China, it's a 27.5% export tariff to sell cars to the U.S. So it's not exactly the friendliest country to sell.
Here's a value area monthly low at 467.97. All right, right around 468. You could look at that area as a potential target.
China did actually export to the U.S. They exported about $80.
You don't really have much in the way,
last year.
you
But a
know,
lot of them are
from
more
where we
commercial
were this
vehicles.
morning until
If you take a look at BYD,
that
for
value
example,
area
they have
low.
a huge bus factory in the U.S. So a lot of the electric buses
Interesting.
That you see on the road are actually made by BYD.
Is that right? I did not know that at all. It's one of the things I love about this job. I learn something every day, and thank you for that. Let's talk a little bit about the Chinese domestic market. As you pointed out, the Chinese produced, I think you said 30 million units. Is that right? Over the past year, of which about 5 million were exported. That leaves 25 million or thereabouts to be consumed in China. Are those vehicles favored in China because they are low price, number one, because you're perceived as buying from the home team, number two, and or because the Chinese government subsidizes the purchase of domestically produced vehicles in a major way?
Right. I think a lot of the growth that we're seeing in China, it comes from the NEV side, right? If you look at the
We're just falling out of bed
penetration
now.
for NEVs in China,
There it goes.
down
It's falling out of bed,
44%,
guys.
Right. We're talking about a similar rate in the US, which is at about 7%. We're talking about 20%-ish in Europe in terms of EV penetration rate. But the difference between China and that of the Western countries is that the affordability of the NEV cars are now much better than ICE, right? If I just quote you one example, right? If you take a look at the BYD Ting Plus DMI, that is one of the best-selling hybrid, or what we call PHEV vehicles, and you compare that to a Toyota Corolla, the initial purchase cost is already more than 100,000 RMB cheaper. And then you take into account the cost of ownership. After 5 years or 10 years, you're saving 100,000 RMB. If you're what we call those taxi drivers, DD drivers, you're saving more than 200,000 driving an EV versus that of an ICE car. So that is one of the reasons why we're seeing this increased penetration rate. And as a result, we are seeing JV brands that are coming into China, previously now exiting China because they're losing market share, right? We have tier 3 brands like Citroen, Mitsubishi. These brands are now exiting China or will exit China in the near term.
Very interesting, Johnson. Thank you very much for being with us today. We appreciate it.
Thank you.
Johnson Wan. All right, coming up, Boeing CEO Dave Calhoun addressing employees at its embattled supplier Spirit AeroSystems today. Boeing used to own the company, spun it off. Well, this is the FAA has completed inspections of select 737 MAX 9 planes. Shares higher on that news, as you see, 2-point gain for Boeing. We'll have the latest on this ongoing saga next.
So what I'm doing is I'm gonna see if there's somewhere else that I want to get in, and I'm gonna start looking to see where the other banks are. All right, where's Bank of America? Where's Wells Fargo? In accordance to where Wells Fargo, or in accordance to where J.P. Morgan is. All right, so they seem to be doing the most. J.P. Morgan seems to be doing the most. That's right down in the support. I knew that was Rihanna. All right. Yeah. So if I get into anything else, we'll see what happens here at 3 o'clock, and I will let you guys know some of the stuff that I'm thinking about doing or putting on, or if I enter back in this trade, which I'm looking to do at a better price.
Possible.
Welcome back to the exchange, everybody. Boeing shares up about 1% now, following news that the FAA has completed its inspection of select 737 MAX 9 planes. Also happening today, Boeing CEO Dave Calhoun addressing Spirit AeroSystem employees at a town hall. Let's get to Phil LeBeau for more. Hi, Phil.
And Tyler, that town hall meeting, I've been told, has just wrapped up. Dave Calhoun, along with Pat Shanahan, CEO of Spirit AeroSystems, addressing employees there at the plant in Wichita, Kansas. This town hall, similar to what we saw from Boeing's town hall out in Renton, Washington last week. The idea here is to say to the workers there, we've got to do better. You cannot have these kind of quality escapes that lead to this kind of a situation. By the way, Spirit Aero, the quality controls there have been in question for some time over the last couple of years. This is not the first issue that has popped up. With regard to this issue, when it comes to the 737 MAX 9, as you mentioned, 40 inspections of grounded MAX 9s have been completed. The data is being analyzed by the FAA. When we see these planes return to service, when the FAA gives instructions to the airlines in terms of this is what you need to check for, that remains to be seen. Two airlines that in particular are eager to get these planes back in the air, United and Alaska. For United, it's 79 MAX 9 planes that are grounded. Look at the sell-off here since this incident, really in the last week, as we don't know how long these planes are going to be grounded here. And then with Alaska, it's a bigger part of the Alaska percentage of the fleet, even though it's 65 planes, not 79 as you have with United. Quickly take a look at shares of Boeing. Remember, the Q4 results will be in 2 weeks. In 2 weeks. And that's when we expect that Boeing will give its 2024 and long-range guidance. Though, Tyler, we have seen this before with Boeing. If they're in the midst of an issue like this, they will say, we're pulling guidance. We're not going to give guidance until we have greater clarity. So we'll see if that happens in 2 weeks when we get the Q4 results.
Very interesting. Phil LeBeau, thank you very much. We appreciate it. Coming up, Ernst & Young just launched its first ever deal barometer, and this, they say, is the sector to watch for M&A this year. A TV exclusive. Look at what else and we'll look at what else it is forecasting. That is next.
All right, in case you guys did not know, we do have
Welcome
Fed
back to the
Beige Book
exchange.
getting ready
We
to
could
come out.
potentially be sitting on a great year for
All
deals
right, it'll
after
be
a
coming
relatively
out here in
dismal
about 10 minutes. So I'm going to go use the restroom, be right back, get something to eat, or like a little snack, something to drink, some water.
Pre-pandemic levels.
Be right back.
According to the data, deals started in that momentum. Joining us now is Mitch Berlin, Vice Chair of Strategy and Transactions at EY Americas. Mitch, welcome. Good to have you with us. So a 12% overall expansion in deal activity this year is what your baseline forecast is. There are different kinds of deals. There are the PE deals that became so famous over the past couple of decades, and then the more strategic deals, which we've begun to see in energy, we've begun to see them in pharma and so forth. How does that split go? It's 12% overall, but is one going to be more dominant in terms of growth than the other?
They're pretty close. So we would expect about a 12% increase in corporate and a 13% increase in private equity. So not too far away.
I'm just going to delete it.
And where, to the extent that you're able to look ahead, would you expect the deals of the strategic sort, the strategic combinations, to be sort of more prevalent? What sectors?
So the sectors that they're more prevalent in are the ones where the multiples have gone down because the cost of capital is still high. So you can't have high cost of capital and high multiples and expect M&A activity.
So not tech, not the big tech necessarily.
Well, the tech multiples actually have gone down a little bit year over year. So we are seeing a pickup. I mean, tech is behind, but they're still the most dominant player from a sector perspective. So we'd expect a small pickup in tech, but we're expecting a pickup in life sciences, as well as in energy, which we've seen a lot of big energy deals announced in the last quarter.
Yeah, we certainly have. I mean, and the granddaddies of them all, Chevron have been active. Exxon, of course, doing their deal in the Permian area. Let's talk a little bit about cost of capital. How critical is it that interest rates, borrowing costs remain where they are or fall in order for your forecast of 12, 13% growth to come true?
So for our baseline scenario assumes that the cost of capital will come down a point and a half. If it doesn't, then I think we're looking at less of a growth in M&A. So it's critical because, again, the multiples aren't coming down that significantly, so the cost of capital has to come down to see a reemergence of M&A.
So the strategic combinations you see are in bio and life sciences, maybe in energy. How about the PE area? Would it sort of track the same? Do you expect the PE firms, the Blackstones, the KKRs, the Carlyles to be active in that same area or in other ones?
In the same area, a lot of tech. There's a lot of PE activity in tech and in healthcare as well.
And where in tech specifically are you seeing it? I mean, obviously the big tend to get bigger in these circumstances.
Right. A lot around AI, trying to get in earlier around Gen AI and the fronts of there.
Yeah. So AI would be the area to look at. Who will be the active buyers? Let's talk about tech most specifically. Will it be the big whales in the business, the Metas, the Alphabets, the Amazons, the Microsofts, or whom?
I think it will be the big ones. The big ones still have a very robust.
So here's what I'm thinking, right? You know, I feel like, yeah, we're getting a pullback here, but don't get over your skis because, you know, we don't know how earnings are going to be. I feel like there's going to be a reason for this market to sell off, and I don't think we've gotten that reason just yet. I just want you guys to remember that. There was somewhere else that I was going with it, but I forgot.
Trouble in there, but don't have enough, so they're buying drugs. But it could be other companies as well, couldn't it?
Well, they're definitely looking to build. You know, there's patent cliffs coming, so they need new R&D. So a lot of it is buying new R&D, but they can also be looking into med tech and other areas like that.
Yeah. So the med tech area could be an area. Is there a sleeper sector here that you haven't mentioned where there might be a fair amount of? We mentioned energy. We bear down on life sciences. Are there other, and you said tech, are there others that could be out there as well?
Well, I don't think there's sleepers, but we do see, if you look at like the secondary level of heavy M&A activity, a lot in consumer products. We've seen some big retail deals in the past year, particularly around brands, and so we would expect to see a continuation of that.
All right. Mitch, thank you very much. We appreciate it.
Thanks for having me.
Congratulations on the survey.
Thank you.
Fantastic. All right. Is that the exchange? We're going to do some markets. Why don't we look at some markets, shall we? Let's do that. The Dow Industrials off about 187 points, continue its somewhat rocky start to the year so far. The other major barometers also modestly lower today as we get off on a sort of back foot for 2024. That'll do it for The Exchange. Coming up on Power Lunch, the latest read on the economy with the Beige Book out in just a couple of minutes. Plus, we'll talk to one of the DOJ's top antitrust lawyers. Well, maybe I should have asked Mitch about that blocked merger between JetBlue and Spirit Airlines. I'll join Dom Chu on the other side of this quick break. We'll be right back.
There's a pop. The first initial pop is to the upside, guys, on that Beige Book. No change, guys, out of the 12.
You of ownership.
No change, guys.
Welcome to Power Lunch, everybody. Alongside Dominic Chu, I'm Tyler Matheson. Coming up, the Fed releasing the Beige Book. Steve Leisman is poring over it for a read on the strength of the economy, getting forecasts from the districts around the country. This morning, we got a stronger than expected retail sales report.
And that is sending stocks lower today. Fears the Fed won't be so quick to cut interest rates if the consumer and the broader economy remain strong. So here's where the markets do stand right now. You can see right now, the S&P 500 down about 1%. The Dow Industrials down 0.5%. The NASDAQ Composite pacing the losses down almost 1.25% as well. Software names dragging the NASDAQ, including CrowdStrike, Zscaler, Fortinet, which was hit with its third downgrade from analysts over the past 2 days. Chip names also lower. On Semiconductor, NXPI, Intel among the names getting hit, as you can see there, right across the screen, across the board for the biggest chip names out there, Tyler.
All righty, and demonstrating this interest rate theme, the worst performing sector in the S&P 500 today is real estate, down 2.5% as a group, and there are some of the names in that group. One group gaining today would be health insurance, including United Health, which is keeping the Dow from being down even more.
So it's very easy to feel like how I feel right now about taking something and I don't want to. This could be a really nice short right here. Nice short opportunity, but chances are we hold 470.50 and go right back to where we opened. It looks like a really good setup though, right? This is that break of the low. We bounce back to the low a day, and we can't break through it, and you use that to get short. So that's that. I don't think Beige Book is going to have any real implication. I think you're just getting a profit taking from the sell-off that we just had, that we were a part of, but in JP Morgan.
And then you look at one-off companies, whether it's Nike, whether it's Burberry, whether it's Hugo Boss, they're talking about a weaker consumer. So despite the December government reading of stronger retail sales, we're seeing some signs of weakness here.
How is the market going to handle what may well be slower economic growth this year?
when you look at last year's nominal GDP of about 7%, this year is going to come in around half that, probably 3.5%. So I think that there's a real mismatch in terms of earnings expectations for double-digit earnings growth versus a slower revenue growth environment. So my guess is that earnings estimates for the overall market have to come down. And so then the question for investors is, what do you do here? I think what you're looking for is companies that can bust through that have real good secular growth prospects.
What's interesting here, Jim, if you take a look at the overall picture that we're talking about, is this idea that with the consumer spending picture, the retail sales data coming in strong. I think Bespoke was out with a note earlier today saying it's the 6th straight time that we've seen a better than expected report on retail sales. And at the same time, you've got reports that 56 million Americans have been in credit card debt for at least a year or maybe longer. How exactly does that story then play out? We've been seeing consumer strength driving things for a while, shaking off some of the negative headlines.
That's been one of those head scratchers for me for the past year, where credit card debt has been going straight up. Pent-up savings has been going down. Basically, the consumer feels like they're out over their skis, yet everybody says, don't worry about it. But sooner or later, that chicken has to come home to roost. And I think we're at that point right now. So again, you need a very differentiated company that has real secular growth to bust through a slower consumer spending environment, because as we all know, the consumer is driving GDP ultimately.
Let's talk about some of the stocks you like and some of the sectors you like. I see 3 on your nice list, not the naughty list: Aptiv, Amazon, and CDW. Why those?
So you look at Aptiv, and Aptiv is a stock that's really been beaten up in the last year, quite frankly. Everybody's worried about the EV slowdown, and certainly that is happening. But we've been underproducing cars globally for the last couple of years. So there's certainly a catch-up as cars don't last indefinitely. And the buyer of a car does want more of their safety and infotainment systems in a car. So I think there's real secular growth there and a little bit of a cyclical trade. You look at Amazon, the reason Amazon did so well last year is they dramatically beat earnings expectations as they reined in cost growth. The announcements that we saw last week in terms of with Twitch and with Prime Video are just another step in terms of controlling costs. So I think Amazon earnings are going to beat expectations as we go through 2024. And then you'll get CDW. CDW is a company that sells hardware as well as software. Hardware was very weak last year. This year, it's going to be a lot stronger as we cycle the weakness in 2023. And we saw that with the fourth quarter IDC numbers that came out. So I think all 3 companies are well positioned from an earnings growth perspective, and certainly CDW and Aptiv, particularly so from a valuation perspective.
All right, Jim, just hold those thoughts for a second here, because we want to get out to Steve Leisman for the headlines from that big Fed Beige Book report. Steve, what can you tell us about the American economy?
Little or no change in economic activity in the Beige Book since the prior Beige Book, which noted slowing economic activity. 3 districts reported modest growth. 1 reported a moderate decline. The others were about unchanged. But there was good news on the consumer front, Dominic. Consumers met holiday spending expectations in most districts, exceeded it in 3 districts, and one of those was New York, which was highlighted as having very strong retail sales, as well as several districts noted increased leisure travel. So that's the good news. Nearly all districts, however, reported a decline in manufacturing activity, and high interest rates were said to be limiting auto sales as well as real estate deals. On the other side, the prospects of falling rates, according to the sources that were talking to the Federal Reserve, was a source of optimism. Among the risks of the office market, a weakening demand, and the 2024 election cycle were cited as sources of economic uncertainty. The outlook for firms were positive. On the issue of the labor market, 7 districts reported little or no change in employment. Job growth was described as modest to moderate, so you are getting that cooling the Fed has been looking for in the job market. In fact, all districts cite 1 or more signs of a cooling labor market, so that's going to be good news to the Fed. And wage growth was characterized as moderate to modest in 4 of the districts. Half of the districts report a slight or modest increase in prices. 5 said price increases have subsided. That's good news. Interesting comment here. Profit margins reported under pressure as consumers push back on price increases. And so it looked like some of the retailers out there were having a little trouble, Dominic. And maybe we've seen some of that in some of the earnings reports, some of the guidance that we've gotten. And it's also, by the way, showing up in some of the data that we're looking at, that profit margins are under pressure as consumers balk at some of the high prices out there. Dominic?
Steve, seeing the balance of consumer-oriented data that you've looked at over the course of the last several weeks and maybe even months at this point, is it in your mind a sign that the American consumer is in fact in a state where they are declining right now, or are they going to hold up like they have over the last couple of years since COVID?
I think they're slowing, but I got to say, Dominic, each one of these consumer spending reports comes out, and my right eyebrow goes up a notch, and then it goes up another notch. That's curious. I mean, they just keep kind of keeping on. The data shows it's definitely slowed, but it isn't slow. When you look at the NRF Christmas accounting, how the holiday sales went, it's 3.8%. It's exactly back to the number we had in 2019. So you don't have much of a slowing. And one of the things that's going to happen, Dominic, is that the fourth quarter numbers, I'm seeing them go up a little bit in terms of GDP. And that creates a better launching point for consumer spending for the first quarter. So you're going to have that flatter first quarter growth. In any event, we don't seem to be getting growth below potential. Consumer keeps on keeping on and hanging in and doing about potential, even a little bit better than potential growth the last quarter.
Very interesting. Steve, thank you very much. Let's go back to Jim Tierney, get his reactions to what he just heard from Steve in terms of what you heard about the consumer. And what jumped out at me was the idea that 10 of the districts basically reported moderating prices or moderating inflation. And Steve concluded there with a statement that in some cases, companies are facing margin pressure because consumers are pushing back against higher prices. That sounds like a bit of a win against inflation, which would argue, I guess, for rate reduction sooner rather than later.
Well, there's certainly two implications there. The one is what's going to happen with rates. The second is what happens with margins and earnings. And as Steve said, yes, there are wage increases. They're maybe not as high as they were, but the ability to get prices coming down. So I think margins are more likely to be under pressure, whereas the market's assuming the broader index and the broader economy and companies are going to get margin gains in 2024. To me, that's the big disconnect. I'd expect more margin pressure on corporate America.
All right, Jim, thank you very much. Appreciate it. Jim Tierney, thanks again. So we've got the beige book on top of this morning's retail sales data, and let's get to Rick Santelli to digest it all for us and how it's playing out in the bond market, in the bond report. Hi, Rick.
Hi, Tyler. Indeed, we saw strong retail sales, but there was another aspect. As you heard Steve discuss the beige book, once again, manufacturing underscored being weak. Utilization rates today were basically the lowest in over 2 years. And we also had a 20-year bond auction, a reopening, and it was very weak. Investors did not show up. Look at a 2-day of 20-year. And all long maturities are very similar. The reason I draw attention to this chart, other than the fact that rates have gone up since the auction ended, is the fact that as we sit at 443 in a 20-year, yesterday's high in that security was 443. Now, let's look at a short maturity. Look at 2-year for 2 days. Yesterday's high was 4.25. It's currently trading 436. It's 11 basis points above yesterday's high yield. That speaks volumes about what's going on today. Short maturities after retail sales was strong have been leading rates higher. It makes sense. We're kind of pulling back on when the Fed is going to ease. It's all about the Fed and short maturities today. 10s, 20s, and 30s are on pace, as the next chart shows, to close at 5-week high yields. And finally, we could talk about inflation like the last guest, or what Steve was discussing regarding disinflationary pressures. But let's learn a lesson from the UK. So many similar comments coming out, except for today, we see that their CPI and their PPI pop higher. It's not linear. There's a lesson to be learned. Look at a 2-day of 10-year gilts. They closed at 398 today, almost got to 4%. They were up 20 basis points. They haven't closed above 4% in over 6 weeks. Dominic, back to you.
Rick, one quick follow-up here as we watch the context around these bond auctions. Is there an indication right now, given break-even rates, inflation expectations, that we are seeing a bit of a bounce, that the expectations are ticking slightly higher? And if so, what's the driving force behind the uptick that we're seeing, modest as it is in the beginning right now, for some of those so-called break-even rates?
Well, I think that there is some sticky inflation, and whether it's break-even rates or how much it's going to cost to service our debt, or the fact that a 10-year intraday yield was at 376 not long ago as we are looking to close around 411, I think all of those converge on a notion that especially long-dated Treasury yields are multifaceted. There's a lot of moving parts here, and as much as we can discuss disinflation being exported from China or disinflation when you look at various companies and what's going on with consumer sentiment, ultimately, there is a pressure to the upside in yields, mostly in mid and long maturities, and the break-evens. They haven't reflected it in a large way yet, but I would say that most of the comments, especially some of the comments recently from the likes of Goldman Sachs, are worried about debt and servicing the debt, and it seems to be bubbling through on those long maturities and how they've been trading in 2024.
All right, Rick Santelli with the latest on the Treasury auctions. Thank you very much. Coming up on the show, we've got a key victory for the Justice Department. A federal judge is blocking JetBlue from buying Spirit Airlines, sending those shares of Spirit down dramatically. After the break, we're going to discuss this decision as well as the DOJ's antitrust strategy for the coming year ahead. Plus, Jamie Dimon has few words to share about Bitcoin, but those few words do say a lot. We'll explain in today's technical support. Power Lunch is back after this.
Athletics.com.
Welcome back to Power Lunch. Shares of JetBlue and Spirit Airlines are sharply lower again today following yesterday's ruling by the Department of Justice to block their proposed merger. A federal judge said the deal would have hindered competition and led to higher airfares. So here to discuss that and the overall deal-making landscape, antitrust, is Doha Mekki, Principal Deputy Assistant Attorney General for the Antitrust Division of the Department of Justice. And, of course, our own airlines reporter, Philip Bowe, is joining us for the conversation as well. Thank you both for being here. Doha, I wonder if you might maybe just entertain us for a moment here with regard to some late-breaking news that we're having. It says, according to a Bloomberg report, that Apple is going to face U.S. antitrust scrutiny and a possible lawsuit as soon as the month of March. This, according to sources familiar within the particular moves of the DOJ. I wonder if you could tell us a little bit about what exactly the Department of Justice is looking towards with regard to Apple specifically and maybe big tech in general.
Well, Dom, I appreciate your having me and I appreciate the question, but as a Justice Department official, I can neither confirm nor deny the existence of any investigation. And so, unfortunately, I won't be able to talk to you about those reports today.
All right. One quick follow-up on that. Is there a sense right now that the Department of Justice is taking more of an interest right now in those big technology companies, given some of the headlines that we've seen over the course of the last year with regard to artificial intelligence and everything else?
It's a great question, and I appreciate it. So certainly this administration has prioritized restoring competition to markets across the entire U.S. economy, including big tech. As you know, we just finished a trial late last year involving Google Search and Google Search advertising markets, and we filed a case in early 2023 alleging that Google maintained its monopoly illegally in certain digital advertising technologies. So certainly we're active on that beat, but we're active across the entire U.S. economy. And I think Google Search is the most important case about the internet since the advent of the internet. And I think it's really a case about the future, including foundation models and other interesting products and services in the artificial intelligence space.
All right, Doha, let's pivot you back to the news that is of the record, on the record, and at hand here, and that's the airline industry. What exactly was the main thrust behind why the Justice Department really wanted to oppose this? I ask because there's a narrative out there among analysts that Spirit Airlines, if it were to stay economically viable, could help that story that the DOJ is putting forth. But what happens if some of these airlines no longer exist in the future? What exactly does that do to the competitive landscape, especially for airfares and consumer prices?
You know, this case was really about the fact that competition between JetBlue and Spirit is meaningful, and I think that's reflected in the judge's opinion. In addition to that competition, the court amply found evidence that Spirit helps competition across the board and brings airline prices down for the entire industry. And so that means that the existence of Spirit and its effect on the market helps all consumers in the United States, regardless of whether you fly Spirit or not. I'm aware of reports around the continued financial viability of Spirit. And ultimately, I think that's up to Spirit. But I will say that the companies made those arguments in federal court, and ultimately our judge did not find that persuasive. Instead, he found that Spirit is a product that helps families who otherwise wouldn't be able to go on vacation. It helps the college student who wouldn't be able to come home but for Spirit's prices. And ultimately, this victory is about all of them. This is about the American consumer and the ways that they benefit from vibrant and open markets, including in the airline industry.
And so the judge was not persuaded, and the argument was made in the pleadings that the cure might result in the death of the patient, i.e. Spirit Airlines.
Again, I think ultimately that's up to Spirit, but I think rockiness in the airline industry is just a fact of life. Certainly there are exogenous factors and macro trends that all of the airlines are experiencing collectively. And so, in any potential merger, we're always thinking about the facts that are relevant to that merger and applying the law to those facts. And here, the fact was that Spirit was still exerting competitive pressure on JetBlue and other airlines.
I want to bring in our airline expert, Phil LeBeau, for a question or two. Phil?
Doha, my question for you is, what does this say about the proposed merger between or the acquisition of Hawaiian Airlines by Alaska Airlines? Are you reviewing that right now? And when do you expect the DOJ to say, yeah, we're going to fight this, or we got no issue here?
I appreciate the question, but again, I can't confirm or deny the existence of any investigation. And I would say, without talking about any particular company, for every merger that comes before us, we're always thinking about what is the competition at stake in that particular merger, and we do a sober assessment of the facts, and again, apply the law to those facts.
Well, let me ask the question that everybody on Wall Street seems to be asking. When it comes to airlines, we're not talking about other mergers, but when we're talking about airlines, Joe Biden's administration has zero interest in seeing any more consolidation. Is that an accurate statement?
You know, I think that those sweeping statements are more emotional than fact-based, but it is true that the president is a champion of competition and markets and issued an executive order in July 2021 that declared that it was the policy of the Biden administration to vigorously defend competition across all industries. And so, again, we're going to think about the facts and the law in every single merger that comes before us, but thinking about airlines more broadly, there's no question that airline consolidation has been a challenge. We've seen prices go up, and so I would remind everyone that JetBlue itself has complained about consolidation in this industry for a very long time. And as we noted when we announced this merger challenge way back in March, we agree with JetBlue's diagnosis, but ultimately don't agree with its cure. The answer for competition is not consolidation, it's competition.
And Doha, we've talked a little bit about big technology. We've talked a little bit about airlines. I'd like to pivot you one more time, if we could, here to what's happening in healthcare. There's been a lot more conversations these days about the merger and acquisition story within healthcare, biotechnology specifically. Can you take us through what the Department of Justice's stance is on scrutinizing or not scrutinizing healthcare and biotech-related deals?
You know, healthcare is 20% of U.S. GDP. It is critical for open access to healthcare services that the Justice Department continue to police competition in those markets. And I think we've taken note of rampant consolidation in the provider, the payer space, and certainly in certain pharmacological and biotechnology products. And it is imperative for the health of all Americans that we police mergers and also anti-competitive conduct in those markets.
All right. Doha Meki with the Justice Department, thank you so much. And of course, our own Phil LeBeau, thank you both.
Thank you for having me.
You're very welcome. Further ahead, starting this month, real estate buyers in New York City who cloak their purchases with LLCs will have to reveal the true names of their owners, a law designed to crack down on money laundering, but instead it is making some wealthy residents quite nervous. We'll explain after this.
Welcome back to Power Lunch. The solar ETF TAN falling more than 3% today. These stocks often are affected by moves in interest rates, but several of the names in the news business today are in the particular headlines. Pippa Stevens has those details.
Yes, so 3 key movers to watch here. The first is SolarEdge. Barclays downgraded that name to underweight, cut its price target to $50, which is about 28% below where the stock is currently trading. Basically, they said that there is a very, rough road to recovery ahead. And they pit SolarEdge against the competitor Enphase. And Barclays said that SolarEdge is less well off because Enphase has a better mix of product offerings, most especially its battery product. And so they said that going forward, SolarEdge Enphase is in a better position looking ahead. Moving over to SunPower, yesterday that company announced its plan to restructure. Its temporary credit waivers expire at the end of the week, and Morgan Stanley said that they're probably going to have to raise money regardless of what happens with those credit waivers. They've been really in battle. They're based in California, where demand was pulled forward under the prior net energy metering 2.0. Now it's in 3.0, and so they've seen a slowdown in demand there. And then finally, not quite solar, but lithium player Albemarle also announcing that it's cutting costs, it's reducing jobs, and also delaying some spending as they suffer from very low lithium prices, which are down more than 80% in the last year.
What on SunPower there? Weren't they a muscular stock not that long ago, and now they're quite low? We put that chart back up. It was $2 or something like that?
Yeah, so they have suffered a lot because they are so focused in California. And once again, we had that shift in policy from NEM 2.0 to NEM 3.0. And so a lot of that demand was pulled forward into last year. And so looking forward, their sales environment is less certain. Also, they've traditionally specialized in a loan versus lease model. And when you have higher rates, the lease model is much more favorable than the loan model. And so customers were potentially more likely to go to one of their competitors that had potentially a better rate.
A better rate. All right, Pippa, thanks very much. Pippa Stevens. Let's get to Julia Boorstin now for a CNBC News update. Julia.
Hi, Tyler. A New York judge is threatening to throw Donald Trump out of the courtroom in his defamation trial. The warning came after he ignored warnings to stay quiet during writer E. Jean Carroll's testimony. The jury is deciding how much the former president will be ordered to pay Carroll for remarks he made about her after she came forward accusing him of sexual abuse. Chinese researchers reportedly isolated and mapped the virus that causes COVID-19 in December of 2019, at least 2 weeks before Beijing first went public with details of the deadly virus. According to the Wall Street Journal report, the researchers uploaded a nearly complete sequence of the virus on a U.S.-run database at the same time Chinese officials called the outbreak a viral pneumonia of unknown cause. And California Governor Gavin Newsom says he won't sign off on a ban on tackle football for kids 12 and under. A Democratic lawmaker introduced the proposal over safety concerns about concussions. It hasn't passed the state assembly yet, but Governor Newsom said he would veto it if it ends up on his desk because he thinks it's a step too far. Back over to you.
All righty, after the break, Samsung promising a new AI phone powered by Qualcomm, a revelation that could create a major challenge to the chip leader, NVIDIA. Tech Check is next.
Crypto Watch is sponsored by Grayscale. Crypto investing begins with
Welcome back to Power Lunch. Time for today's Tech Check. Samsung holding a phone event today showcasing new models, including what's being called an AI phone. Deirdre Bosa joins us now from San Francisco for today's Tech Check. Is it really an AI phone, or can our existing phones just handle AI? Deirdre?
Maybe we should call it an AI-enabled phone, because a lot of the features, they don't feel particularly new. We've seen them before, especially if you've been playing around with Bard or ChatGPT. But the key difference here is that the process is mostly happening on the phone, through chips on the phone that are powered by Qualcomm's most advanced chips called Snapdragon. And you can do some kind of familiar things like search, language translation, photo editing and processing. There's also message composition and note creation. But this is sort of the next iteration of generative AI that a lot of the folks here in Silicon Valley and tech are looking to this year. AI on the hardware. Right now, it takes place mostly in the cloud through cloud computing, but this is a technology called edge technology that actually takes place through very powerful chips on the smartphone, and Apple is looking into something like this as well.
So would this enable me, you talked about note-taking, which seems really interesting to me. Would I then be able to sit in a college lecture or at a speech and hold my phone open, record the thing, and it's going to take notes and distill the content?
Tyler, you could even have just pick up your phone and get a call from a professor, and the phone would be capable of taking notes and then distilling that phone conversation that you had. So that's sort of where it's going next. But again, you can kind of do this already through different apps, through your desktop, through things like ChatGPT. But the key is this is all going to be integrated on the phone. And that's sort of one of the big questions going forward is, are we going to be going to a separate app or a separate website to do these generative AI tasks, or is it just going to be built into the existing user experience? And Samsung, obviously, which has this massive presence, it's either Samsung or Android IO versus Apple and iOS. There's a huge installed user base, so this could kind of just be integrated seamlessly, and that's what Samsung is showing in its Unpacked event today.
All right, Deirdre, you mentioned Snapdragon. That is very much a Qualcomm product.
Yes.
How much focus is there on Qualcomm becoming the next derivative play or direct play on artificial intelligence chips?
Yeah, well, that's a good question, because Qualcomm hasn't really had its moment to shine quite yet in the artificial intelligence arms race, but this is its chance. So like you said, those Snapdragon chips, they're going to be powering sort of edge AI on these new Samsung phones. So it could be a potential contender. I know before the break you said, could it be the next NVIDIA? NVIDIA is NVIDIA. It's still by far and away the leader, but there could be some room for sort of the AI proposition to broaden.
Sorry guys, I'm here. If anyone's still here, I'm not sure. I haven't heard from anyone. But I'm still here. I'm still here.
A better camera, whatever, you know, a clearer screen. Is this potential?
Apple News just coming out, guys. Apple News just coming out. Unless it's already out and I was just getting something to eat. Let's see here. This is the news with the Apple Watches, but I don't think it's going to do anything.
Do this, and will that sort of create a renewed upgrade cycle? And Morgan Stanley was out with a note recently that believes that, you know, we could see an AI-enabled iPhone this year, and that would greatly help Apple's fundamentals, right? At a time when the smartphone market is saturated, could that cause people to upgrade this year?
Yeah, this could make me want it. You know, that's really the whole art of it there. Deirdre Bosa, thank you.
All right, still to come on the show, the home secret home. Many of New York's elite prefer to keep their real estate purchases and their holdings in the shadows for the most part to protect their privacy. But now the city wants to bring them into the light. That story is coming up next.
in Peacock.
Welcome back to Power Lunch. New York City is beginning to crack down on secret real estate purchases. Robert Frank joins us now to explain what is secret about them and why would you want to keep it secret?
Yeah, Dom, this is a big change. New York's governor is signing a law that would shine more light on secret LLCs that are used in real estate. The new law requires LLCs in New York to report the true state of their owners, their dates of birth, their business address, and all that information. The law state often or tax evasion. An estimated 37% of all the apartments in Manhattan are owned or purchased by LLCs. They will now have to disclose their true owners. Now, the real estate lobby, not surprisingly, they fought hard against this law, saying it jeopardized the safety and the identity of wealthy property owners. The governor granted a major concession to them, so rather than making these names public, they will only be available to law enforcement. Now, the change mirrors a new federal law that took effect on January 1st. That's called the Corporate Transparency Act. It requires every LLC, limited partnership, or other private entity in the U.S. to disclose their true ownership to Treasury. More than 30 million businesses and partnerships will have to file this to Treasury.
Remember what I said earlier? Remember what I said? It's going to be like 2:30, 3 o'clock, 3:15. You're going to be like, oh, damn, the market's rallied. Oh, damn. All right. Oh, damn is right.
How were
Okay.
nefarious owners using?
Not sure if you can hear me or not, but we have already gone from 169 and we're already at 171. That's a lick right there. All right. That's a lick. We need to be buying pullbacks because we're going to the top. All right. They're buying the dip. Don't forget. Don't get it twisted. Ain't nothing changed. We're going right back to where we came from. All we did was needed to test this. And I think I might. Man, I want to so bad. I want to put on something so bad. We got 3 green trades on today. Ah, man. Let's see here. Let's see. I want to go for like a 370. Let's see. No. We just needed to test this level here and we did it. That's it, guys. I'm thinking 374, 375. Let's see what they want for them for tomorrow's. If we get a pullback and we can hold, you know, it feels like it's really weak. The volume did pick itself up right here in the afternoon. Trying to break it down for you to, you know, let's see. Let's find out. Let's look here.
Always interested in on banks, China, crypto. After the
Is
break,
JP Morgan still going down? It looks like it is because it's still at 90-some cents.
That's when we return.
So that's a beautiful freaking trade, man. I was really happy with that one. I'd like to get more out of that if it would give me a fill. I fell asleep. All right, I was tired. I kept fighting it and fighting it and fighting it. You guys seen me nodding out. Not like nodding out, but falling asleep. And I kept fighting it and fighting it and fighting it. And I should have just laid down for like 10, 15 minutes. But got a bite to eat. Let's see here. So here's JP Morgan. I feel like it's just too strong to the downside. So if I get the chance, guys, I promise I will be right back in this name. I mean, come on. Look at this. Look at that. That's 1% in a lunchtime. So I had to take some of it off, if not all of it. All right, I had to take it off because it could have just bounced. I'm hoping I can get the bounce back and get in this cheaper. All right, that's my goal. Nothing's deviated from that plan. I want to see if we can bounce and see if the overall markets can bounce. That would help JP Morgan. But the SPY. All right, let's see where the Qs are. Now, why do I look at the Qs? Because you want to see, like, the Qs and the Dow and the IWM and the SPY, one of them's going to be leading if you're new to the market. One of them's going to lead. All right, which one's leading? And if one isn't leading, you know, it can give you a sense of direction. But what's funny is, like, recently, the past week, since the beginning of the year, Like last week, I have not seen it like this in a long time. They've been tied up. They've literally been like tit for tat, same area. So the one has not like led to the upside or led to the downside. We started to see it a little bit today with the Qs. Like the Qs are red, but they are putting in a new high today or right now. All right, they just put in a high a day. So let's see what we got going on here. I may try for either a QQQ long or I'm going to go for a SPY long. I got so much shit on my desk. Give me 2 minutes. I'll be right back. All right, let me go put this bowl back, and I'll be right back. All right, I'm back. I'm back. I'm back to where I was. Okay. I'm going crazy. This is crazy. What a day. What a day. That's all I can say is what a day. All right, let's search, see what we got. I'll fix the Cameroni. Let's see. Where we at? If AI is the Wild West, then I'm just an actor in a Texas stadium. Wait, Women Have Been Famous. This Women Have Been Famous 3 months. How can you already be on? You're back for more story arc. I don't understand. Alright, the Apple Watch news. Let's see here.
The appeal is ongoing, but this means Apple cannot sell the Apple Watch 9 and Ultra 2 for the time being. Those shares down about 0.75%. Dom?
All right, Mr. Stevens, thank you very much for that time. This seems to be a development here because the U.S. Appeals Court is on.
That's stupid. Just understand the impact on inflation will be huge. Holy shit. This lady is a nut. This lady is a nut. Oh my gosh. She knows it. She knows it. Alright, so funny. You guys thinking? What do you guys think about this gap fill? All right. Did you notice on the cues that was the valuary monthly area? Same for the SPY. So I all right, what's going on here? Why does that look so much different? I think we can do it, guys. I don't know. We're gonna see. This is the area. All right, this is gonna be the area. This is a key area right here. All right, this is like Come on, give us a pop. We got the volume. It's got the volume. I know she does. I know she wants to go. Give it some time. Worst case, right? Let her pull back. See if we can't get a 470.92. All right. See if we can't get that 470.90.
Retail sales report this morning sent yields climbing, and that immediately put pressure on stocks today. The 10-year note yield rising to 4.11. Take a look at it there. It's just below that now, 4.10. Well, growth and tech, obviously the places most impacted by that today. NASDAQ, one of the worst of the majors, led lower by Apple, Tesla, and Microsoft. You see them all there. Look at Tesla, down 2 1/3%. Not much better for Goldman and Caterpillar today. They're among the biggest drags on the Dow. Take a look at both of those stocks. Giving some back, and that's a drag. Takes us to our talk of the tape, whether investor sentiment has just gotten too bullish. Let's ask Josh Brown. He's Ritholtz Wealth Management CEO and a CNBC contributor. He is with me here at Post 9. It's good to see you. Welcome back. You think that's the case? We got all bulled up because of the way we ended 23. We came in here and thought, hey, this could be smooth sailing. And maybe not so much.
Let me answer your question with a question. Yeah. Do you think the market goes up because people get bulled up? Or do people get bulled up because the market went up?
The latter.
Okay, I agree with you. Why wouldn't investors be bulled up? Did you see the way that market ended last year?
Sure.
It literally ended like the 4th of July. It was picnics and watermelon and then fireworks. And I don't know if you were an investor, what more you could have wanted to see. The VIX was just vol smashed almost to zero, and everything went up. Of course, people got bulled up. And that's quite all right. They should. I'd actually think there'd be something wrong if we had an S&P 500 finish the year up 25%, NASDAQ up 50%, and nobody was bullish. That would be problematic.
Yeah, but it's one thing to get all bulled up on July 4th. It's another thing to be all bulled up in March because you're waiting for the fireworks that may not go off yet because they're not supposed to go off yet. It's kind of what Jamie Dimon was talking about today out in Davos. I want you to listen to what he said about this idea.
I always listen to Jamie.
Market goes up and everybody.
I was wondering what was going on with the volume. I'm like, it's turned down. So here we go, guys. I want to see if we can hold 470.92. That's what I'm looking for. I'm not going to pressure this trade. We have 3 green trades in the books today, so it's no big deal. And I'm going to tell you right now, I'm not sure how. Let me look. Come on, let's go. Come on. All right, so let's look at this. All right, 2-minute chart. All right, I do have pre-market on. We're a bit oversold. It doesn't seem like we're going to get it yet. I don't think we're going to get it. We may have to consolidate. Let's go ahead and look at an hourly chart. We're still very low on the hourly. I think we need another little pullback, and then we can get it. All right, another little pullback, and we should be able to get it. That long, at least for like a longer term, right? I want to see us pull it back. Man, we may end up just. This is so crazy. This is crazy. It really is. The only thing I don't like is, are we going to put in a new low to bring that lower time frame down? You know what I'm saying? It's already a bit oversold on the 5-minute, not so much on the hourly. Come on, why is this doing this to me? I don't understand. I don't get it. I don't understand. All right. So, I mean, it's not bad. I guess we could go to oversold. MACD crossover, possibly. But I would much rather feel better with this like at the 38s. It's still kind of low. Let's look. Let me look at the 4 hour. I've already looked at... I don't know. That's a daily. That's not a 4 hour. Yeah, this is... It's happening, guys. Give us another shot at the 469 area. You may have to test 468.93. Doubt it'll give you that. But we got to pull it back. I think we can do it. I think we can. I think we can. All right. And again, I'm talking more so on a longer time frame. Let me see. Let me just make sure. Absolutely. Abso-freaking-lutely. Alright. I'm going to go in. I'm going to take this small, guys. We have 3 green trades on today. 3. Tesla, SPY long in the morning. JP Morgan short at lunchtime. Like, can't really ask for more. Those are up at $1 still, so 60-some cent entry to $1. If you guys aren't taking profits, you know, I don't know what you're doing. But let that go. You know, we have time on that trade. That's not something you have to rush with. But I just want you guys to just hear me tell you, you know, if it's paying you, pay yourself. It's important. So what do we got here? All right, so the S&Ps. So there's the, let me look at the semiconductors. There's the banks, semis. That's another, yep, semis could probably go. Let's look at healthcare. And then we'll pull up Apple. Healthcare looks like it's getting ready to pull itself back. AAPL. It's just sideways. All right, Microsoft. You guys don't need to hear me talk, but I will let you guys know if and when I enter it, and I'll let you guys know why. See, Microsoft's attempting to pull back here. I think you get a little push out of Microsoft, and then it fades. Like a small little like push to like 389. All right, I don't want to get that detailed, but anyway, let's go back to the SPY. I still have a lot of stuff that I was wanting to do. As far as looking stuff, I was getting tired there, folks. I really was. I was getting tired. I'm gonna be patient here. This is funny because this is what it's already 3 o'clock though. I don't know if it's gonna give us anything. It looked really close, like it was going to give us a chance at this gap fill. And you know, we have initial jobless claims tomorrow. So
some of the other data has been a little squirrely. So do you really believe the strong data? What does the Fed really believe? Do they have a risk of overstaying their welcome with policy where it is now and not cutting now because they think the economy is stronger than it actually is? I'm building a conundrum case.
You You've done a good job of building it, and I just can't see my way out of it, Scott. But I'll tell you what I think the Fed is going to do. Let me start by showing you that. I don't know. I'm sorry if I don't have that chart available, but take a look at the fear of the Twin Peaks, Scott. We've talked about this. Let's go back to the 70s. Look at the Twin Peaks. Inflation was high. It fell.
I may wait until tomorrow, guys, to do some. Man, I still.
One peak right now, and the Fed does not want that second peak to happen, so it moves slowly. I think the way out of the conundrum is as follows: a cut in May, assuming the data is there for that rate cut, which is, continued declines in inflation down towards a low level, down towards the 2% target, and then I think Powell pulls the old every.
So what I'm gonna do here is I'm letting the S&Ps pull back, and I'll let you guys know if I go after the long, which, well, like I said, I wanna let it pull itself back. Let's look at the. That's really nice that those JP Morgans are still hanging on, man. They're still up there at a buck, over a buck. So I'll report back to you. Give me about 15 minutes. Oh, shit.
A bit above target, you could have an elevated funds rate for quite some time, but it doesn't have to be this elevated the way it is right now.
All right, that sounds good. The Leisman timeline. That makes sense to me. Steve, thank you. And if Williams does say anything earth-shattering, you know where to find us, and we'll look for you there. That's Steve Leisman, our senior economics correspondent. Do you care how many times the Fed might cut this year? I mean, the market. What's interesting to me is as rates have ticked up and the expectations of March have come down, there has been a flight back to quality. Russell's down like 6% to start the year. It's way worse than the three other areas. Mega caps have found some stability when everybody was talking about broadening, right?
Yeah. I can't think of a single economic sector. There's 11 sector spiders. I can't think of a single one other than property owners, the real estate sector. I can't think of one other area in the economy where anyone is saying what we really need is to start cutting interest rates. Nobody's asking for it. It's not a problem. We don't have massive defaults anywhere. Even in energy, they seem to be acting responsibly. This is just not a situation where if we get 3 rate cuts, it's devastating, but if we get 5, everyone's going to want to buy stocks. That's just not where we are. We just do not have the same level of sensitivity to short-term rates in the S&P 500 earnings quilt that maybe we had in the 70s. Or in the 80s. It's just a different market.
Come on, Josh. This is fucking $7 trillion have been printed. This is going to take some time. This ain't your Obama $800 billion. All right, this is $7 trillion.
Again, this gets back to what I was saying earlier. We thought the consumer would be much more sensitive.
Not that he's wrong, but he's right. But it's not that like surprising. Like, oh my God, I guess things are somewhat okay.
Where their bank accounts are now oozing with yield. People are spending like there's no tomorrow. We're into like the 12th month of this. So it's really hard for me to envision a scenario where all of a sudden rate cuts are like the thing that's great for stocks.
And banks are only okay because they haven't had to take any losses. The Fed's got a backstop going on there that they're getting ready to get rid of.
The two things that matter
Feels
most,
like it's coming in my book.
check.
It just feels like that.
Rising corporate profits, check. If either of those two things are in peril, and they might be, I'll change my mind. That's the current state of affairs. Talk me out of it. Talk me out of it. So
do you want to talk?
Maybe you could.
You want to talk him out of it, or agree?
I'll do my best to talk you out of it. I agree. When it comes to the equity market, soft landing, hard landing, meh. Like we're talking about little bits on the side of zero, right? Everybody expects economic growth to slow, inflation to come down. It's just a matter of degree. So I'm with you there. That's a reasonable story for stocks.
I like her already.
Unless we can't keep up with this almost 12% earnings growth expectation. Earnings growth was flat last year. Like, I don't know how we're going to see economic growth slowing and earnings growth accelerating. But more importantly, what we're seeing right now in the private markets is revenues are starting to come lower, and companies are complaining. They're screaming about how high their cost and specifically cost of capital is. And so while we're in the expecting a mild recession camp, I actually think that's a more optimistic scenario for capital markets than many others could be, because I think you get that really, gnarly profit eater regulated in a way that I think is important for capital.
Okay, I love that you went there. We have not seen any action whatsoever in spreads. When will we see those conditions that you're describing in the private market manifest themselves in the public markets? When do you think that alarm might start going off?
Well, the direct answer to your question is that it starts to go off when we see signs of earnings declining or unemployment claims rising. That's when you expect
no signs in sight.
No signs in sight. I will say, though, high yield credit in the public markets is one of our highest conviction calls. It was last year. It is this year, for the exact reason you're lining up. Unlike other areas of the capital markets, high yield issuers got a pretty big boost from Fed programs during the pandemic.
Yes.
Their capital stack looks really good. We've seen a move up in quality over the past couple, but really over the last 15 years. And so even in the case of a recession, as we see spread widens, I don't think we'll see them rise to any extent like we've seen in recent crises, because we're not going to have a financial crisis. But of course, as economic growth slows, you could see some widening pressure.
Do you think the S&P can withstand recession without crisis? We can do that, right?
Yeah.
Okay.
But that doesn't mean that you have neutral impact on valuations, right?
Sure,
I think
of course.
No, that's the most critical point. I mean, yes, can it? Maybe. I don't know if it's so definitive as yes or no. Maybe, but do you think this market is priced for a recession?
No.
No, of course not.
Certainly not.
And it's certainly not priced for earnings to have. We're not definitely not priced for earnings to go back in the can, right? We're priced for a reacceleration of earnings from this point forward.
All right. So here's the question then: what's the risk to earn? So, okay, 12% might not be attainable. We've actually seen years where we start out with very high expectations. Expectations start to ratchet lower. Stocks struggle in the spring. And then actually the expectations got too low, and then we start exceeding again. The bears hate that. It happens all the time. Isn't that a possible scenario here? And do you think things like AI, is that the reason why we could do 10% earnings growth, 12%, even as unlikely as it seems now?
Yeah, but isn't that a bit what we saw last year? It's
Yes.
when I look at the profits environment for companies, the way that Fed rate hikes work is that they impact housing and then manufacturing and services, and only then do they really start to impact profits, right?
Sure.
So that we haven't had a real sticky problem yet isn't surprising, but these things tend to compound on themselves. So if I saw some of those leading economic indicators start to perk back up, so I saw bank lending standards loosen, I saw PMIs start to move above 50, then I would get off of the horse I've been on for 2 years saying, I still think this thing's gonna slow, and say, they
Appreciate
did it.
that,
They figured
buddy.
it out. But
Dude, it was actually,
the needle.
yeah,
But
it's at
we
$1 now.
haven't seen
I'm
those
out of
leading
it.
economic
Hold on.
indicators
Let
tilt
me
yet. And
erase
so the way
this.
the economic dominoes typically fall,
my
I
camera's
expect,
going.
is
I'm
still to
just
come.
going nuts.
Do we think that,
Everything's
Josh,
going
the
crazy.
the broadening move of the market from
let's see
the end of
here.
October to the end of the year was
Where am I at? Here we
anything
are.
more than just a positioning
news
race till the end of the year to just try and get something out of what was nothing? Was it
Look at the
actually
VIX
built on
running up
some
in front of these
substantive
earnings, guys.
thing that had a lot of
So
people
keep an eye on
view
that. I wonder
viewing
if
the market
there,
this year as
if
that
this
was the
is
start
really
of this
just.
broadening.
You guys
Now
know
we're
what it
getting
is, but
Yeah, unfortunately, I don't think it was built on anything substantive.
kind of
I think
wondering
it was as simple as
if
we had record bearish positioning. I don't care how you want to slice it. You wanna look
I'm
at
kind of
institutional
curious if they
investor
are.
surveys. You want to look at how much money went into money market funds. You want to look at strategists, the way that Savita
What was I
does,
gonna say?
and quantify that in any.
So the VIX is getting a little bit of run up, so you're seeing a little bit of protection going into earnings. All right, you're seeing a little bit of this rise in the VIX going into these earnings, which is next week. All right, I gotta find OPS, fix the camera, bada bing, bada boom. All right, I was actually just sitting here thinking whether or not to try and wait for a pullback on the VIX, or put in a limit order for maybe the end of February, like the end of February, beginning of March, because we'll be out of earnings then. And if it's not earnings and this you know, if they don't come to that agreement or whatever by the weekend, I thought they got it all over with $1 trillion. I heard something like that, and I guess $1 trillion isn't enough to solve the issues anymore. I just keeping my eye on this because I'm seeing, you know, the VIX is creeping up in front of these earnings, which it's, you know, it's a hedge, right? It's just a hedge. It doesn't really mean that something's going to happen or not going to happen. You know, people are positioned, they're long, they've got to manage that risk. You know, so it doesn't mean anything, and I don't want you guys to think that I'm like saying like, oh, look at the VIX, it's telling us something. Like, no. All right, what it is telling you is that you have individuals that are long holding assets, and they are going to hedge those assets coming into when the big boys start to report, in case there is a not necessarily a surprise, but you know, it doesn't go so well, right? So keep an eye on the VIX, okay? Keep an eye on the VIX. She's climbing. I just wanted to bring that up because it's, you know, just you're seeing what institutions are doing, or what the bigger players are doing, right? They're going to hedge their longs. They're long, they need a hedge, they buy the VIX. You're coming into the heart of earnings in case something happens. All right? Not to say that it will. But that's definitely higher lows, higher highs and higher lows. It's a nice wedge there. That is a nice wedge, but again, I'm pretty sure I know why the VIX is doing this. You know, it's not really for any particular reason other than what I just said. But yeah, JP Morgan, sorry. JP Morgan, man, that it gave it all to us at lunchtime. We couldn't have got that entry any better. We could have actually, but we literally took it on this break, and look, guys, it's just falling out of bed. So that was a really nice trade. It's been a great day. It's been a really great day. Right? We've been fighting for one of these. Not really fighting for one of these, but after me just being stupid and messing up the Boeing trade, it kind of followed me last week, and you know, we already talked about that. So, but it's been a great start to the year. It's been a great start to the year. Just keep it simple. Keep things simple.
Core funds from operations guidance was slightly below consensus, though shares down about 3%. And be sure to catch an exclusive interview with the chairman and CEO of Prologis coming up on Overtime. Scott?
All right, Pippa, appreciate that. Thank you. We're just getting started here. Up next, the case for caution. Morgan Stanley's Chris Toomey is back with his investment playbook for this new year.
Where are we going? That's the question.
Your money, the whole thing, because he's here at Post 9 just after
That's the question. Where are we going?
Coming right back.
I'm wondering if we come in with like a gap down, and then that gap down, you see, you know, a rally in before the bell, and it even goes down even further tomorrow. I'm actually curious to see if that happens. Because look at this RSI on the hourly, 4-hour, daily, you know, just going through all the time frames, you know, 5-minute, it's still a little bit overbought on the 5-minute. It feels like we need a bounce back. Like, it feels like we could put in a double bottom down here, and then maybe you try to turn it around. I'm not sure. Right? The volume is very low. Volume's very low. So I am very curious to see if we can get back up there. Let's take a look at futures real quick, guys. Let's have a look at futures, and let's see if we can't come up with a game plan here. And we'll go between the Qs and the Nasdaq, or the Nasdaq and SPY. I gotta turn my computer off and turn it back on. She's hurting. Holy cow. All right, so it's easy to say that the Dow or IWM is leading to the downside, possibly. They're still about even. That's so weird, guys. Let's see, pop, and it's going higher now. See if the SPY can get through there, because I noticed that the IWM just tried to bounce. I just want the long. And I think because I want the long, we need to start shorting. I'm actually not going to do anything unless I see something, because we're already just... We're doing really well. Verizon is... Sorry, I didn't see that. I did not see that. That's a good trade too, man. That's a really good trade. That's 60 cents, if a dollar, damn near, on Verizon. That's a good trade. What do we got here? Chris Toomey. Here, I'll put this on and we'll scan the markets.
All right, welcome back. We're under pressure today. The major averages are after a strong retail sales report sent yields up, and that questioned the market's rate cut expectations. Our next guest says stocks could see more short-term downside ahead. Morgan Stanley's Chris Toomey runs one of the highest-rated private wealth advisory teams in the country. Joins me now here at Post 9. Welcome back.
Thanks for having me.
You still don't like the market?
Look at that, guys. We missed that.
I'm
Shit.
still cautious around the market.
Why, Toomey? What's going
I know
on
I want to be a bull, but I have to
Well,
look
what
at...
prevents you from being one? I mean, a lot of people have turned.
Well, I mean, look, a lot of the things that we thought was going to happen last year happened, right? They were predicting a lot of good things happen, right? So inflation came down. We didn't go through an economic recession. We had an earnings recession. But if you look at earnings were actually negative for last year, right? So 219, 2022, you know, markets pronounced 219, we're expecting 215. We're right in the middle of this. You know, financials, you know, big expectations, not a really great response. So earnings weren't great. We didn't get the rate cuts that we were expecting. You look at the market.
You weren't expecting rate cuts last year.
Oh, we were totally expecting rate cuts last year, and then we got 2 rate hikes. That's my point. You know, when we were talking last year, I said if we get rate cuts, it's probably because there's something wrong with the economy. We go into a recession, or we've got a problem with all of this debt outstanding that's going to have to be refinanced. Now, we were able to thread the needle by having the economy continue to do reasonably well, but earnings were actually negative last year,
Sure,
right?
but interest rates have come down so much from the peak. Inflation's come down a ton since the peak. Fed seems to be done with the hiking. You've gone through the earnings recession. You know how the markets are. You've done this as long as anybody.
Right.
Look ahead.
No, and when we are looking ahead, right, we're in a situation, right, where valuations, while not necessarily a good predictor of market returns in the short term, in the long term are actually pretty good, and valuations don't look very good. Earnings expectations, 10, 12%, we think that's probably high because we think margins are really probably going to have to start contracting. Liquidity, right, which was the great equalizer last year, which was caused by the regional banking crisis and all of the activity that we put in to stabilize that, all of that stuff starts rolling off in March, right? So you're in a situation where earnings aren't looking great, valuations aren't great, and liquidity is being pulled out of the system. So I think caution is probably the right word.
Until when?
I think until you start to see a revaluation with regards to the market, I think you're right. The fact that the Fed is not talking about raising rates is a good thing, but the fact that the market's pricing 6 rate cuts.
It does feel like the market's trying to turn itself around here and not pile drive into the ground so much. Here is Tesla with the bounce, guys. We sniffed that out early, right? We sniffed this out early, but it didn't first come with. It didn't first come without this, guys. Damn, this could be a nice trade. Hold up, I might get long. Hold on, guys.
Zero interest rate policies for about 10 years. So you're right, rates have gone from 5% down closer to 4%, but we're in a situation where you've got a number of businesses that have been underwritten at a zero risk-free rate, right, that are now refinancing debt. So we talked about this last year, up to 2025, $5 trillion worth of debt has to be refinanced, right? $120 billion, particularly in commercial real estate this year alone, right? One of the things that drove the markets down going into October was, right, the 10-year shooting up with concern about the amount of effect that all of this debt issuance is going to have on the U.S. deficit, right? So that's not going away, right? And so the concern I have in the debt market is specifically around the fact that you could see a crowding out effect when all this treasury reissuance and all of these refinancings start coming into the market, pushing yields even higher, because we really see that as the thing that's driving the market. I mean, Josh hit on that as well with regards to volatility correlating with regards to the 10-year. I think the good thing that we could see is if we do see stabilization within rates, you've got a lot of dry powder sitting out on the sidelines.
Yeah.
You could start seeing some M&A activity.
Aren't we already seeing the so-called green shoots of that? Right? I mean, rates have stabilized. They definitely have stabilized.
Well, they were stabilized, but now they're starting to shoot up again, right? Because of the concern with regards to everyone expecting this rate cut in March that is now not necessarily looking as rosy. And to your point, I think if you look at fourth quarter, so much of that performance was chasing, right?
Oh,
chasing
for sure.
and chasing and chasing, and now people are like,
That's not something we want to do here is chase, but
if rates are
Tesla, TSLA. Okay, so it rallied to 215. I was kind of just curious on what, this is a really nice pennant. And then it puts in, right, if you guys can see this, come on. I know you guys can. And then you get this failed breakdown like we got earlier in the morning. We were smelling the long all day, just through the volume, and signs were pointing in that direction. Well, I did have this one volume bar right there that did make me kind of curious and made me wonder just a bit. Right there at 10:30, and that was our exit. No, we got short right here. That was our short. Doesn't seem like much, but it paid very well. I was happy with that trade, and it was only a few bucks.
So you're telling me you don't like anything in the equity market?
No, we do like equities. We do have positions in equities. I think it's going to
So
be
do I
bifurcating
take
market. So
this?
to your point, I think you've seen this rally in quality very aggressive.
I don't know what to do with this mess. I thought we had a pattern here. I thought we had, because you'll see it, usually you'll see it in bull markets. You'll see these patterns that take all day, like the SPY. They'll take all day, and then 3:15, 3:30, you get this rip going into the close. And I kind of thought that that's what we had here. But I may be mistaken. We'll see. Let's see if we can figure something out. I mean, look at this pennant. You break down, and then you put in another bull flag right here.
We'll make a deal right here. When you turn bullish,
Something like this.
That's why you're one of the highest rated in what
Let's
you
see
do.
here.
Good answer.
Let me get rid of that.
Answered it right. We'll see you soon. Thank you. All right. Up next, the Mag 7's Show Me Moment. Star VC investor Rick
Undo.
Heisman is back. We'll find out where he sees the tech trade heading and the names he is
All
betting on
right,
just after
and
the break.
then
Closing
from
bell. We'll be right back.
here to here. All right. right, and then we'll go to here. And look at that. Isn't that funny? That's a move to move. All right, that's a move to move. So that's about it. Tesla's may not do really much of anything today. I do still want to look for, if we get it, 216 to 220 for the short. All right, I think in order for Tesla to go lower, I feel like it needs to go a little bit higher to go shorter. It's just my opinion. All right, let's see here. She's sitting on a gold mine. Wouldn't that be something if this came down and connected here, all right, and then worked its way all the way up so that the whole thing was pointing in that direction to the moon? I'm just kidding. It's kind of it, guys. I don't really have much more today. We'll see how we close. If you guys have any questions or anything, you just holler at your boy. Look what happens, say Spirit Airlines. Yeah, we were on that yesterday. Did something change today? It's back down to 08 levels. Yeah, we were on this yesterday. This was right after I got off the stream. But we were talking about this. I almost went long it. Change? You said change? Can you spare some change? South Park, you know. It's my stuff. I hate that OBS has to come up. Like, I can't move the comment or click in the comment section. You know what? I could hide it. I could always hide it. It's true. That's what I used to do. Shit. Yeah, let's see. Let's see what happened to it. Yeah. Yep.
Welcome back to Magnificent Seven.
That's so insane.
Start the year after that massive rally last year. Investors now looking ahead to those key earnings reports and who is really delivering value, growth, and returns. With me now to discuss, Rick Heitzman of First Park Capital. Welcome back.
Thanks, Scott.
Good to have you back. That's what it's going to come down to, right?
So I've got to go get some cat food after the market closes. All right, there's the bounce. And look, she already is oversold. All right, this is exactly what I was thinking. That was like one or two of these scenarios. I'm like, how is the market going to like bounce with the way that the indicators are set up? Because it didn't really make any sense. It was like we were going to have to be able to sell off just a little bit, and it pull back. Like, just looking at the indicators, you'll see it from time to time where it's like, okay, which direction is going to be the one that moves it, right? Now look, we just went from here to here, and look, the RSI went all the way damn near to 65 from 40. All right, but took all damn, you know, it took, you know, I don't know. So
there's at least been some divergence between the performance, right? Apple seems to be under a little more scrutiny this year.
So the upside is definitely not the way I would be trading. I don't know though. Like after this pullback, you would have to see. I feel like it's trying to shift itself and go higher. Gonna have to wait until tomorrow. I'm pretty much done for the day. It's 3:40. We got 20 minutes. Awesome job today, guys. 3 green trades today. Very happy. I was so busy, I had to take a nap. It rarely happens. Not really. I always feel like I have to take a nap. after sitting here. I gotta start doing exercises. Like I gotta start doing push-ups and stuff and get up and move my ass. But
are parts of the market, seeing a lot of growth from Azure, they might seem to have greater earnings.
sorry, I didn't mean
So
to.
I would imagine in the lens
Tesla's
that you
going
look
now.
at the tech world,
Yeah, I still
from,
don't think she's gonna
private market valuations
give us
have a
that much,
massive
though.
correction.
Yes.
And
Yeah, but I
public
think
market
she's got to pull
valuations in
back.
tech
I think she's
really
got a
didn't.
little bit of a
They
sell-off in
expanded.
her
Correct.
So
before the
because
close.
private
Like this
markets went
double
through the
top
pain
here, and then
first,
we see
what happens now.
if we
They
test,
lagged the pain, then went through a lot more
like
pain.
this level
So
here,
they-
like
they haven't
214.50,
rebounded the way the public markets did last year.
213.50-ish.
But everybody kind of
somewhere
had an
down
ugly
here.
22. And then we didn't
That's
see
just
the
my
bounce in
opinion. That's what
23
I
in the private
think.
markets. And what you're going
I
to see
feel
in
like
the
we need
private
to pull it
markets,
back
largely
just a bit.
because there's no shorting, there's no trading in and out. You're really going to see who's delivering value for their customers,
having to click
who's really able to
between
drive
each
growth from both a top line and bottom line
thing.
perspective, and which are really the great companies that are taking advantage of everything from AI to cloud infrastructure.
So
Are you being
JP
more
Morgan is
discerning in
still
what you look at
nice
and
and
what kind
green.
of willingness you have to invest?
You
got
got
to
to understand when you're going into the day that you come in, you're going into,
over the let's say 3 years
you
ago.
know, a
I'd say
12-hour
3 years ago, scrutiny
session,
might not have been as rigid. The market was moving so
and
fast.
if,
Obviously, like everyone else,
especially if you grabbed weeklies. Now we're in the following week, so we got time. We got a little bit of time. Not enough, but it's a little bit better than this week. Anyway, if you have not taken profits, I'm not sure what you're waiting for. At least take a piece off and put it in your pocket. Just go ahead, put it in your pocket, just a little piece. And we'll look for more downside tomorrow. I will come out with the watch list as soon as I get back. I get back from the pet store. I'll put out the watch list. I will put some other things in there. I don't know. It'll be cool, I guess. So, I didn't check out energy like I wanted to. Let's have a look. See what? So Oxy, the market was pretty much flat today, and I'm surprised we got as many things. You know, on a day like today, and to sit here and say we had 1, 2, 3, almost 4 trades. Never took the SPY trade at the end of the day. All right, it's pretty crazy. On a day like today, that you think it's flat and there's nothing to be made, like there's no opportunity. Oh, there's opportunity. Right? This is a great time to be in the market. It really is. What's old Goog doing? Every time I write Goog, I think Goo from Billy Madison. Goo. Oh my gosh.
When now investors are going to be much more have much more scrutiny over profitability. It's not just going to be great idea. We're going to bet 20 years from now you're going to be profitable, so we're going to give you a massive multiple, and we're all in. It's not going to be that way anymore.
So most of those people came out. I mean, those people in the public markets.
Let's watch. Let's look at semiconductors and
So now you're
such.
looking at people who've been able to
See what type of day they've had.
Hey, I was able to get money in maybe 19, 20, and 21, where growth was the key metric, and I was able to drive growth and market leadership. And then as the goalposts changed, I was able to quickly pivot my business.
Look at that. That's a nice break retest. You might get a gap down on NVIDIA, possibly.
Those are the best CEOs who are able to say, hey, I know both tricks. I'm able to run an efficient business.
Or a lower high there. That's a
top line and
it's a nice setup there.
And that's why I have a market-leading company with important tailwinds, and that's why I'll continue to be important.
Got to spend a little bit differently. Obviously,
But it's strong. Don't be stupid. It's strong.
Recruiting and taking employees and telling them what's going on.
You want to be short something that's weak. Here's Meta. Yeah, I need Meta higher.
Two automaker names are stuck in neutral after Wall Street downgrades. We've got the details coming up next.
Oh, sheet.
Will you enjoy retirement like these folks? As we remind our clients, you get what you plan for. You may have a retirement plan in place, but are you sure?
It kind of stinks to have a 3 to 4 day vacation and then come into a slow week. You know, it is what it is. It's okay, but it's just like, damn. Market makes you, you know, cool off for a week, and that's okay. All right, yeah, you're right, man. Tesla, here she goes. She is going. That's for sure.
Fisher has answers. And our fees are structured so we do better when you do better.
Call now for your free Fisher Ready, Set, Retire Kit. 1-800-831-0650.
And it's doing it at the same level it did it last time.
If your portfolio is 500,000 or
It's doing it at the same level it did it last time.
First time you take a step back.
I made that.
With your very own
It just doesn't have any volume.
and you can manage it all in one place.
I built this.
And it was easy with a partner that puts you first. GoDaddy.
How do you land your dream job? It starts by acing the interview. Learn exactly what hiring managers are looking for with CNBC Make It's new career boosting online course. Get the limited time offer. Register now at cnbcmakeit.com/courses.
Patients frequently.
By Bose today.
We are fast approaching the closing bell. Let's get back to Pippa Stevens now for a look at the key stocks she's watching. Hi, Pippa.
Hey, Scott. Rivian shares are lower as Deutsche Bank cuts the stock to a hold. The firm saying there could be downside risk to Rivian's 2024 volume and gross margin expectations, as well as questions around the company's R2 model, including timing of capital needs, production ramp, and profitability. And staying in the auto space, Ford in the red following a downgrade to neutral at UBS. The firm said the stock is fairly valued and it sees more limited upside to estimates for this year and next. Scott?
Pippa, appreciate it very much. Pippa Stevens. Still ahead, shares of Disney are dropping today, down near 3%. There's the stock right there. We're going to tell you what's weighing on it and what could be at stake for that company coming up. Closing bell right back.
Yeah, it is nice and tight, especially on a day like today. There's probably a lot of people interested in it being a Wednesday. With, you know, a lot of the names that we were playing, like JP Morgan, it had a 1 cent spread. It was a really nice tight spread. 93.95, 94.95 right now. 95.97. So yeah, I like that as well. Oh shit, man. I just feel like I'm getting tired again. I think that's about it for me. I'll sit here till the market closes, but we got 10 minutes anyway, so that's good. Go through some of the scanner. I gotta write down some of this news and stuff that came out. I hope you guys have a wonderful rest of your evening. Alright? Make sure today does not go by unwasted. If you have not or will not later on tonight, tomorrow, the weekend, sometime, whenever, go back over your trades. And if you had a down day, a winning day, and you're not going to go back over and see some of the things you did right, some of the things you did wrong, some of the things you think you could work on, don't let the day go by wasted, guys.
PGA Golf Tournament, PGA Tour Golf Tournament.
Time is something we have very little of, and tomorrow is not promised. So let's make the most, like seriously make the most of today, right? If you go to bed tonight and you were told, listen, you're not going to wake up, so you better do whatever it is that you want to do. Go ahead, get it done, and peace be with you. It's hard sometimes, I get it, you know. I've been tired today. I don't know why. I've just been really tired. I'm really fortunate we were able to get these trades off, right? Not think about them, not make them complicated, just say, hey, you know, and more importantly, it's putting ourselves in the right part of the market, because we could have easily been somewhere else and missed these trades and came back and they made half of the move and we're like, shit, I forgot about it. So I'm really happy to be back in the driver's seat today. I was patient yesterday. I was patient. I'm pretty sure it might have been JP Morgan yesterday as well that I missed, that I forgot about. No, because it was on its way up to the upside, and I was purposefully letting it get up to this area. So, I don't know. I don't know what trade it was. There was a trade that I missed yesterday because I felt like it was taken from us. We looked at Microsoft yesterday. We were watching Tesla. I don't know. It doesn't matter. Today's Wednesday. Yesterday was Tuesday. We're about to be on Thursday, so it doesn't matter. Appreciate you guys. If you guys haven't done so, hit that like button, subscribe, send this video, share this video to someone you think that might be interested, somebody that would like to learn how to learn this skill. All right, you want to share it to a random person, that's fine too. It would help the channel. Appreciate all of y'all. If you guys ever need anything, you guys know how to get a hold of me. With that said, you guys have a great night. I'm going to stay here until the bell rings, but I will see y'all tonight and then we'll take it from there. I'm going to have the watch list out in a few hours. I'm going to go to the pet store, and then we'll have the watch list out, y'all. Let's get it. Great day. Great day, guys. Great day. I'm happy to get a few winners under our belt and really start applying the pressure. Fucking Spy, what a whole asshole. I should have taken this on. What did I say? God damn it. I came down here and said, yeah, I want to see if the Spy's going to get down here at 471, 470, 60. And look, bang. Just last 10 minutes, 20 minutes, just rippy dip. It's all good. It's all good.
Here to break down the crucial moments of this trading day. Plus Julia Boorstin on the fight for Disney board seats.
That's
and
funny.
Kate Rooney looking
Can't
ahead
help
to
but
Discover
laugh.
Financial. Those results are out in overtime. Mike, your thoughts on this day?
Things stayed within the rails. You know, it could have been worse, I think, given that we've had a really weak underlying tone to the market, definitely in pullback mode for a while. You know, we'll see if this is a real lasting show of resilience above 4,700 in the S&P or not.
Tomorrow, guys, Taiwan Semiconductors, okay, TSM, they didn't report today, this morning. No. Tomorrow morning, we're going to get our first look into semiconductors. So we'll see how TSM does, see how they report, kind of get a heads up on NVIDIA, AMD, right? They've made these big runs. What happens if TSM says, yeah, we're not too sure what's going to happen with us? Like, things are getting slow, this and that. And then do we see NVIDIA and AMD start to pull back, even though it's not pertaining to them? But does that take risk off just in case they report and say, yeah, we're also having a bad time? There's not as many cars being made. There's not as many computers being sold. There's not as much cloud, healthcare, all this fun stuff. People are starting to work out, so people aren't dying. People are eating right, so they're not getting diabetes, and therefore they're not going to the hospitals. I'm just joking. I'm tired. You guys know I'm doing. So, let's see. You know, because this could give us just an initial move. It could give us a trade. We'll see. I'm not saying it will give us a trade. The very least, we can just trade TSM. TSMC, Taiwan Semiconductors. What do they say about the new person that's in charge? The new president in the China conflict. So, we got a couple cool things on deck. Appreciate you guys. You guys have a great night. I'll see you guys on the watch list. Hit that like button, subscribe. See you guys.
Those results are coming out in OT. What do we expect?
Hey, Scott, so for Discover, watch credit card delinquencies. Back at the end of November, delinquencies had climbed to 1.54%. That was up from 1.47% at the end of October. Charge-off rates also climbed at the end of last year. Investors are looking to see if there's been a peak in credit losses. Also watching for some commentary around the possible reinstatement of regular share buybacks and the sale of its student loan portfolio. And then there's compliance-related costs. Discover's CEO left abruptly in August amid compliance issues, namely an SEC investigation around misclassifying certain card charges. Discover has said that could result in enforcement actions or monetary penalties. There may also be some commentary around that leadership shakeup that's expected earlier this month. Discover appointed Michael Rhodes as the new CEO and president. That is effective on or before March 6th. Scott, back to you.
All right, Kate, we'll see what happens. Kate Rooney, again, Discover Financial and OT, so make sure to stay tuned to that. You heard the sound effects, so we're about a minute left here. Look, Dow's come off its lows of the day. I mean, the market, to your point, is just kind of just hanging in there in the face of a lot.
I mean, and the question is whether it's kind of forestalling, you know, something
Oh,
that
that
would need,
hurt.
which
That
is
was
to pull
loud.
that
Have a great
slingshot
night,
back
guys.
a little
I'll
bit
see you
more. I know
guys
that
in
even
about
the
2
NASDAQ, You're starting
hours.
to see some things look short-term oversold,
Peace.
believe it or not, even though the big stocks have held up better. You still do have 85% of all volume to the downside of the New York Stock Exchange. So there is some determined selling. I mentioned the monthly VIX futures expiration is today. Last month, December 20th, it was that 1.5% drop day that came out of nowhere in the midst of a very strong period. So you do have some static you have to deal with in this market. But yeah, so far, it's not really causing a whole lot of pain. It's not looking like a trend change just yet, even though you got, plenty of people profit taking for 3 weeks straight.
The market's trying to decide if, economic good news is good news, good news is
and how
bad
good it
news.
was, because maybe retail sales were flattered by seasonal adjustments.
Yeah, exactly. All right, Mike, thank you. We'll see Mike tomorrow. I'll have you as well, too. There's the bell. We'll go out red off the lows, though, and that's the important thing. I'll send it an OT now.